this public review of our annual budget. We'll note that Councilmember Smith and Councilmember Preston have yet to arrive but are en route, and Councilwoman Cummings will not be attending today because we changed the date of the work of this work session. She had planned to be out of town, out of state actually, and will not be able to join us today. So, Mr. Hune, we'll go ahead and start. Ms. Reese, do you have opening comments?
Mayor, I'm not sure.
Your microphone's not on.
I did want to make sure that you check to see if we have public comment.
Oh, there is no public comment.
Okay. So while Mr. Hune is getting set up, I will do a quick introduction. Thank you, Mayor and Council, for giving us your day today to go over the proposed fiscal year 22-23 budget. We have a lot of information to share, and as always, Finance Director Andrew Hune has a pretty thorough presentation to start us off. And then following that, we will go through the agenda by departments and provide an opportunity for you to ask questions, and certainly for members of the leadership team to share what is happening in their departments. So I look forward to a very productive day and lots of good budget discussion. So Mr. Hune, take us away.
Thank you. Yes, welcome. It's obviously our pleasure to provide this information to council every year. What you're going to see this year is a very consistent and comparable presentation. The information has changed dramatically, but I think I kept the slides in terms of color and style the same from last year, so there's even more consistency. We're going to go through general fund in a fairly amount of detail. Of course, the goal is to distill for the council what we think are some of the most meaningful areas of the budget, to give you a sense of where we stand financially for the current year and the out years across a variety of operations and capital funds. We'll look at debt. We'll, of course, cover water and sewer, and then we'll move into a kind of review of our department finance strategies and then department reviews. So very typical from previous fiscal years. So in terms of where we're at for the current fiscal year, 2021 that we're in right now, and 22-23 in terms of general fund, they're both in a balanced position. As you can see from this slide, for the current year, we're expecting a small surplus of $102,000. That's pretty tight budgeting, and obviously $100,000 of the $76 million budget is fairly fractional, but we are in a balanced budget. And then we're projecting just a little bit of a surplus in 2023. And part of this is we want to be in a surplus position when we do the budget. That's when we feel we're balanced. But our goal is certainly to take, as revenue comes in, to provide all the services we can for that funds and maintain a reserve level, as which you're really aware of. And we'll cover that in a few more slides. Fund balance for general fund. This, of course, is the slide you see in the past, and it is essentially showing, the blue bar shows the ending fund balance in each fiscal year, our estimate for 21-22, our current fiscal year, and then the proposed budget for the next 5 years. The green line is what we characterize as our target. So you can see from this disclosure, the proposed budget is showing that we are above or right at our target of 15%. And this is really, as the council knows, this is a guiding principle for the town in terms of our reserve level. We have reserves for several operating funds. And as we go through this budget process, that is probably one of the key areas we maintain. We want to budget things in a good priority, with a sense of good allocation and efficiency, and we want to do that with staying within certain parameters. And this is a very significant parameter we always stay in. And I'll cover more of the reserve levels for their funds shortly. So looking at revenue for general fund, this slide just kind of shares with the council and folks that are interested the overall revenue mix of the town. You can see that sales tax, state shared sales tax, and local sales tax is the lion's share of the revenue the town collects to fund its operations and general fund. Property tax, of course, is next, charges for service, income tax, and so forth. And I'll go through a lot of these specifically in a few moments. So overall, looking at total general fund revenue, and again, this is a slide you should be familiar with in the past, The blue line represents the adopted budget we're in now for the 5 years. The red line is what we're presenting for this proposed budget. So you can see that's a significant uptick. So we've actually raised revenue projections significantly from last fiscal year. Right now, we're about $5.1 million higher than the previous time this fiscal year projections, which is a really good thing. Kind of what's going on with that, what's causing that essential elevation in revenue for the entire 5-year budget? Well, there's really several factors at play here, and they all have certain impacts on that. The first is, if you think back last year at this time, we were budgeting for 21-22 during what we considered was the height of uncertainty with the pandemic. So staff brought to council and council approved what I would characterize as probably one of the most conservative budgets we've ever had in my tenure. So the blue line there represents a significant conservative approach to the uncertainty of COVID and the economic impact. So now we're kind of, for the most part, post-COVID economic perspectives, and we ended 2021 a little better than we expected. Things came back much faster than the budget originally proposed, the blue line. And then a couple of things happened. Internet sales tax is now a thing. For a long time, the municipalities and states were not getting sales tax from purchases online. That hit in January 1st. I'll cover a little later, a little more. And then just significant economic growth. So we're really in a much better position than we thought we'd be this time last year, and the budget reflects that. Obviously, you can see some of the main drivers of our revenue sources that are pushing up our dialing up our revenue is local sales tax, $2.6 million over what we thought last year at this time, 1.6 for state shared sales tax, income tax, significant increase, and then some other minor ones too. That continues on for all the 5 years. So this has given us quite a bit of financial flexibility to address a lot of needs that we typically were not able to address in the past, and I'll get into that with the expenditure side. Looking at the individual items, sales tax, again, what was the impact there? You can see about $4.2 million in combined impact. Again, we're able to take up our revenue projections for sales tax up significantly to address a lot of that budget increase. And again, just a quick point on this. This is where we really felt a lot of the hit from the internet sales tax. This was kind of leveling the playing field. It was the legislation that was passed. It was effective January of 21. So we're seeing quite an uptick in revenue, one based on conservative growth estimates from previous year, economic development that's occurred within the town, but primarily the internet sales tax is coming that we're collecting now. And it's kind of funny that I've been waiting decades for this to occur, and it's occurred, and the fanfare wasn't quite as exciting as I thought it was going to be, but we certainly are seeing a nice revenue flow. Property tax, kind of our next biggest revenue source in terms of general fund. This is a slide we spent a lot of time on in terms of some reminders for the council. The red line there shows our proposed budget. The blue obviously is the adopted budget. We actually had planned for a sizable increase in the levy at this time last year for this fiscal year's levy. When we got to that point, it became pretty obvious that we really couldn't necessarily pass on that much of a burden in terms of property tax, trying to keep that as relatively low as possible. So we had just a small increase in property tax. You can see from the top portion there, the 2020 levy for fiscal year 21, I should say 21-22, sorry about that, with $9.1 million. We brought it up a little bit this last levy in December you passed to $9.4 million. Again, we were expecting during the budget planning process for the blue line, the adopted budget we're now to increase that much more due to what we're seeing in property and pension funding. We did not do that. How we kind of addressed that issue, again, was we cut the levy, or we cut the revenue from the levy that pays for our IMF contribution by almost $1 million. And we also eliminated all the levy we used typically in the past for general fund resources. So that kept the levy fairly stable year to year. And what essentially happens, those expenses don't go away. We still need to make a contribution to IMRF and to general fund operations. We just absorb that in general fund revenue besides property tax. And of course, you can still see an upward growth in that line. We'll address this every single year as we go forward with levy. This is our estimate going forward, and that's essentially a function of upward pressure on pension funding for public safety. The next most significant meaningful line is going to be charges for services. This is primarily kind of through, there's multiple lines in this, probably about 15 different revenue lines in this particular category for charges for services. The most significant are the ones listed above there. $4.3 million for refuse collection, that's the garbage fee. $1.9 million for ambulance fees, and then of course about a little over $500,000 or $629,000 for ISU rescue service fire contract. Not a big increase, although the slide appears to be significant. Only about $112,000 increase in that budget. That budget stays pretty stable because we can predict pretty well the revenue from the refuse collection and the ambulance fees in the contract. Ambulance, most of that 112 increase year over year is this increase in ambulance fees, and that's in large part a function of increase in runs for the activity. Income tax, this one was also, again, a bright spot, if you will, from the previous year's projections. When we were in the height of the pandemic uncertainty, we dialed back everything. And as you're well aware, not to recount what we did, and we cut expenses and transfers significantly. We dialed back income tax, and frankly, income tax never actually slowed down at all. We saw a significant increase year over year, and that continues to grow. So we've essentially loosened up our conservative view on that. Now we still are fairly conservative. We brought that up quite a bit, $1.2 million. Again, that provides a lot of flexibility to the town to address a lot of different things that I'll get into later. But we have picked up that revenue source in terms of our perspective from last year's 5-year budget. And then finally, Parks and Rec revenue. This one's probably the one that we're still being a little cautious on. Most of the revenue sources that were related to the economy, sales tax, income tax, hotel, motel, food and beverage, we're typically seeing a resurgence of that for the reasons I've already discussed. This one's a little more problematic. We're talking about before and after school care, the CDM, golf, pools, youth programs, kind of parks and rec activity. And this has been, I guess in a word, challenging to try to predict, given people's, essential comfort level with returning to those facilities. We are obviously widely open now. We decided to keep these revenue sources kind of at our original plan in terms of the adopted budget. We'll modify as necessary. Not a significant decrease in terms of our conservative approach. We're trying to keep this relatively low. As you can see in 21, 22, a significant drop off that we were still coming out of COVID at that time, and a lot of processes and activities were kind of closed off. I will note here in this though, due to very aggressive grant campaign from CDM and Normal Library, the staff there were able to obtain almost over $600,000 in grant revenue that helped us through those difficult years. So that kind of wraps up general fund revenue. We're going to get into operating expenses, but I kind of want to just end with the fact that things are looking much stronger for us than we intended it, than we thought they would be last year at this time. Again, last year we were very, very conservative, and we're kind of stepping back from that a little bit, but still maintaining that kind of philosophy. And we think the out years look fairly promising. I don't always have that position in terms of my thoughts process for out years, and we're still trying to maintain some kind of conservative view, but we are seeing continued economic growth and continued response to consumer spending and continued internet sales tax coming that are helping. So we have a good sense of how things are looking for the out years, and it is much better. So operating expenditures, again, this is just the overall spending by category to give you a sense of where those dollars go. Clearly, over half of our money for general fund is dedicated to staff resources, personnel, providing services for the citizens. In terms of the overall look, again, this is total general fund, $75+ million of expenses for the next 5 years. You can see the red line is also up. So we have increased expenses in relation to our relative increase in financial flexibility. So what are we doing that's a little different from the last year's 5-year budget? Well, if you look at 21-22, again, we're up a lot in terms of our projections for expenses. The lion's share of this is increasing transfers out from the general fund. So if you recall, the general fund is the main economic body of the town for our budget and accounting, but it supports a lot of other operations. It supports capital funding, road funding, debt service. So it transfers money from our resources to those funds to maintain those funds for a lot of different reasons. This year, we went into the fiscal year planning for this budget in a better fiscal position. So what we have been able to do, which is actually very exciting, is we're able to fund a lot of things in capital that we frankly just couldn't get around to it in a meaningful way. We were not ignoring them in the past, but the funding was limited in terms of what we can make available, and we kind of just hit the critical areas. With this budget cycle, we're actually starting to make some headway towards those meaningful areas. And when I mean capital for facilities and parks, I'm talking about street resurfacing for tennis courts, building envelope, HVAC systems, playground equipment, things that need to be done that you cannot avoid those expenses. You can't prolong them. If you do, they're just more expensive. So we're very excited to have this flexibility financially, and we're moving that flexibility into some significant capital needs, also in road work also. That is going to continue in the out years. We will share with you, and the council is aware, we do have, when we're increasing our capital transfers for a lot of areas, and we're also increasing some staff in a number of departments, and then also we're having some increases in public safety pension contributions. So a lot going on in terms of more capital that's absolutely needed, some more staffing resources that are also absolutely needed, and then we're addressing our growing pension funding needs for public safety. One thing before I get off this, I'll get back to it in a few slides on debt service. We also were able to actually fund, if you recall, we were going to pay the 2012 bond issue off in the next fiscal year. That's been a plan for about a year and a half now, June 1st, 2022. We had set aside a fair amount of money from the surplus in 1920 and 2021 to pay for that. We had planned to do a final set aside of cash next fiscal year. Given coming into this budget cycle, we had a lot more funds available. We actually went ahead and pre-funded all of that. So as we stand today, this proposed budget shows that entire payoff as being set aside right now, which is nice to have that. We're going to have it set aside in the next fiscal year, but I did all of this year, which is nice. So talking about a few of these more specifically, salary and benefits, you can see there of the 50% plus of general fund resources that go to funding personnel, you can see that where that breaks out. It's all, as you'd expect, police, fire, public works, and parks and rec, with the rest of it kind of being administration and so forth. So a lot of funds are dedicated to that. Over 70% of the funds we collect or we pay for personal services go to those four departments. Again, we talked a little bit about salary and benefit increases for this budget coming up in the out years, and that'll be covered in a little more detail with department budgets. About a $1.6 million increase in the budget from our plan last year to support that. Now, that's not all positions. We've had obviously an increase in health and dental costs that are increasing our benefits, and also the COLA projected for this year is increasing that cost too. This line just includes full and part-time, overtime, Social Security, IMRF, and of course mental health and dental. Contract payments is kind of our next big slice of the pie for general fund. This is primarily where we contribute or fund for police and fire pensions. The general fund essentially collects the levy, and then we do essentially a funding out the levy to the pension funds, and this is where we record that activity. We also record in here our mental health contribution to the county and the CBB and EDC and development agreements. We pay our liability insurance on this, and also we make our Connect Transit contribution out of this line too. So the increase, fairly sizable, 838, though this shouldn't be a surprise because, as you know, with the levy this year, we increased our funding to the public safety pension plans significantly, and that's essentially what's going on with this increase. We had some increases in liability insurance. We also had an increase in our contribution to the county for the mental health contribution. That contribution is a function of the revenue we collect. And our revenue has increased, as you've already seen from previous slides. So by formula, that our contribution increases also to them. So that's the driving most of this increase, but primarily the 838 is coming from the pension fund contribution for police and fire. Transfers, this was an area that we had a lot going on compared to previous fiscal year. The transfers out, again, the general fund houses a lot of the financial wealth of the town and budget resources, and then we take those resources and we move into a variety of different funds. One, we have a debt service fund to pay for our debt and keep that separate in terms of our budget and accounting, and so that's by regulation as it is. We also fund a lot of capital, and again, this is Parks and Rec capital, facilities capital, and a variety of other ones. We fund all the roadway work from general fund, at least for the locomotor fuel tax, and actually additional funds this year from general fund for that, and then our vehicle and equipment reserves. These are kind of all what I would characterize as sub-funds of the general fund that we control in the budget process, and we establish those to give us a sense of separate accounting and management of those dollars. This year, again, if you can see, went up quite a bit in terms of the proposed plan to last year's blue line. And you can see the actual numbers there. $3 million more went to the capital fund than we had planned last year, which is a sizable amount of dollars, and that's going to kind of continue in the out years. We did put into place in this proposed budget the last funding piece of the underpass connector project, 1.7. The rest of it's being funded, of course, by federal grants. We did, again, set aside the final piece of money to pay off the 2012 bonds this year for next fiscal year. And then also we did have to contribute some money to health and dental fund this year. This is a fund I'll talk about also shortly. General fund had to make a subsidy transfer to that fund to keep it essentially solvent. We actually transferred $500,000, $400,000 came from general fund. The remaining money came from water, sewer, and library, who also contribute to that plan, so they have a share of that subsidy. More to come on that, but that's a bit of a challenging fund. Out years, we continue to do more in terms of capital funding, certainly in roadway and Parks and Rec, and then also Equipment Reserve Fund. All those funds are, lack of a better word, have been restored to a nice funding level or actually funded more than we have in the past. The final piece is contractual services. This is a line that has quite a few lines in it. About 120 different budget lines make up contractual services for the town. The significant ones that are the most, have the most budget resources, police with our Medcom, with our dispatch contribution for those services. Public Works, you can see their landfill fees and street lights and recycling fees are all part of this line where we budget. A great deal of IT equipment's budget in this line in terms of services and maintenance agreements. And then, of course, the surcharge to the state of Illinois for collecting our sales tax for us, and then utility and travel. Again, it looks like a pretty big change, but it wasn't significant in terms of the actual dollars. The chart, shows that the scoping of it obviously is interesting, but $135,000 increase, not a lot on an $8 million budget. So most of those budgets all stayed very stable from year to year. The only one that did increase was travel and training and the state of Illinois surcharge. Again, travel and training we cut back significantly on in the previous year because of COVID. Most of that's police and fire travel and training that's being restored. And then also the state, we're being charged more from the state for collecting our sales tax because we're collecting more sales tax. So that's not necessarily a bad thing. I talked a little bit about, So in wrapping up kind of general fund, all years are balanced, and we're maintaining our targets as we always do, and we're doing that in addition to adding some positions to the budget to maintain the service level demands and economic growth that we were experiencing in the last couple of years. We're doing more funding for Parks and Rec, which is something very good to see. Again, those are expenses we cannot avoid, and if we do avoid them, they just become more expensive in the future. We're doing more funding to roadway than we planned in the last 5 years. This time last year, we've restored some of the financial resources to the Vehicle and Equipment Reserve Fund, and I'll show you that in a second. I will recap. Last year, we were kind of leaning on that fund a little bit financially because of some uncertainty in COVID. Since that uncertainty is a little more understandable, we can actually restore some of that money back to vehicle reserve fund, which is nice to see. Again, we've actually, ahead of time, fully funded the bond payoff for 2012, which is part of our longer debt restructure program. And then we've also been able to kind of put a final funding piece in place with this proposed budget for the connector project. So really a lot of good. I'm still going to obviously remain somewhat suspicious and pessimistic of the future, but this has been really a remarkable budget year in terms of being able to dial up revenue and then make that revenue available for really needed critical projects of the town and town resources. So we will see it. We'll continue to monitor that going forward, and it's nice to see that flexibility. Although we never get to. We're always very, very cautious going forward. So we'll be careful, but certainly it's looking good. So vehicle reserve. If you'd seen this chart, if you recall from last year, this chart showed at the very end of the budget almost being out of money because we were kind of leaning on it pretty heavy as part of the budget process last year. This year, we've been able to restore some of that funding because of the flexibility we have in terms of resources. That looks like a lot of money, and $12 million is a lot of money, no doubt about it. But I want to caution the council, not really caution, just refresh the memory. We spend about $4 million a year out of this fund every year for vehicle and equipment needs. We're going to spend almost $20 million in the next 5 years. So we try to keep this fund well reserved and available. And so we're dedicating funds to that we weren't able to dedicate last year to kind of restore some of that practice. And again, the red line there represents the target, and we're at our target in this proposed budget in the last year. Above it, obviously, in the current, more recent years, but last year we get down to that target of 75% of the actual expenses. Capital, I'm not going to spend a lot of time on this because the council went through it recently in December with the review of the CIP. This, of course, is just a snapshot of that desktop that we went through thoroughly, and I'm assuming you've had a chance to kind of go through it yourself. 407 projects, almost $160 million of spending in the next 6 years. Just to recap some of that spending, a lot of it's in transportation category. You can see, $23.9 million, that's Uptown Connector Pass. If you remove that, we're still $46 million of town funds going towards transportation. And you can see the breakouts there, state motor fuel tax, 17.6, roadway fund, 17.5. And you can see some of the categories of spending there that are somewhat meaningful. American Rescue Plan, that's a new fund this year, and it's obviously the money the town's receiving from the federal government for COVID relief. That's $10.8 million. We programmed some of that 10.8 into transportation projects, you can see there. And then we continue to spend money in terms of stormwater and capital funds for transportation also. Other breakouts in that money, this is kind of other, $29.4 million. Most of that other category relates to vehicle and equipment replacement funds. This is where we're purchasing fire trucks, ambulances, parks vehicles, backhoes, everything you think of. We have funded in this for the next 6 years at over $22 million. And then also a large investment from this vehicle and equipment reserve fund goes to support our infrastructure for IT. You can see $4.2 million over the next 6 years of spending for information technology equipment. And then, of course, we have some, again, American Rescue Plan money in this section. This is broadband, cybersecurity. We are increasing our contribution. The existing contribution general fund makes to mass transit for Connect Transit. We're also going to be making some contributions from this fund of about $1 million for the next 5 years. And then also we're addressing some issues with mental and behavioral health support from the ARPA money. Utility funds, that they are, really kind of juggernauts of spending in terms of infrastructure, because the need is to keep the system is obviously significant and great. $26.9 million of water fund money being spent in this capital. You can see the lion's share is water main replacements. Sewer collection is another category. That's basically sewer fund, 16.6. Again, you can see what we're doing there. Most of it's sewer lining projects. Again, all to keep these systems in good quality. And then, of course, stormwater, kind of regional ditch drainage and some pump discharge programs, culverts, a fair amount of money there being spent from stormwater. This last piece is probably again, I don't mean to overstate this, but it's been nice because if you look at obviously I spent a lot of time looking at the budget and Pam and my staff. And we've stared at a budget for many, many fiscal years that didn't have a whole lot of spending when it came to facilities and parks and rec. And this is the first time we get to look at a budget and actually say we have some funds there to spend, which is nice. Again, these are not avoidable expenditures, and it's nice to be able to start getting ahead of those to some degree. You can see there facilities, obviously a big part of that expense is going to be the new fire station that we have proposed in this budget to be built and constructed. But the next big line there is a lot of building envelope, infrastructure, energy projects that facilities manager is going to be managing. And then roof renewal systems, ADA transition, community health, or community activity center. This is HVAC systems. So a lot going on there that kind of has to be done, and we're getting to it. Parks and Rec, same story. Aquatic facilities, almost $1 million. Playgrounds, national park site improvements, tennis courts, trail extension. A lot going on there that we have not been able to address as much as we wanted to in the past. So moving on to debt, just a quick reminder of our debt program for the council. General fund resources support the debt, as well as TIF revenue from Uptown and a couple other TIFs. Water and sewer revenue supports the debt that's associated with those particular projects that are water and sewer related. We do get a small federal subsidy for one of our bond issues to support our debt. We always watch this very closely. We make sure our debt program is well funded and well supported and well reserved. What we have for you this year is very typical. We have a budget that has that abundant money to satisfy our obligations for now and the future. And then we actually just recently got reconfirmed our rating from Fitch as AAA. We haven't issued any bonds, and that typically triggers a rating call, but they call us about once a year and go through a fairly long discussion with me. A lot of questions get asked that we address. I probably spent 2 hours on the phone with their analysts a few weeks ago, talking through a variety of topics: the economy, our debt, pension funding, allocation of resources across the funds and departments, investment earnings. They really cover a deep area, all our liabilities, all our assets, and they recently, this month, they reaffirmed our AAA rating for the town, so that was nice to have happen. So our debt issues, total debt outstanding right now is 79.5. By the end of fiscal year that we're proposing, we'd had 71.3, so that's $8.2 million drop. That is sizable. That we typically pay off principal, every year, but this is obviously a big chunk decrease, and you know what that's from. That's from our debt payoff for 2012 we had planned. General fund is going to have an $11.1 million drop in general fund principal outstanding. That of course is the 8.2 associated with the 2012 payoff, and plus we have our regular debts that we're also paying principal down on. So that's the rest of that 11.1. We're paying down, and also the water and sewer. You can see here we are taking on a little bit of new debt. One we've already done that you're familiar with is the fire truck that we rented. That's kind of like a rent. Although we're going to rent to own. So that's an agreement that came to council some time ago about a little over $1 million of financing to buy the truck and to maintain our cash. We're also recommending, as part of the capital financing for the fire station number 2, to have a small piece of debt financing with local bank on that too, about $2.5 million. Overall project's about $4.9 million. The rest of the money is coming from existing cash and a grant, but we felt it prudent to utilize some of the low rates that we're experiencing now and allocate that cash to other areas such as the Parks and Rec programs and facilities. And plus, particular rates right now are extraordinarily low. So our recommendation is to utilize that partially for that capital financing. So I kind of want to remind the council about our overall debt restructure program. Again, we did this over a year ago. We've been planning for some time to essentially deal with the decrease in TIF revenue once the TIF expires. It's not really expiring because it was extended, but we're going to act as if it did expire to share those resources with other governing bodies. And once those are no longer available to us, we have a little bit of a cash flow problem in years 28, 29 for about 7 years in terms of our cash flow for the debt. We've been aware of this for some time, as the council is aware, and we're modifying the debt program accordingly with multiple actions that are going to occur one has already occurred, and we're going to have several occur between the next few years. The idea was to maintain the cash flow with the loss of TIF, to not propose new revenue, to extend debt, which is kind of a theory called scoop and toss, where you just push debt out again, and that lowers your debt service and makes money available. We're not recommending that. We are recommending kind of an early payoff of a significant debt issue, $8.2 million, as you're aware, and then we'll do a variety of refunding or refinancings in the future, and also some early debt payoff too, in the out years to manage the expiring TIF money. Again, this is what you saw last year. I don't have it in here to talk about in detail, although we can if the council wants to. I just want to remind the council of the plan. The first action was to refund some debt in the 2010 debt issue. We have done that. We did that as of March of 21, and that action has been completed. We have some savings there. The action that we're going to be taking in next fiscal year, 22-23, with this massive payoff of debt, 8.2, is paying off the 2012 debt bond issue in June 1st, 2022. That money, again, has all been set aside in our reserve funds to pay for it. We're just waiting to get to that point where we can actually say it's callable, we're going to pay it off. And that's coming up very, very soon. As we move through the fiscal year planning, and this is a very long-term plan, and part of the reason to discuss it today just briefly is to remind the council it's still out there and we're still watching it very closely. We're going to refinance these bond issues as they become financeable or refinanceable. Their call dates there are on June 23, 24, 25, and 26. So as we get to those points in time, we'll be evaluating the economic benefit of refinancing those, and they'll fall as part of our action plan. And then kind of our last planned action, again, we're way out now in terms of fiscal year planning, but that's just kind of how we operate. We're going to pay off some principals in these years and these years. And this could change as we get closer to that date. The goal is to free up some of the cash flow expense in those years when we lose that money from the TIF, and this structurally works in our program, and we will continue to move towards that process. Again, we still feel good about the plan. The only real change in the plan was we actually funded the early payoff of 2012 earlier than we expected, but so the plan still remains the same. It doesn't extend debt. It's going to reduce our interest costs. It's going to maintain our liquidity, and we feel it's a pretty stable pathway to managing the loss of the TIF revenue. And again, it's going to be flexible over time. Things change, new information becomes available, economies change, the market changes. But right now, we still feel good about managing this plan as is. Water and sewer funds, so water fund, yeah, it's okay. Obviously it's in a good financial position right now. As you can see, this graphic here represents all the fund balances of the various funds in the water that make up the water fund operation. The purple is the operating fund. The small slice of green there is our debt service fund for the water fund. We maintain a debt service fund there and a reserve level. The red is the replacement fund. They have a vehicle and equipment replacement fund just like the general fund does. And then the blue is the big capital fund. So in pretty good financial health now. We have some mild concerns about the future. As you can see, operationally, we want to keep that fund around 20%. It's going to go down to about 8% based on current projections. So that is something we need to address. It's not an immediate issue. We do have planned in all years, starting with next year, a 2% rate increase. And that rate increase is included in this graphic. So you can see even with that rate increase, we're still seeing a slow decrease in the overall operating fund balance. Also, you can see capital. We're going to spend quite a bit of money, and we're keeping that actually pretty tight. We prefer to keep about $1.5 million in there as a reserve, because capital projects, as you're well aware, can bounce around in terms of expense needs and timing. So we want to have that financial flexibility. We're spending down pretty tight in 24-25. You can see $281,000 left in the capital fund for water, which is not a lot of money at all. Again, we revise this every single year, but we're always looking down the road very far in terms of our financing of the town's operations and the budget. So what are we doing here? Well, we are working closely with a water consultant to look at a rate study. We have gotten some preliminary information from them that we're staff is now kind of absorbing and working through. It's a fairly complicated process to work through that information, and we will probably be coming back to council in the near future with some ideas and recommendations on a rate structure for that. But for now, we're recommending we maintain a 2% rate increase in next year and all years. And then we'll be coming back to you at some time in the future with a more formal and likely more increase for the rate. So that's more to come there. Sewer fund is kind of the, I don't know, I guess you'd call it the star child or the one doing the best at school. I don't know. So this fund is performing as expected. We're maintaining our reserve levels. Again, the same situation. Set 4 funds make up the sewer fund operations, debt service, capital, and vehicle reserve replacement, all in line with targets. A lot going on in that fund in terms of projects. At this time, we don't have necessarily a revised rate recommendation. We do have in the proposed budget a 2% rate increase. If the council can recall, back in 2017, the council approved a multi-year rate increase on the books in the code. The last one is occurring on 4/1 of 2022. And then after that, we're just showing a 2% increase in the out years, again, as kind of a placeholder. We will see if that needs to be revised, kind of like the water fund. We did the major rate increase many years ago. We kind of watched the fund every year, see how it's performing, and then recommended rate increase as necessary. Now we're kind of at a point where we need to do a more significant look at that, as I've already discussed. But for sewer right now, it's in pretty good financial health. It's meeting our targets, so we're just recommending kind of a modest 2% to maintain that level. And then we probably will not come back to a big rate restructure, formal discussion, water consultant, sewer consultant process, not for a few years. Oh, there you go. So health and dental fund. This is the we went from the good kid sewer to the bad kid health and dental. So this fund, this graph here represents what's in the proposed budget. I can tell you right now that doesn't represent the reality anymore. We've been watching that fund for the forever. Last few months, things have not gone in a direction that we like to see in terms of the claim activity. A lot of reasons for this. We're working very closely with our consultants. It is very likely that we're going to have to do some kind of a additional transfer, a cash infusement to that fund before the end of this fiscal year or as part of next fiscal year's budget. That's not proposed in the budget yet because we're still looking at what the numbers are going to look like. Typically, when we get to this point in the budget, we feel pretty good about all the numbers. We have a good sense of what's going on with the activity in terms of expenses, capital funding, revenue. This fund is very challenging. It's hard to predict what happens with it. Part of the problems we came out of COVID, and we continue to have, obviously, an increase in healthcare costs, a lot associated with kind of pharmacy, boutique pharmacy or significant pharmacy drug spend. But also what we've noticed, and this is kind of across the board, is when we came out of the pandemic, people went back to the doctor for a variety of issues, and sometimes those issues became more significant because of the ability not to get to a doctor during that time. So we're seeing a lot of claim costs go up there. So again, I don't have a lot to share on this one. We're looking at it very closely. We will be definitely coming back between proposed and final with an adjustment to help this fund, and we'll continue to work with our consultants to manage it. But it is a challenging area that requires a lot of attention. So to wrap up, in terms of fiscal strategies, the general fund, we see that as kind of a green light. Green, obviously, is we are interpreting as good. Yellow is not so good, and red's a problem. So we have a yellow light for general fund contingency. As the council's aware, we like to try to put a little bit of budget in a non-departmental line in general fund, about $1 million or so every year, as just a kind of a quick savings account to respond to opportunities or to deal with emergencies. We didn't fund that this year for a couple of reasons. One, we have pretty healthy reserves in all of our accounts, and we really wanted to dedicate as much money as possible to the needs that we've identified in terms of capital and staffing levels. So we've kept that, essentially funded at zero again. Not overly concerned about that. I mark it as mildly concerning only because we haven't been able to fund it. But it's kind of it's one of our many tools to go to for funding, and we thought it was more practical and responsible to utilize that money for needs we were well aware of already, and then rely on other reserves, which we have plenty of or feel good about right now with general fund. The Vehicle reserve, that I think it might have been yellow last year, or maybe even red. I can't remember, but it's green this year only because we were able to restore some of that funding that we had to lean on last year in the 5-year budget. We're at our target reserve at year 5, so we're feeling good about where we're at with that funded operation. Health, it's red. I've already kind of discussed it. We'll be dealing with that in the next few months before the end of the year and before the budget gets approved. Debt service, is always green in terms of reserves and ratios to make sure we're recovering that. And obviously green in terms of the super long-term amortization of our debt with the TIF going away and managing that through a variety of issues that we've already discussed. Water, put that as a yellow light only because, we are seeing, costs are significantly increasing, chemical costs. John can probably describe more of that, but in talking with him, that there is quite a bit of increase in inflationary costs that are burdensome, that need to be paid, and the rate needs to keep up with that in terms of responding to it. So we have some concerns there. We will certainly address them. The fund's not bankrupt by any stretch of the imagination, as you can see from the numbers I've already shown you, but we do have to give you kind of pre-warning that we're going to look at that and be coming back with some kind of rate analysis that's more formal. And then sewer, of course, is green in terms of where it stands. So just kind of wrapping up, we covered a lot. Fund reserves are good. I could probably call them great. We're AAA rated still. That was reaffirmed just last month. We continue to be very conservative in our budget practices. We do a 5-year budget outlook. Which is a challenging thing to do. If we just had to worry about one budget year, oh my God, so easy. That would be so easy to do. But 5-year budgeting is where we need to be, and it helps us plan for the future and give us a sense of what we're doing for the out years, where problems will be. We always react quickly. We are ramping up spending this in this 5-year budget. If things change, then we react to that and deal with it to ensure we're always staying financially stable. And we monitor more pay-as-you-go, which is nice to see in terms of capital. The economy, it's less uncertain now. The only thing one thing that kind of concerns me, and it's kind of undefinable, is how we're going to deal with some of the large cash relief programs that the federal government's put out in this last couple of years for COVID, and the state too. Those things have kept the economy going, and the economy has shifted from kind of a stimulus recovery to an economic recovery. But again, that's a lot of money that's been put out from the federal government and state that may or may not come back to be some kind of impact on municipalities. Hard to say, but it's out there. That concludes this presentation, and I want to give Pam the last word.
Thanks, Andrew. That was a lot of information. I'm sure council absorbed all of it. But I did want to share that because we're live streamed, not everybody in the audience could probably see the screen. So we will be posting Andrew's presentation online after today. So all the slideshow will be available for folks to absorb after the fact. We do have some concerns primarily focused on health and dental fund, and we'll be trying to find solutions in that regard. We shared that with you when we had our annual employee benefit program renewal in late last summer. So still a work in progress. The other things, just to reiterate Andrew's comments, we're in pretty good shape with this proposed budget. And we're excited to be able to invest more in capital in things that maybe we haven't done as robustly in the recent past as we would have liked. So we're in a position to be able to do that this fiscal year, this proposed fiscal year. The other thing, one of Andrew's last slides focused on financial policies and strategies. And I did want to point out that those policies and strategies that council has identified over the years are so important to us in planning our budget. Those are basically, the boundaries that we stay within and the targets that we're shooting for. And because they're so important, they now are moved forward in the budget document itself. So people can take a look at what is driving our budgeting process and our financial strategies. So this year, you've seen some, if you look through your budget document, you've seen some graphic changes, some reordering of things in the budget, all for the purpose, I think, of improving the usability of the budget document and obviously transparency. But the financial policies now are right up in the front on pages 26 through 31. So those identify what really is the basis for our budgeting process. As we move forward throughout the day, again, some of these issues may come up and we'll talk about them in more detail. But I just thank Andrew for the presentation.
Thank you. Questions? Ms. Smith?
Thank you for that presentation to give us some summaries in layman-friendly format. On the revenue side, when you made your sales tax projections, did you go from a trend line that you identified, or did you actually attempt to incorporate any of the inflation that we're witnessing currently?
Both. We certainly look at the historical trends. Last year's budget, we almost set back in time, and we just went back beyond the COVID year to start, and it started from that base. Now we've kind of been able to get past that, but we certainly look at what we predict as inflationary increases. We're analyzing right now with the state what the internet impact is going to be, which is sizable. So I guess the answer is we look at the trends from historical trends. We've kind of ignored the 2021 year because of COVID, and then we've reestablished our modeling to go forward from there.
And looking into the detail in the budget, there was a dramatic increase in revenue for building fees and permits.
Right.
Did you factor in when that repercussions of those properties will enter the property tax base in your forecast?
We know that obviously the significant that money came from a lot of the Rivian work and the economic development surrounding that primary revenue generation. That it's been a unique year for that, and we do factor in an increase in EAV associated with that growth. Part of that this is getting a little down the rabbit hole a little too far in terms of discussion, sort of explanation, but the levy is always going to be relatively modest, so we're going to try to keep it at a certain level all the time. So if we see massive increases in EAV, that's not going to necessarily translate into a lot more money for the town, but it does translate into less property tax for everyone to pay in general.
Okay, and a follow-up then: are there any TIF properties entering the forecast in this 5-year time frame?
No.
The salaries and benefits were at 52%. Do you have any comparison information as far as for other municipalities, what that percentage typically is?
Not at my fingertips. I would say we're probably comparable for sure, because obviously, our main source is to provide services. Parks and Rec, Public Works, Police and Fire are the major, employee bases that are out there providing services. So everyone who has that was going to probably have that kind of level of expense allocation.
On the same subject of salaries, are you still phasing in entry-level positions at the current state mandated minimum wage, or are you targeting the $15 an hour rate now in order to compete against the private sector?
We have in the budget a number of positions that follow that standard minimum that's set, and as those click up, we increase those positions in accordance to the click up in terms of the minimum. Now again, hiring decisions can be modified below or above that, but for now we're remaining consistent with just raising the folks that are at that minimum to the new minimum.
And,
I'll jump in,
Yeah.
Ms. Smith. The minimum wage adjustments at the state level primarily impact our part-time salary schedules for part-time employees. And so we do have a pay scale that applies to our part-time positions. And so we have incorporated that minimum wage adjustment throughout, and that mostly impacts departments like Parks and Recreation and Cultural Arts, the departments that have the largest component of part-time employees. That is all reflected in our budget, our salary estimates.
okay. And do you have any explanation for what's triggering that dramatic drop in the vehicle budget in 26, 27?
Sure, I had to look back at the budget, but we have a number of things that we purchase, and when they come on, when their useful life ends and we do the purchase, we schedule the purchase in. It's likely we probably have some waste trucks sitting that year, or maybe some ambulances. I can look back and get the detail. But we have a pretty thorough calculation that looks at every single vehicle, whether it be a large mower, to a fire truck, when that's going to be spent. So it's not always uniform every single year, but yeah, we can see in those out years that there'll be a significant expense. I think about $5 or $6 million. So I can get that for you.
And also, we'll jump in, Ms. Smith, as we go further through the various departments and divisions, there will be a time when Andrew covers the Vehicle and Equipment Reserve Fund in a little more detail, so we have time to look that up and we can discuss that then.
And the sewer collection, the back revenues that were paid to us from Bloomington, did that show up in the 2021 budget, or actual numbers?
Yeah.
Yeah, and then is the town now billing those customers directly so that those revenues are definitely in our forecast going forward?
Yes, correct.
Under capital, you've got, well, I saw that there was increased staffing in the public works. Is this part of the plan to bring patchwork and other street repairs in-house?
We'll get into that in a little more detail when we talk specifically with Public Works on their budget, but the answer generally is yes. For some of those positions, maintenance specialists that you see them in the streets division of the Public Works budget.
Then an accounting question. So the associated cost of doing the patchwork, is that categorized as capital expenditures or in the operating expenses?
I believe operating, again, when Mr. Otto is up here, we can talk about his various line items, but they do have a specific line item in the streets division for some of their in-house work that they do.
And finishing up, just got the debt side of it. How do the bond ratings, if they do, impact other borrowing that the town might pursue?
In a couple ways. If you're AAA rated, you obviously enjoy a better interest rate long-term. And also, your bonds are more marketable, so they sell faster, and there's more of an appetite for them. So those are the two things that we see most effective. Obviously, interest savings is significant because you have a better rate than they offer, and then they're just more marketable.
And a follow-up to that, whether it's bonds or long-term borrowing from other institutions, the town is only considering fixed-rate financing, correct?
Correct. We have had variable rate in the past. When we decide to do a financing, you need to, anything above $5 million, you're probably looking at a bond issue because it's better financing and it makes more sense from efficiency of money. Something below that, it's probably a local financing with local bank. It makes a lot more sense because the closing costs are much less.
Well,
yeah.
and I will jump in, and so yes, we have had a situation where we had variable rate, but we would only come to council with what the market makes sense to do at the time and long-term for the bond payoff. So at this point, we don't project any long-term debt in any short-term. We'll talk to council in detail on what we believe makes sense at the time.
Right.
So even though the market is skittish right now because of the Fed projecting some interest rate increases, this will not impact the debt that the town currently holds?
Correct. Yeah, all of our rates are fixed. We have had variable rate in the past a long time ago, and it's not wrong to have in your portfolio some variable rate. It doesn't make a whole lot of sense. Well, that's my opinion. When fixed rates are so low, because the variable rate can change very dramatically. So we moved away from that variable rate many years ago because we were finding such low long-term fixed rates, and that's just more comfortable to be in.
Final question. So there's a new accounting standard that's due to be implemented that would require the categorization even of lease payments and put that on the balance sheet and instead of just being on the interest income statement. When will the town implement that so anyone looking at it for ratio purposes would recognize that there might be a shift?
If memory serves, I think that's going to be effective for us for 22-23 annual report.
Okay.
So we've got some time to address that. We don't have a lot of what you would categorize as lease debt. Obviously, the fire truck was one, and we'll disclose it as required on the balance sheet.
Okay, thank you.
Further questions? Mr. Nord?
Thank you. So COVID has pushed a lot of the private companies to become more efficient and be able to do more with less people. I assume the town has learned efficiencies as well. And hopefully they will persist, long into the future. Could you explain, like with that, or in that light, how the process was to determine that we needed, 60 more staff?
Well, it'd be great if it was 60. I guess I'll address that.
What was it? 60, I think is what it was in the report. Is that the
You're gonna have
total?
to speak up, Mr. Nord.
Is the total number of staff, was it around 60?
I don't believe so. I think it's closer to, 22 full-time.
Oh, so 60 open, 22, we're going to be replacing this cycle or this budget?
Between current year and next fiscal year. And I'll certainly be happy to talk about that in a little more detail. As council knows, we are in growth mode as a community. So have we learned anything through COVID? Absolutely. Are we engaging technology as much as possible? Absolutely. Does council and citizens and our organization have high expectations of service? Absolutely. Do we want to continue to do more with capital investment and projects, street improvement work, et cetera? Absolutely. So what we're doing in the proposed budget is incorporating, starting to add to our staff base. And how did we get to the point of determining which positions? It was based upon conversations with each department in terms of what do they need for a staffing level to accomplish the tasks at hand efficiently, and as effectively as possible, still be responsible to our citizens. And just as a reminder, adding staff is not anything we do lightly. And in fact, when circumstances change, council knows how quickly we react to make adjustments in our staffing when necessary. So if we look back historically at our staffing levels, as an organization, I can tell you, if we compared January of 2022 to January of 2012, so 10 year, look back at 10 years, we would see that we're operating today with about the same level of full-time staff, but 18-ish fewer full-time equivalent positions. Okay? If we compare January of 2022 to January of 2017, and council might remember that back in 2017, what we did in 2017, 2018 is we eliminated a lot of positions that fiscal year, 2017, 2018. The reason we did that is because when we put together our 5-year budget projections, 2017, 2018 looked pretty good, 2018, 2019 looked pretty good, but what we had concerns with was the last 3 years of the budget process. Those last 3 years were major concern. And so what we did, and we met with council supported our actions. We started eliminating positions in fiscal year 2017, 2018 in order to best position the town for the 3 years out, 3 years, 3, 4, and 5, to make sure we were set up well. We didn't start building those positions back up. We didn't start rebuilding that staff level. And then COVID hit. So what did we do in 2020? We eliminated more positions to protect the town's financial status. So if we look at January of 2022 compared to January of 2017, right before we started cutting positions, we're 56 full-time equivalent positions shorter than we were in 2017. And that worked for a couple years, but it's not sustainable if we want to get some projects accomplished and continue to provide high-level service. So that's a long explanation on why we are adding positions, but I can tell you that it was conversations with each department in terms of, here's the things the organization wants to get done. Here's the thing we believe that council wants to do in terms of investing more in roadways and projects and services and the like. So how best can we do that? And it's trying to start building our staff level up a little bit.
Okay. I've asked in the past for how much time staff are utilized doing different projects, and we've been told that unless it's grant funding, we don't track that. So, I'm just intrigued how we come to the decision that we need more staff when we're not really tracking time. So hopefully going forward, management styles will change to where you're tracking time. So, as a council member, we can see pretty obviously that yes, staff are coming to a point where they're overtasked and we do need to increase. Then another question is, I guess really this is more of a comment. Well, a comment and a question. So you proposed that the water rate, we would increase that. We have recently approved spending water fund money to buy snowplow equipment, which is not for producing water. So, I'm against raising a rate to support a fund if we're siphoning money from that fund to use for something not related to that. So that'll be something that I'll bring up whenever the proposed water increase comes forward. Thank you for the presentation.
Mr. Nord, I just want to caution you to quit bringing up issues that the council has resolved in past actions. We understand your position, the one you just referred to, and I'm just going to ask you to quit questioning prior council decisions as part of this budget process. You're 1 vote out of 7, and we understand your position, but council has taken action on these items. Council has taken action on these items.
I understand that. I'm talking about the future water rate increase.
Don't be bringing up prior council actions to support your position.
I will bring up history.
We'll move on. Mr. McCarthy.
Thanks, Mayor. I'm going to try and stay directly in front of my mic this time. First of all, congratulations. Maintaining a AAA to everybody, all of our departments and finance department, and certainly the city manager. Post-pandemic, that is not a thing that we should let pass us by lightly. That means we're obviously in very good and strong financial position with investigated and researched confidence in our ability to operate well and pay our bills and operate sustainably into the future. So I hope if those watching on camera and those that are in and out today in person take away that one, or at least one piece of information from a very long day today, is that the town is in very strong position as as assessed by outside third-party evaluators. And so please take that into consideration, and congratulations again. I always appreciate, not that I don't appreciate the rest of the today, but I also always appreciate the beginning of today, this overview and highlight. I think it's good for all of our citizens, a good summary, helps put in context where we've been and where we're about to go. And the 5-year approach is fantastic because it signals to us that change is coming, and where we need to do it, and where we need to be concerned, and where we can feel strong and comfortable. A couple more comments. You used 2 words that I paid attention to, loosening and flexibility. Those were not part of your vocabulary a year ago.
They never have been.
we were having a much different conversation. I'm sure all my counterparts are well aware that we were having a much different conversation a year ago and a year and a half ago about this budget. Again, for those paying attention, it's that very conservative approach to re-estimating our revenues downward and then making corresponding budget cuts that Ms. Reese just spent a fair amount of time reviewing of how we got there. Unfortunately, staffing cuts and service level reductions, because simply that's what we needed to do as a body, and we did what we needed to do as a group. But the reality is we're in growth mode today. And the good news about that is we're in growth mode, and that very conservative budgeting practice has put us in a great position. It's giving us that flexibility that you talked about to start focusing on increasing service and staffing level to provide the service that's in demand right now, and also to fund needed capital improvements. We saw one of the most aggressive, if not the most aggressive, capital funding plan that I've ever seen and probably ever been in existence in the town of Normal. That's great news when we need it to be great news, right? We're in growth mode. We need to be investing in capital. Also, freshly off a pandemic, we're about to retire an $8.2 million debt, which is not a very common thing going on in municipalities, particularly across the state of Illinois. Again, another strong signal that the town of Normal is well financed, well planned, and that we're executing. I know that was been criticized by some of our critics about holding cash and getting ready for this. But here we are, June. I can't wait for June to happen and that to get off of our debt sheet and us to save that monthly annual expense for it. But kudos on you. I do have a couple of questions. One is certainly you gave us some yellow and red traffic signals, something that we should pay attention to. The water fund. I'm assuming that those projections of critically low balances include those 2% annual increases that we are in. Okay. So we're still falling below targets, even though you're planning on 2% increases. So the water rate study is really something that we need, is fundamentally what you're telling. I made that assumption that was there, but wanted to definitely ask that. And the health insurance fund. I think I heard you answer this, but I'm going to ask it just to make sure I heard it. But you'll have recommendations for us before we vote on the budget for a plan going forward.
Well, we'll have recommendations for you to essentially shore up the fund as part of the budget process going forward. Recommendations, we're always working on plan changes and ideas, and we've done a lot of that in the last few years to address healthcare. It's always going to need some more to deal with. So I can't say for sure we're going to have anything in terms of a concrete plan for a plan design or a service change or a rate change.
Recommendations.
Yeah,
Right.
but,
Our recommended rate change or plan design modifications would come at the renewal of the employee insurance program,
Yeah,
which would
right.
be summer.
Right.
Gotcha. Okay. That's helpful. I know that that's always going to be a challenge for us to try to stay and forecast increases in that fund and those costs. And with the variability in pandemic and strains and waves, it's
hard to predict for sure.
Yeah, super hard to predict. So we appreciate that you'll come back to us with some recommendations that will have to figure out. So appreciate that. Thanks for the presentation. I'm looking forward to the rest of the day.
Mr. Mayor?
Thank you, Mr. Hume. Oh, I'm sorry.
Yeah. Good morning. I want to just say that kind of my top two concerns for the day going forward will be on salaries and the associated benefits, particularly around the health and dental. I'm really concerned about the health and dental. I don't think I'm telling you anything that you're not also concerned about. So I think we have to have some serious conversations at this level about that. I'm very interested to hear what suggestions and recommendations. Because, you know, we were kind of blindsided with a pretty significant increase, I think, sometime during this last year. I mean, maybe you saw it coming, but, you know, it was all of a sudden, it was like an 18% increase or something pretty crazy.
17, right.
17, okay. So that's, you know, you're going to hear me talk a lot about that today, is the cost of adding people. And why is it that I'm maybe surly on that topic? Not because I don't like people, but it's really because, you know, I'm a process person. I'm an industrial engineer at heart. And so in any time anybody always says, well, let's just add another person, you know, my red flag goes up and says, are we being as creative and innovative as we can possibly be? So kind of a marker for me will be that, as well as to be very targeted in where we do add staff, that it can be really directly traced to some increase in activity. So if that is, you know, certain areas of our staff that are doing more because of the economic growth, you know, so be it. But I'm going to be kind of a stickler today on that. I just wanted to say that up front.
Thank you, Mr. Hume. A very in-depth presentation, a lot of information there, I understand, and you're pretty clear on this. The key points, I think you stated 4 or 5 times just to make sure we absorbed all that, which was good, I think.
Thank you.
But I'm impressed where we are currently in our process going forward. Not to make fun of our finance director, I know there's some concern in the out years and the issues of health and dental and water fund. I'm confident we'll come up with solutions for that in the future. So, thank you. Mr. Chase, you're up.
Good morning.
Go right ahead.
Go ahead. Okay, we lost a couple. Oh, one's back.
Oh, we did.
First, I want to introduce Linda Lane and Beth Robb, 2 of our elected trustees who are here today. So appreciate their time and service and talents, both new to the board this year, 2 great additions. So thankful for their time. Just going to kind of remind the council on our process and our few funds that we have, go into a little bit of detail. So the process basically, you know, with the library being a unique relationship with the town, I work with the library board of trustees and then the budget committee, and then ultimately, you know, get that same process and until we get to this point today. Brief summary, you know, our revenues and expenses for operations for this coming fiscal year are both down from the current fiscal year. We have three funds: operating, replacement, special reserve. Operating funds everyday operation of the library, staffing, materials, utilities, etc. Replacement is for planned replacement of equipment and some facility-related expenses and technology. And then special reserve was created in 2018 by the board as a reserve for capital opportunities, such as we created our new accessible restrooms, any significant projects for the current facility, possibly work in preparation for a new facility. So 3 funds, and I'll go through each of those funds briefly. For the operating fund, our revenues a little over 4.1 million. We have some grant revenue this year. We're actually going to be a little bit down next year compared to this year, even though we do have a property tax, a small increase following 4 years of decreasing or flat property tax revenue. So very stable in our revenues and expenses. Continue to receive the per capita grant from the state, $77,000 a year. We do use the library-specific collection agency. The whole goal there is just to get our materials back. We're not looking for cash. We just are trying to get our materials returned. Excuse me. In 2020, the board decided to eliminate overdue fines and also our DVD fee. So that allowed, it took down barriers to use, which has worked really well for us. But this is 2021 is our first full year being fine-free, and it feels good for the community. Work with Andrew to determine appropriate fund balance. We have an appropriate fund balance for all funds going forward. Our expenses are estimated to be safe for the ongoing operation of the library. Again, fairly stable operation. We are seeing some increased expenses, obviously, materials, for example, supply chain issues, delays, things like that. Currently, we're operating with 4 vacant full-time positions. Similar to any department, we're very much a service-oriented department, so very staff-intensive. Our staff do a great job being creative, innovative, and providing great service. Replacement fund, it's appropriate to fund ongoing replacement of equipment and technology, so those costs are identified well in advance, typically. Just a reminder, our facility is half 1972, half 1992, so there are 2 different cycles in terms of replacements there, each with its own needs and schedule. And the Special Reserve Fund, this will likely grow very slowly, though we do have some use for that. We have a potential abatement project coming up maybe starting this year, likely next year. And then related, in terms of revenue, the foundation continues to grow and fund many programs throughout the year, made possible by book sales, individual gifts, and corporate sponsorships. I'll just share a few highlights for the library for both last year and this upcoming year. About 36,000 active library card accounts, 484,000 items circulated in the first 9 months of this fiscal year, so will likely be about 600,000 for the year. Our staff delivered 404 programs in 2021, 251 of those virtual, 70 off-site, 48 passive, many on-site, take and make, etc. Participation about 25,000 for all ages in those programs. Our story walks were very popular this year. Those were in conjunction with Parks and Rec and some of the local schools. We did 9 story walks, and that was a great model during some of the COVID challenges. Some highlights of 2021, just continuing to optimize our virtual services, curbside pickup, browser packs, home delivery, maintaining a healthy facility, keeping staff and the community healthy and safe, and obviously providing an opportunity for those who are comfortable coming in the facility to come in and use it, but also serving those who aren't comfortable. So we do home delivery, obviously, for those who really can't make it to the facility. All kinds of offerings of programs, story times, Baby Rock Tuesday Tales, STEAM Club, American Sign Language, scavenger hunts, knitting and crocheting, poetry, teen programs, financial planning, a variety of historical programs, lots of different things, genealogy for residents in the community. Resumed in-person outreach to schools and senior residential facilities this past year, which was great. Pop-up library is the main service there. Collaboration with Parks and Rec, CDM. Summer reading program was great. Our 1,000 Books Before Kindergarten has 1,200 children enrolled, 126 have completed it. That's a great program for us. Implemented our NPL for All Sensory app, which was funded by our 2020 Giving Tuesday. That's an app for individuals who want to get comfortable with the library before they come into it, kind of understand where things are, how it works, things like that. Upgraded a variety of technology, computers, scanning, copying, printing, a grant-funded Wi-Fi assessment. Continued partnership with Unit 5 to create library cards for all students. And we spent a lot of effort on communication with the public. We combined several departments, acquisitions, processing, and cataloging, into a single department for some efficiencies there. Continued the lease of the parking lot to our northwest. That's very, very popular with our users. Developed our 2021 to 24 strategic plan. As I mentioned, we welcomed 3 new trustees, all of whom are doing a great job celebrated the retirements of 4 full-time staff members. Just briefly looking forward to 2022, our goal is to continue to deliver exceptional services, programs, collections for all ages, on-site, virtually, and off-site. Continue optimizing our resources, very important for us, staff, budget, space. We've done a lot of cross-training for staff, so we, rather than being departmentalized, we're more cohesive. Most staff can work all service points, which is good for us. We're going to have an updated website here in the next few months for a more user-friendly experience. Continue our work with the Library Planning Committee, 2 council members and Ms. Reese are on that. We appreciate that opportunity to keep moving the library, a potential new library forward or address our space needs in some way. Continued implementation of our new strategic plan, focusing on how do we best serve the community with our resources. I mentioned the possible abatement project. And then looking forward to advocating for the library being considered as part of the Uptown South plan in that process. So happy to answer any questions.
Great. Questions? Thank you, sir.
Thank you.
Always good to get an update.
I do want to point out, appreciate Brian Chase and his team. Brian's a great member of our leadership team, and so a lot is happening at the library, and I know Brian has his hands full, but just appreciate Brian and the board representatives being here today.
Appreciate it. Thank you.
Thank you. And thanks to your board for the work that they do, too.
Yes.
Mr. Hanson, you're up.
Good morning. It's always my pleasure to give you the highlight of the budget. First, the mayor and council budget, as you'll see, there's almost no changes to this allocation.
I think we're looking at page 118, 119.
Correct. 119 is the budget line items. 118 is kind of the description narrative of this particular set. Adjustments were put in for the council allocations last year, so that's all consistent. Dues are consistent. Travel and training is consistent. There's really no change in this particular line item. I think there's a variance of about $1,000, but that just equates to when the pay changes went into effect. So unless you have any questions, there's nothing of substance to report. I certainly can get into more detail about where we pay dues to or travel and training, but we budget accordingly based on history and where we think you may go. Sure.
Oddly, I have a question. Help me understand when the pay, we did a pay increase. I voted against it, but and maybe that's why I haven't seen my pay increase. Why I've not seen that increase in my 42 cents that I get for my stipend.
So it goes in as an election cycles happen. So I think for some of you it goes into effect after your next cycle. We had a cycle in the middle for 4 members, so it would go into effect for them, and then it takes a prolonged period before they all go into effect. I believe that was passed in 18.
Right, and I sat for election in 19.
Yeah, Andrew, do you know?
I'm not looking for the additional. I just
Sure.
was kind of curious as to why that
Okay.
happened or didn't happen.
Yeah. We'll definitely get with payroll and get you an answer. Other questions related to the mayor and council budget? Okay. Moving on to the,
I'm going to jump in. I'm looking at the narrative real quick. It looks like for some, it kicks in fiscal year 22-23. So we'll double check and get back to you on that.
city manager budget.
Paid council member.
The most significant change here, as you can see through the line items, if you're following on the budget on page 121, obviously there was an increase again for travel and training last year. Obviously, city manager Reese and I we didn't actually go anywhere. But that we do budget for professional conferences, which we may or may not attend, so they're in the budget. Doesn't mean they're necessarily expended, so that there's an increase there. Obviously, the biggest increase is for the analyst position. There was an addition of that one position in the administrative department that doesn't replace what used to be Sally's position. That's more of a, for those of you that have been around, I think that's a Ben McCready position for reference.
Questions on administration? Go ahead.
All right, awesome. This is the easiest one, boards and commissions. Miscellaneous dues, pub scripts, and then special programs are in there. This is ironically, and I forgot to mention in the mayor council, this is not where your strategic planning money comes from. That's actually in the mayor and council budget, but it is in there. So just so you know that that's budgeted for this year. This is other programs that are done through the boards and commissions section, but there are no new programs this year.
Okay, thank you, Mr. Hanson.
I do
Oh, I'm
have
sorry,
a
go
question,
ahead.
sorry. I'm trying to follow on the special programs.
Sure.
There's about a $15,000 increase there.
Yeah, so within that is our sister city contribution. We support MLK events, miscellaneous sponsorships. This was also where I think a couple years ago we did the racial equity summit. Came out of that. That's so we cut that money in the COVID year because we knew we weren't going to do that. We just restored it under a planned additional program. It's funds that are available but not specifically allocated. And that's what that number represents.
Okay, so it could be that equity, whatever you, yeah.
Could be that. Could be, I mean, it's more directed by council action. These are council-driven initiatives. So,
Okay. So
But
would
there
that
is- there
also
are
be
dollars
like
there.
the, I can't think what the name is that's going right now with
Could-
Ms. Cummings?
It could be Youth on a Mission.
There you
It
go.
could be racial equity. It could be a variety of programs, even special programs that maybe the Human Relations Commission would like to conduct, things like that. So we just have a sum of money in there based on past history of program ideas that have come up, and we
Okay.
want to make sure we have some funds available.
And the fact that they're probably under $25,000, they would not come to council, or would they?
For approval of the
Yeah.
program, generally not.
Mm-hmm.
And I'm having a hard time hearing you, so.
Oh, okay. They would or would not come to us for approval.
Generally not, unless they were over 25,000.
Okay. All right. Thanks.
any other questions?
Thank you, Mr. Hanson.
Thank you.
Ms. Olafson, you're up.
Good morning.
Good morning.
I am looking at budget pages 126 and 127. There's not a lot of operating line that changes here, unless you look at staffing. You can see that there is a recommendation for 2 increased staff here. And this relates to when the town hired me. Pam asked me to provide her with proposed staffing for communications and what that could look like moving forward. This recommendation encompasses a recommendation that I made to her about last May that takes into account several types of engagement opportunities that we could be making more use of. We just currently do not have staff to enact those. Much of the rest of the budget is very consistent with years past. The two positions that I'm recommending that we hire is a graphic design and multimedia specialist, bringing several projects that we currently outsource in and creating some efficiencies with those, as well as currently we have about 14 social media accounts. I have 3 interns working anywhere from 10 to 12 hours a week right now, and all they do is create the collateral visual look and feel for those social media accounts. And one of the things that I've proposed to council or city manager Reese is to bring someone in-house to create some ownership of visual identity for the town. Certainly, one of the ways to create engagement is through consistent visual identity, look and feel. And when we have interns cycling in and out, we experience, they provide great work. And it's a great rewarding opportunity for me and my staff to mentor and coach those individuals. But then what the town ends up experiencing is different design styles that vary on personality from semester to semester, varying levels of quality and consistency. And so at this time, one of the things that I am trying to create is more brand consistency and a visual identity, as well as implementing some more digital engagement opportunities that just require some hands-on assistance with.
Questions? Mr. Nord?
Thank you. With the current expense of outsourced folks that you want to bring in-house, will this be an overall cost savings when that happens?
Well, currently, Cultural Arts and Parks and Rec both budget for outsourcing 2 of our largest publications, which is the Activity Guide and the CDM newsletter. And I believe that the salary for this person, the graphic design person coming in, those contracts make up almost half of what we would be paying someone. And then thinking about what we want to do to increase activity and increase engagement opportunities with our residents, I believe overall we will experience a better level of service to our residents, to our internal departments across the enterprise. One of the things that my team has done since I began is really working closely with our internal, like the department heads. My team met yesterday. I'm really working closely with, for instance, facilities management on their strategic plan and playing the internal consultant role, representing the voice of the citizen at the table as we're having internal conversations and asking questions and moving through some change management processes that I don't believe were really in place prior to the changes that I brought to the department.
And does that cost analysis also include the additional expense of and stress on the health and dental fund and other benefits? Or is that strictly just salary?
Strictly,
Yeah, go ahead, I'm sorry.
I was going to say strictly salary. That's how I
Correct.
figured it.
When the finance team, the budget team prepared the budget, we of course calculate the impact of salary and benefits on every position, and that's what we incorporate into our budget projections. I do want to mention, just kind of reiterate what Ms. Olafson had indicated, is when she was hired, council had for a few years identified enhanced communications as a preferred strategy and a priority, things that they had hoped we would do to be more proactive and such. So I did ask Kathy when she was hired to spend some time getting to know the organization and then how we can do better in our communications. And so she did exactly, and then identify after some time what would be a preferred organizational structure for her department. And that's what is incorporated in the budget today. And one of the things, for example, that was accomplished this past year, and I think it's probably identified in the narrative, is the website improvement, which addresses the ADA issues and significant improvements in our online status, I guess, online process. So those sorts of things I think we can see and do more of in the future. So that's really why we're presenting the budget we're presenting today.
The concern I have with the new staff that's going to kind of build the brand, I completely understand branding and, things need to be consistent across print, web, everything. That I understand. My wife, that's what she does for a living for a number of decades and with some pretty huge name companies. But, it's always been through a company that can bring in experts that know print, experts that know web, because finding that skill set in one person that's an expert across all these areas, I think is going to be a challenge. So, consider that in, your decision, because it's hard to find an expert in everything. Oh, and one last question. You talked about increased community engagement. So there was a community summit that happened before you started, and that got a lot of response. And I thought it was well received by the public because they got to give their input, not just on the items that we wanted to talk with them about, but it was very broad. So they could talk about, anything in this budget, essentially, they could throw out as an issue, not just narrow to, what do you think about the underpass or one issue. So I would like to see more of that type of engagement come back. Thank you.
I appreciate hearing that, Mr. Nord. And I think we've talked a little bit about it in the past, but maybe not. We continue to engage with Zen City as well, and we're exploring different ways that we can survey residents on maybe topic specific, or other ways that we can engage and get some feedback and input from residents. So we're on the same page.
Zen City isn't actually interacting directly with the folks. I like the more personable things where we did it in person. People came in and it was more like that rather than tracking their moves on social media and posts.
Yeah, that's just one
I
tool,
disagree.
but in our toolbox for that. But I appreciate that.
I think that, if I can just speak to that, what Ms. Reese is referring to is more than just tracking that services that Zen City offers. And I'm actually in the process of researching several opportunities for digital engagement. One of the things that I really believe is that we need to be providing a variety of ways for people to engage in us. Not everybody likes to come in person. They will share information or their thoughts or feelings where they're at. Lots of people live right now with their phones in their hands. And so I agree that we need to provide, some in-person engagement opportunities, but I'm also looking to supplement those with digital interactions that will allow people to voice their opinions across the community, so that we really are gathering perspectives and thoughts and feelings from people from across the community and not just, pockets.
Ms. Smith?
Could you, for the sake of someone who stopped expanding into social media some time ago, list some of the social media platforms that you're now working with?
Yeah, the ones that we interact, we did a survey last year. The ones that we interact mostly with are, we have Town of Normal Facebook account, the Uptown Normal Facebook account, the Children's Discovery Facebook account, and Parks and Rec has its own Facebook account. Each of those entities all have corresponding Instagram accounts. We have Twitter accounts. Normal Fire has Facebook, Twitter, and Instagram. Police as well. I'm missing. So I think Aquatics has its own Facebook presence to keep people informed about things. So we are researching right now and consulting back with departments. Some of our department heads want us to post every day. And one of the things that we're doing is consulting back with them to say, the algorithms continue to change. They flex and change. And one of the things that we're learning is that posting every day or posting at the same time every day actually punishes us in the algorithm. So we're trying to stay on top of that research and information so that we can get the best engagement possible through those social media outlets.
So when you mentioned 12, you weren't talking about 12 different social media products like TikTok and...
Oh, no.
I've just used up my knowledge
No.
of new ones.
Currently, the town does not have any TikTok or Snapchat accounts, of which I am aware. We do have Facebook, Twitter, Instagram. Nextdoor is another good example. We've tried to be more proactive on Nextdoor this fall. There's some limitations with Nextdoor because it's more neighborhood based and they don't want you in your business, and so they have to come look at our posts. So we would love to find, Town of Normal ambassadors in each of our neighborhoods so that they could help share our information in those types of groups. But again, that takes some, time and resource to identify who those folks are and all of that. So I'm sure I'm missing, we have a YouTube account as well, several YouTube accounts.
And how are you tracking the effectiveness of these outlets to know whether or not it's worthwhile to continue or to pursue a different avenue?
So that is one of the services that we use Zen City for. They talk, we actually meet with them regularly, about once every 2 weeks, and they serve primarily municipalities. So we learn a lot from interacting with those Zen City staff, and they look at the sentiment of our posts and help us. We use that as a tracking mechanism, impressions, people reached as well. But we pay particular attention to, sentiment and how people are feeling. They help us identify maybe pockets of misinformation where we need to change our messaging, and we have done that using that particular service. And because they serve primarily municipalities, one of the great things that my staff has benefited from is some things are happening on the East Coast or in other municipalities before they actually start happening, here in the Midwest or in Central Illinois. So they'll prepare us for, some things like for instance, in November, December, we had conversations about there's going to be an uptick in conversations around COVID, and you're going to be experiencing these kinds of things. So we have those kinds of conversations with them. But again, they are our social media tracking tool, and we partner with them very strongly and appreciate that service.
Have you found any particular tool more effective in combating the misinformation that is predicated by some platforms? And if so, are you seeing success in any area where a rumor starts flying, and before you know it's got a life of its own?
It is hard to wrangle those pockets of misinformation, but when we do identify them, then we try to change our messaging appropriately to address that. And we may push information, out to you and suggest that you share it through your circles of influence as well. We've done that a couple of times. People, I think, have to make, individual decisions about what they're willing to share or not. But there's no secret sauce that we've found, or I think that anybody has really found, to combat that misinformation. If we could find that, that would be great.
Thank you.
Mr. Preston.
Thanks, Mayor. Want to revisit a question that was asked just a little bit ago and make sure that I understood correctly. For the graphic design and multimedia new position, the savings for that work that has been contracted out up to this point, that savings is primarily going to be reflected in the cultural arts and Parks and Rec
Yes.
budgets because of their publications. Is that right? And there's nothing that I should be looking at in the communications budget here from the actual, or the estimate, I guess, for that matter, from the past to last in this current fiscal year, that would be tied to contracting that out, right? That's all in other departments.
That's all in other departments.
Okay.
Currently, and my staff has traditionally project managed those efforts when they have gotten outsourced. Particularly the activity guide is a good example of that. And certainly, when you outsource, that is also a time commitment, and takes some oversight and resource investment as well.
And what
internally.
about the other new position, the digital and social media? Is there any savings to be reflected anywhere from work that has been done up to this point? This new proposed position would take over, or is it all new work that hasn't been
It's
handled up to this point?
a little bit of both. I mean, some of that work is being done now, and the analogy I shared with Ms. Reese around this particular position is right now, because we have such a preponderance of social media accounts, and we have done audits on those. We've looked at slimming the number of those down, and we've weighed the pros and cons, and we've kind of landed on this is probably the right amount for right now. But because we have so many, what my staff is doing right now is we're basically keeping the barn doors open. To do social media really well, and if we really want to engage with our residents and citizens in that way, and to do a good job of that, we really need somebody who's living and breathing that and engaging and answering questions as they come in. Certainly my staff tries to do that currently, but sometimes, questions go for periods of time before we can get to them and get them answered. There are also things that so I likened it to right now we're keeping the barn doors open, but if you walk in our barn, the chickens and hens and pigs are sort of running around loose. And I think we could be having a much more organized and engaging presence that would be like a barn tour. That would be a really great experience for people. But right now we're just doing the bare minimum. And so that is all new.
All right, thanks.
Mr. McCarthy.
Thanks, Mayor. Thanks for the presentation. At the outset, I just want to compliment all the improvement in public-facing materials that we've seen. We've seen it in finance presentations. We've seen it in PowerPoint presentations. For the most part, making somewhat complicated information a little bit more easy to digest for our residents, a little bit more lay-friendly. Those were changes that I hadn't anticipated. Certainly, we all talked about social media and communication when we talked about adding your position and the notion of communicating better as a city. But that fundamentally is provided an elevated level of service to our community because they can more easily consume the information about how the town is doing, where we are financially, and the like. And that was a wonderful, unexpected change. And so I just wanted to compliment you on that. I also appreciate that from a sort of backseat position, watching our communication efforts systematically begin to address multiple communication channels. Certainly, social media is important, and there is a ever-increasing demand for information, for two-way communication, for comment on those channels. But there's plenty of people that don't. And so you taking target at our website as a more easy and accessible storehouse of information, and that is a launch point for our new smarter city operations. I'll label it all as that, CIP and those type of tools. I've heard quite a lot of compliments actually on the website and the ease and the accessibility of it. And so some great work so far, and I'm looking forward in dynamic ways that some I hadn't anticipated. So I'm looking forward to that continuing. Having said that, I assumed at some point we would see an increase ask for staff. And I agree. I'm guessing all of us have certainly heard some criticisms of our social media presence, but it's part of when you start focusing on something, people start paying more attention to it, and they have opinions pro and con about that. And so I'm actually pleasantly surprised to see that this is where you're asking for increase in staff and funding support for, because of any of the communication knocks that I've heard. It's been in these arenas, and so I'm glad to hear that clearly you guys are in tune to that in the communication department, and that you're choosing to focus on that. And I guess the last, as we consider budget for communications, is you're in a good position and a difficult position. You service the entire organization, and as my colleague, Mr. Preston, just pointed out, is work that you're going to do and expense you're going to do is going to save some other department money. And it's also going to help drive participation in programs, and it's also things that aren't directly reflected in your budget, but certainly cost is reflected in your budget. And that's one of the difficult things. It's you're up front and your work is highly noticed. So is your expense, even though it's helping out everybody else's budget lines, revenue and expense lines. So I just urge my colleagues to keep that in mind, that although there is certainly in our mind when we were talking about communication, an external town to consumer, town to resident, the town to town service that your organization provides comes at a cost. Thanks.
Thank you for those comments, and I would just add, I think that the department heads have been really welcoming, and sometimes they aren't. I've worked in organizations where sometimes people don't want you to get, quote unquote, in their kitchen, but they've been really welcoming and inviting my team to the table. And a couple of projects that you mentioned, my team has played a really pivotal role in. That is the open data portal and the revised community investment plan. Again, when people are really close to their work, they know a lot of information, and sometimes they need someone to help them consult and take a step back and look at it from the citizen perspective. So my team is really pushing that.
And just a second further, Mayor, on that is that's an excellent example of that's hours and dollars absorbed by the communication department that isn't directly related to some revenue source. But certainly the CIP, we all agree, is greater transparency and greater service to our community, greater accessibility and transparency that we all were hoping for when we talked about here. So a wonderful example of absorbed hours and costs by communication with no associated revenue source, but certainly helps out the entire community. Thanks.
Ms. Lorenz?
Yeah, thank you. On a light note, I would say don't take the keys away from the person at the fire department who has the really clever making tacos versus eating tacos.
Yeah, I loved that particular analogy.
I think that one went viral.
Yeah.
And maybe even turned up on a TikTok.
Yeah, Matt does a great job.
Okay, so yeah, keep that person going. So on the staff additions, you indicated that, and this has been said before, that the cost associated with outsourcing the activity guide and CDM will pay for about 50% of these new people.
Mm-hmm.
And that you're justifying the other half by saying that they will deliver a better level of communication. Can you say, what metrics are you looking for in that better level? How will we know if they are in fact delivering that?
One of the things that one of the things that I want someone to come in and take ownership of is that consistent visual presence. And so since right now we rely on our interns for a lot of that social media collateral, I think you'll see more consistent campaigns and consistent use of some images over time. And so that is a metric that I would be looking to review with Ms. City Manager Reese. Also, one of the things that Mr. Nord said, we are looking for a little bit of a jack of all trades, particularly with that graphic design and multimedia specialist. We have started preliminary recruiting for that, and the candidates that we're seeing are really strong, particularly in the ones that are coming right out of school, because it's not just graphic design anymore. It's animation, it's video, it's all of the things that you need to have a fun, presence on social media that's engaging, that take time and while again, we have talented interns and I applaud them and I like to have interns, the inconsistency from, internship to internship is something that I'm looking to shore up.
Okay, so are we going to have interns anymore, or is this new staffing model going to replace that?
Currently, we would be reducing the number of interns that we currently have
Okay.
following this change.
Will there be a savings in staff time associated in the CDM and Parks and Rec and maybe even Public Works that might have been, doing some of this graphic design and digital engagement?
So I've talked with, for instance, the folks at Cultural Arts at the CDM, particularly their newsletters. I've offered that if we bring this, resource internal, I'm positioning the communication and marketing specialist to be more of that in that project manager consultant role, and they can take on a lot of writing of the content, making sure the threads of communication are consistent from communication medium to communication medium. So that is a possibility. Again, not wanting to step on staff members' toes. So that's something that we would have to negotiate with each of those, department directors. But
So right now, there's no offsetting staff reduction as a result?
currently, a CDM member oversees the outsourcing of the newsletter. I think she has expressed an interest in still, participating in the creation of that when we bring it in-house. But currently, we do outsource the activity guide, and that is done through my department. The project management of that is done through my department.
Last question, did you price out an agency approach?
I didn't price out an agency, but I did use the project consultations that we use right now when we outsource work as a guide.
And why didn't you look at an agency approach?
I felt like what we need, even when you use an agency, and I have worked in organizations that have outsourced through agencies previously, my feeling is what we need as an entity and as an organization would be better served but by an in-house resource.
Okay, thank you.
Further questions? Mr. Preston?
Yeah, just one more follow-up based on a comment I thought I picked up but wanted to clarify. On the, I think it's the graphic design multimedia position, did I hear right that the recruitment process has already started for that, or did I misunderstand what you were saying?
Yes.
Okay. And I assume that that process won't be complete until a final budget is passed and approved. That would
Well,
reflect the
No, that particular position would not be a safe assumption. I had talked to council members last fall about working toward a staffing model to start adding some staff based on kind of our where we were at the time and growth model, things like that. So, or our growth status. So some positions we've moved forward with and will have some costs incurred this fiscal year. I believe that position we're referencing, the graphic design one, I think is currently out.
It's posted.
So it may be filled before the fiscal year is out. Ideally, depends on the candidates. But again, just kind of stepping back a little bit, all the staffing additions that we are incorporating in this proposed budget is an attempt to get us back not to the 2017 level. We still would be short of 2017, but to get us to a staffing level that we believe is more sustainable and helps us meet the goals that we're trying to meet. And also I do want to point out where this day is going to present a great opportunity for each department to talk about their staff. But in terms of the overall budget process, we all, council and staff, have the same concern. I'm like, what are the costs and the ongoing costs? And we're presenting a budget to you that for all 5 years meets our targets, even with this staffing model. But again, if circumstances change, then we will pivot quickly, as we always have. In addition, the budget that you see also predicts that every position is filled through the year. And we also know that there's a number of opportunities of attrition or delays before we fill positions. So I just wanted to throw that out.
And as a follow-up, if the position is filled prior to the end of this current fiscal year that we're in now, where do the funds come from that are paying for it?
When council approves the budget, you would see the changes in current fiscal year, but also with the final budget amendment that comes to council in July. Is that accurate, Mr. Hume?
I'll just, Mr. Nord, go ahead.
Along that same line of thought, if I understood correctly, this new position was something that you spoke with a few council members about. The position has been created and now we're looking to staff it all in this past budget without a council vote for a new position being created. Do I understand that right? That's what happened?
I talked with 6 council members about a staffing change.
And there was no council vote to create a new position?
No direct council vote, that is correct.
That's over $25,000. That seems
Mr. Nord,
out of
under a
order.
council manager form of government, the manager has that opportunity to do that without formal action.
to create new staff positions. This isn't filling a vacant position. This is creating new.
Yes.
Okay.
I will point out, though, that overall, when we get to the budget year, and we can talk about this when Mr. Hune comes back up, or even Ms. Keir to talk about the human resources budget specifically, but we have a lot of vacancies. So where we're at current fiscal year with salary expenses and benefits is not, there are associated savings, but elsewhere. So I just want to tell council we've had a lot of staffing changes this year in terms of vacancies.
So for a closing comment on this, I would say past councils and this current council has had as a high priority a desire to see our communications to our citizens be stronger, more consistent, more reactive to issues in the community. We can't ask staff to do that much more work with the same people. We just can't do it. So I'm supportive of these positions created, so our message to our citizens is stronger and more consistent and accurate. I think we just need to do that. So, thank you. We're going to take about a 10-minute break here.
So is mine. I'm gonna run down and get some more. Not at all. I don't think you want a purple felt, so I'll go.
I'm not particularly right.
big budget. I do want to point out to council, again, I appreciate the opportunity for department heads to talk about their staffing level. I think that's a good benefit of today's discussion. I do want to point out, though, just so there's not confusion, I did meet with council late last fall, early last fall sometime, to talk about staffing concerns and staffing needs, and talked about incorporating, starting to build up some of those positions that we needed. And I just want to point out, fortunately, in our open data portal that we just reviewed recently and rolled out our financial information, it conveys the same information that I believe council receives on a monthly basis, reflecting where we are at with compared to our annual budget. And just to hopefully bring a little bit of context in terms of where we're at this fiscal year, and again, this is in our open data portal. So far this fiscal year, our salaries and benefits are currently $3.3 million under budget. So starting to incorporate and add some of those positions back, while adding some expense back into the general fund specifically. What you're not seeing is all the savings from vacancies, from attrition, things like that. So I just wanted to point that out, because we're all on the same page in terms of being cautious about where we're at financially and the addition of staff.
Thank you. Go right ahead, Angie.
All right, good morning. The clerk's budget is not super exciting, so I will say that we are primarily status quo on our budget, not a lot of changes, a couple of slight increases in line items for just the price increases that we're facing with service agreements or supplies in general. Two items to note. Last year we were approved during the budget process for the restructuring of our department. Primarily that was to deal with the ever-increasing demands with FOIA. We were able to get those positions filled and begin that work. And then the other part of that is our ongoing prep and maintenance of data. I know you guys have seen screenshots of the internal data portal for the council action reports. That is information that my staff worked to provide, and will continue to provide those data sets as well. The other line item, just to make a quick clarification, would be our travel and training. In 21-22 and 22-23, we had higher travel and training than usual. At the time, I had a staff member that was going to pursue some legal certifications to help with her duties in working with FOIA. She has since taken another position within the town, and her replacement came with some of those same certifications. So you'll see a decrease in the out years for some of our travel and training. I do expect that to go up slightly just to accommodate three people doing training as opposed to 2 in the past, but not as significant as you see in the 21-22 and 22-23 years. Otherwise, everything's pretty basic and easy to explain. If you have any questions, I would be happy to answer any.
Questions for Ms. Honker? Thank you.
Thank you. Mayor.
Oh,
Sorry.
go ahead.
I have one, just out of curiosity. How is, and it is probably in part, at least an anecdotal question, but how is the transition been with not having a receptionist up front on the second floor? Because that was something I know we talked about in budget cycle past, and just didn't know if there was any feedback on that, being as that's the first interaction that any visitors would typically have had.
Sure.
Coming into City Hall.
So 2 factors that kind of come into play with that. First, just addressing the incoming phone calls. At one point, the receptionist answered the phone for the entire town under the 2444 phone line. We implemented more of a phone tree system with multiple people in each of the departments being allowed to answer those so that calls weren't getting put into voicemail as often. That's working well. I don't know that I would consider it, or Ms. Reese would consider it ideal compared to that one-on-one that we got with the receptionist, but it is working, it is getting the job done, and I don't think that people are waiting to get where they need to be from that. From a walk-in perspective, it has posed slightly more challenges. With when COVID shut down and we were not open, it was kind of, we didn't have that traffic, so we didn't get an immediate visual into what that was going to look like. As we started opening up slowly, we were recognizing that without that front person, people come into City Hall and they're not really sure where to go because you can't immediately see a person. So I worked with facilities and with administration to make some modifications to my front office space. I think some of you or most of you have been in to see where we opened up a wall to create a service window and made some modifications to what was our admin facing counter. And we will be installing a workstation there so that you will have a visual person when you walk into City Hall. We're just waiting on furniture. As with most things right now, the supply chain made what would have typically been a 3 or 4 week project turn into a 6 or 7 month project. But we do anticipate once that furniture is installed in a few weeks that having that visual person available will take some of the guesswork out of people trying to understand where they need to go. In the short term, we also implemented a doorbell system that rings in multiple offices on the 2nd floor. So we work with each other to make sure that we've got coverage and that people know that, if that bell rings, somebody needs to get up and go greet people.
Ms. Smith?
I see you mentioned specifically the Just FOIA software. Is that an internal project or is that off-the-shelf software?
That is an external software platform that we purchased.
And how do you anticipate that will ease some of the burden that you're experiencing with FOIA requests?
Well, since my start with the town, it has eased it significantly because we were still manually redacting with Sharpies and doing triplicate copies of every FOIA that came in. So from my beginning with the town until the last couple of years, the software has redaction modules. We can capture all of the files, the responsive documents within a request number as opposed to having to set up separate file structures. Same with denial letters or any clarification or notices of additional time. Those were all separate file structures. And now everything is tucked in within its one request. So we can basically look at that audit history from beginning to end, and every piece or part of that response is going to be within that request number as opposed to a series of share files.
What's the trend line for FOIA requests that you've seen?
Right now, I would say our biggest hurdle is what we call the any and all communication requests. In the last 3 to 4 years, we've seen a significant increase in those types of email requests or, emails, texts. Those can, based on the timelines given in a request, that can yield an initial pull of 10,000 pages. So we try to work with requesters to narrow it down when they're willing to work with us so that at least that initial data pull, maybe we can just keep whittling it down. But at the end of the day, it's not uncommon for us to have to review 2,000 or 3,000 pages of email to pull out 500 responsive documents, and that's real time.
And that's what I wanted to point in. Although we have FOIA software that helps with the pulling and the managing of the data, it still requires staff to actually look through every page and every item.
Usually multiple times. Yeah. And they will also say, just as an addition to your note, Ms. Smith, Body cameras is still also an issue. While we have not had a significant increase in the amount of body camera request videos, it is a more constant than it was. It was unheard of 3 or 4 years ago because we didn't have them. And that does continue to play a part in it as well. When you think about an instance where that you might have 6 officers with 2 hours of body cam footage, it's not just 12 hours of our time to review that. It's 12 hours of our time to review it, and it could be an additional 6 or 7 hours to cut sound out, to blur individuals or blur identifiers such as license plates out of videos. So it's usually about double the actual amount of a video that it takes us to process those.
Further questions? Thank you, Ms. Hunger.
Thank you.
Brian, you're up.
All right. Just real quick before I talk about my budget, I wanted to get to Councilmember Lorenz's question about the pay raises. I went and pulled the ordinance at the break. The Illinois Municipal Code limits pay raises to a certain amount of time before an election. This was passed in December of 2018, which was within that timeline before the 2019 election. So everybody whose term of office started in April of 21, the pay raises went into effect for that, those council members, and then for those who will start after, so after the next election, the next term that starts, that pay raise will go in for the remainder.
Thank you.
All right, the most exciting budget in the entire town. In the 7 or 8 years I've been here, I think I've started off this every time saying it was a status quo budget. This year was almost an exception, or almost the same, but with the minor exception of, as Ms. Reese noted in her communications to you, the plan to add an additional attorney in the legal department, which will be reflected in the final budget. Outside of that, it is pretty much a status quo budget. There's a slight increase in the publication and subscriptions line item. We're looking at, one, our LexisNexis contract will need to be either renewed or replaced with something else. So we're expecting those prices will probably increase. And we're looking at increasing our, what we call horn books, just our materials that we rely on for addressing our legal needs. We've got a significant number of materials, but the world keeps getting more and more complicated. And like one of the things that we're seeing more and more is technology contracts. We're dealing with more and more of those. Just FOIA was one of the examples of call it a software as a service contract. And so constantly keeping up to speed with the emerging legal trends. We'll be adding some more materials to our library. Other than that, it is a status quo budget, except for the additional attorney.
Questions for Mr. Day?
Mr. Day, when is that attorney being added? Is that going to be added this year, or is it being planned for the proposed budget?
I don't know that decision has been made yet.
Well, I guess I can jump in. In a matter of practicality, hiring legal counsel likely wouldn't occur in February or March because that wouldn't give us enough time to recruit. So at the earliest, it would be April of 2022. And I might not have been clear in my memo, but I tried to point out that that position would be incorporated in our final budget document.
So
And
it's
that
not
for
here.
next fiscal year.
So it's not reflected in the numbers we're looking at here?
Correct.
Okay.
Further questions? Thank you, Mr. Day. Oh, I'm sorry.
With that additional position, is it reflected in any of the out years?
No, it's not reflected in the budget. Ms. Lorenz just asked if it's included in the budget. It is not. It will be incorporated in the final budget because this was a relatively new recommendation.
Thank you. Thank you, Mr. Day.
Thanks.
Ms. Wisman.
Is it morning or noon? I can't tell. I think this is the most exciting part of the budget. We'll just go ahead and say that. Cultural arts has had a very interesting couple of years. We've been impacted by COVID and by the rather understandably but restrictive guidelines that Restore Illinois had in place specifically for recreation indoors, specifically for high-touch activities like you might imagine at the Children's Discovery Museum and at movie theaters. So budget is page 134 to 139, but before you flip to that, look at page 73. And what you're going to see there is the federal grant line at the very, very bottom. Of that amount, you're going to see it's not broken down, but it says $668,497,000. Of that amount, $620,997,000 came directly from the Cultural Arts Department. We wrote a federal grant. I would argue we fought very hard to be eligible for a federal grant, not only for the Children's Discovery Museum, but for the Normal Theater as well. And an outcome of that, I think that we're very proud of, and we hope that you understand through this lens, is, you know, the federal government sent COVID relief to the private and public sectors, targeting those that had been affected in a very negative way during COVID, but also they sent, you know, government support for the municipal ARPA funds. This is not ARPA. This is something that the government said we need to support cultural jobs in the private sector as well as the public sector. And so I believe it might be the only non-ARPA COVID relief funding that went to the town this year. So we're excited about that. We worked very hard and we were happy to bring that home, in part because we had big losses, as you know, over the last year. But we also had really big wins. Children's Discovery Museum, by the end of this fiscal year, will have served 85,000 people. And considering we were not able to open to the public until May of 2021, and that reopening was very limited, and you can imagine the public was slow to return. We're very happy with that number. That affects revenue, but that keeps getting better. So we started with our return around 20 to 30% of the typical year, and right now we're at about 65% of a typical year. At the theater, that is about 56% of a typical year. All of that being said, we are seeing growth. We're seeing a really positive interaction with the public. We have had a really strong board with our not-for-profit foundation, and they have been really working hard to make sure that they can support us in our need. Our store, our gift shop, outpaced several months towards the end of this fiscal year, especially during the holiday season. We actually outpaced ourselves from pre-COVID times, and December at the Normal Theater in this year outpaced pre-COVID December 2019. So there is really good indicators in front of us. There are indicators in front of us that would suggest that the public is very ready to come back, and as they feel comfortable, and it's especially for the youngest children who are not able to be vaccinated right now, as those protocols and rules get into place and schools start helping, you know, set the pace for our youngest learners, I think families are going to start to return. And that's a nationwide trend. We're not alone in this by any means. Just looking at the budget and moving forward, there are several things that are coming up. The local need for STEAM education and catching up for students in our community is not getting smaller. It's significantly larger today, as we know. So we are really thinking about how we're going about our STEAM education outreach. We are actually working with District 87 and its COVID funding that they are giving to us to help offset some of their needs for 4 weeks this summer. We're working with Unit 5, of course, with after-school programs, and our early childhood education has been growing. That's an area that before COVID, we were actually struggling with at times to figure out what the programming needs were for families. And I think COVID and remote learning really made families have to investigate their local options a little better. And they found us, which is great. So those programs are selling out, and we're actually having to add sessions. So all good indicators for the next year. At the theater, the strategic plan that we're putting in place, we're working on expanding use for this space that was designed pretty much only for a movie theater, and we want to use it for a lot more than that. We're already doing that in a cobbled together fashion, but we would like to have a strategic plan for that and increase that site's relevance, not only for its performing space, but its historic, position that it has in the community. In the bicentennial year of Illinois, both the Normal Theater and the Children's Discovery Museum were named among the top 200 significant buildings in the state of Illinois. So we want to take that very seriously. There are new positions that we are highlighting. We have one under the Children's Discovery Museum budget. It's called Guest Services and Support Coordinator. We had 9 full-time staff in 2017. We were hoping to bring that to 8. We've been doing a lot with a lot less. We certainly have been called on to do more, and we are meeting that, but we have people wearing multiple hats, doing lots of things. And the graphic design job, the question asked about work in the Children's Discovery Museum, we have a staff person who has taught herself how to do a lot of those things and is doing a lot of that work on top of a growing job that she has for regular customer service support and maintaining dozens of part-time employees. So that will be a relief for that person. They'll still be able to continue to have input on the newsletter, but the sheer number of pieces she's creating and having to churn out on a regular basis on top of her regular job will go down significantly. And she's a big part of our strategic plan, like how we move forward and how we keep making adjustments post-COVID. The position will serve not only the Children's Discovery Museum, but we are actually writing the job description to improve services for cultural arts in general. Something that we really experienced in the last year with reduced staffing is as we came back online with our community events in Uptown Normal specifically, and with the museum, that we don't have a bench. What needs to get done if it's not getting done during regular hours, and as you might imagine, festivals and events rarely happen during regular hours. We're doing all of our regular job, and then we're doing the other stuff on top of it. So when someone gets sick, and with COVID, and you were out for 7 to 10 days or 14 days in some cases, I'm out there cleaning, a water bucket with bleach. We don't have enough of a bench to be able to call on support to get that done in these unusual times. And so we are asking for that position to be restored, not only for the Children's Discovery Museum, but also really for the larger department. We would be more efficient in the use of that person, and I think more effective, knowing that our department is growing as far as how we're serving the public. The other thing that's happening in community events, you'll notice just some new activity because we are absorbing the Connie Link Amphitheater. I'm very excited to do that as a local performance venue. We have people in our department, obviously, who are very experienced in doing this. And there was an opportunity with the retirement for us to do this. So we have asked for a full-time position, a civic arts specialist, to actually start partially in this fiscal year, going into the new fiscal year as we take over that operation. We do anticipate there will be new revenue streams that we can take advantage of. And we will increase the use of that facility and look for new and different ways to do that. And that person will also, again, help fill that bench so that we're not the only ones juggling the same projects within the same team. The same team that is performing today is the same team that's been performing for the last 4 years with increased needs and increased stress and limitations. So we're confident in our request. I think that you will see a good return on investment as far as quality of experience and increased programming from the Cultural Arts Department. And then I don't mention the visual arts strategy in this piece, but that will also give us time to spend some energy on that appropriately with public outreach. Public outreach, as you know, takes real time. It is not an easy process. It's one that we are committed to. But with the help of the communication staff and with our cultural arts department staff, the new staff, we will be able to achieve that. And that will be for generations to come.
Questions? Ms. Smith?
So as part of your strategy for bringing the Connie Link Amphitheater under the umbrella of your administration, what calendar do you see that being used, from what month to what month?
Typically, we're looking at May, maybe even into October, depending on weather, but that's pretty typical. But because we already work with Parks and Recreation to get access to the CAC for indoor opportunities, we also have the normal theater for indoor opportunities that might be able to complement that space during bad weather, for instance.
And you see it more fully utilized than it has been. When you've got theater groups using it, they typically want to have their rehearsal times at the same venue where they're going to be performing. Do you have an alternate location for them so actual performances can be done?
Yeah, and that's part of what they do with the CAC. They already do that. As this program has existed through Parks and Recreation, they use other sites as well. But yes, the normal theater could also be an opportunity for rehearsal space.
Okay, thank you.
Mr. Preston?
Thanks, Mayor. Just a question, I believe you touched on it briefly, but can you help me as I'm looking presumably at the CDM page on 135, maybe it's a different one, any savings that will be reflected from the additional graphic design position that we talked about in communications, where would I find that reflected in one of these line items?
Under the advertising line, we go down $10,000, and that's right off the bat. So that's an immediate savings. I anticipate we could see other savings because, again, we have a full-time person who's not employed to be a graphic designer doing an awful lot of graphic design work. I would love to have her time and attention on other things that are very important and also generating revenue. So there will be other savings. I just can't actually illustrate that for you yet.
Thanks.
Mr. Nord?
Thank you. For the community events, that budget is increasing by 44%, or $149,000, it looks like. This was because of the Connie Link Amphitheater person.
Yes.
That's a venue that, you just said was only a few months out of the year. That seems like a significant increase.
This person will work well beyond the Connie Link Amphitheater. That will be a main venue that they are managing, but they will actually be serving the entire cultural arts department with programming. Again, we have the normal theater as an indoor opportunity, and events don't just happen when they're dated on the calendar. It takes months of planning and organizing, again, bringing collaborations together within the community. That's real time, real people time. So this person will be working on that. So building relationships and improving who has access to it. I mean, that's one of the challenges, I think, for any public performing space is how do we genuinely and authentically bring people into that space to share their talent and to take the opportunity if they don't feel welcome or they don't even know it exists. And so that's part of the job.
How much was Parks and Rec spending?
I wasn't in charge of Parks and Rec's budget, so I can't speak to that immediately, but I'm sure it's reflected in.
I would like to know, is this an equal offset? Are we just switching from Parks and Rec to cultural arts, or is this an increase?
Well, the community, I may have missed part of the question, Mr. Nord. The community events line is all of the events that cultural arts coordinates, and then Connie Link on top. So we're seeing growth
Music normal.
Right, made music normal. So I think this is reflecting
everything,
all sorts of events.
Okay, well, there's a $150,000 increase, and I know one of it's just a staff member. So of that, does Parks and Rec have an offsetting dollar amount that's equal? I mean, are we just shifting that expense from one department to another, or is this an increase to the overall budget?
I'll have to take a look and dig into that, and I'll do that in a moment. I don't believe $150,000 increase is just because of Connie Link moving under this line.
No.
So I'll explore that.
So community events is everything that we do that isn't specifically inside the Children's Discovery Museum or part of our film and regular programming for the normal theater. So part of why you see growth is because in 21, of course, we could do very little, and in 22, that is a humble amount for the amount of work that we did. If you look at our list of events that we were able to put on with that small budget, all of our Roundabout concert series, participating and supporting the Craft Beer and Jazz Festival, which also, by the way, is a fundraiser, putting revenue back into the Children's Discovery Museum, Sweet Corn Circus, Make Music Normal, Oktoberfest, which was a fundraiser for Rotary, Day of Play, which is a big event for the Children's Discovery Museum, all of our town and gown opportunities that we worked on, not only with their homecoming, but with other activities that we do with them. Sugar Creek Arts Festival, Treat Feast, our Uptown partners that we work with, we regularly meet with them and collaborate on opportunities that would bring people into Uptown for their benefit. But it's definitely much bigger. I mentioned our collaboration with the Office of Sustainability and Ecology Action Center at ISU, with our Water Monster program we introduced last year. That wasn't very expensive. There was some real time of people being out there, but those are just some examples of what we do. So this person that's coming on is honestly just going to help us better manage the things that are continuing to grow in our community. And as we look at the visual arts plan and we look at opportunities to expand cultural arts beyond Uptown, again, we don't have a bench for that. So we're working on improving that.
And I appreciate that. Thank you, Ms. Wisman. Mr. Nord, we'll continue to explore. In this part, for example, I have looked real quickly at the contractual services line, for example. There's a $50,000 increase. My notes indicate that 29,000 of that 50,000 came from Parks and Rec, so you see a $29,000 reduction there, and an additional 13,000 from the high school summer theater, which would have been a Parks and Rec program, got moved into this account. So we'll just double check to make sure that there's the appropriate saving.
Sure.
And
So
the
then
same is true for revenue. We'll have revenue coming in from those same programs.
so that just comes down to essentially the employee. Did that cost, is that an offsetting cost or not? Thank you.
Ms. Smith?
One of the issues that our sister city to the south has experienced with booking acts for the Grossinger Arena and BCPA is that we're not on the main touring circuit for a number of entertainers. What type of entertainer do you see bringing into the normal theater and or the Connie Link Amphitheater, or would it continue to be local talent?
It's likely to continue, at least for this transition year, to be local talent. I mean, most of those are not ticketed events. There's not a revenue line that's immediately attached to that. We are looking for other ways to get some revenue for that, but it will continue the same track, at least for this coming year. But we are investigating some of those things, and that's part of the normal theater doesn't have the full capability of hosting a main headliner simply because we don't have a dressing room, we don't have a backstage, we don't have ADA access to the stage, things like that. So we're working on it.
Mr. McCarthy?
Thanks, Mayor. I'll be brief. Thank you for the presentation. Congratulations again on your awarding of your grant. Unique opportunity and hard fought, as I know. You spent a lot of time on that. Mostly just a perspective share is I applaud your creativity over the course of the pandemic. Your department's been particularly affected by this from participation and revenue. And I appreciate your creativity to go find money. And but also your investment in the department in terms of looking down the road to post, if there is such a thing as a post-pandemic world, but a return to more full operations, I'll say, and those investments starting to pay off in increased retail sales, in awareness in the early childhood community here locally to your resources available to them to help education out. And so we're starting to see that global investment pay off to support our entire community. And that takes a long-term view, a strategic view, and strategic investments, and it takes time. And clearly, you've been hard at work when you didn't have people in the house. You've been spending your time trying to figure out how to better the department and be a better resource and generate revenue. I just wanted to share that those investments aren't unnoticed up here. That we pay attention and we see that those things are starting to pay off and how you're serving the community. As somebody whose wife is in early childhood and seeing that starting to be noticed here in the community and that resource you starting to be used as a resource is wonderful reflection of that hard work. So congratulations and thanks.
Thank you.
Further? Thank you, Ms. Wisman.
Thank you.
Mr. Clinch.
Good morning. We are on page 142, the budget binder. For this year, facilities management, I would describe our budget as pretty much a status quo. We have put our efforts into budget management decisions to create a sustainable model, essentially, to minimize our expenses in the department and still maintain our core function and deliver what everyone has come to know as a typical level of service. And that is what this budget is reflective of. It does consider the other investments that are made internally to other departments to support ours, so we don't build in anything. We take advantage of the competencies of what we have here, which are quite remarkable. And it gives us a great deal of opportunity to launch our department, frankly. So I'm very appreciative of that. You will see in our budget, essentially what we have done is you will see whatever lines that can be flat, where we have control over scope. Essentially, we didn't put 2% escalation on anything that we would have a direct control over. So that would be types of projects and magnitude or what we intend to accomplish with the resources we have. The other lines that do show an escalation would be the ones that are typical with things that would have an escalation, such as services, supplies, that kind of thing. Otherwise, we are confident with this budget that we can continue to perform in the way that you expect us to.
Questions for Mr. Clinch?
Mr. Clinch, proactive, I see for your budget highlights for this coming year, kind of caught my attention, proactive winter event sidewalk pre-treatment without a negative budget impact. That sounds really innovative. What do you plan on doing there? And tell us how we're going to notice it.
Thank you. The first thing I'm going to do is pass credit off to INT. So that has come as a result of one of the applications that they built for us to be able to move into the smart city thing that is becoming real in tangible ways. And I like the way Vasu says that it's not flying cars. Smart cities are this kind of thing where you get to ask me a question and I get to say, those kind of applications are helping us make data-driven decisions so that the procurement process that we use, we have seen savings in the efficiency of that, and our staff has bought into the culture of accountability on the supply side. So it's kind of a cute story, but Ladine Finley, very competent supervisor, when we buy toilet paper, and we have a spec for this, right? And we say we want 1,000 feet on a roll. She rolls one out, and we found that we got 750 feet on a roll.
Oh my God.
So that's,
I love that.
this is smart cities at work, right?
Flying cars.
And so that's the kind of thing that we do to gain the efficiencies. So we go back to vendors and say, look, we're not getting what we paid for. We know that. And then we are able to track those savings. So to get to your answer is the savings that process allowed us to do. We didn't have to put money in. We said, look, we're actually trending where we're saving or project to save the amount of what it would take to do this pre-treatment pilot uptown to increase the level of service for budget neutral.
Nice. Good story. Thank you.
Thank you. Mr. Nord.
And who knew we would be talking toilet paper at the budget work session? So thanks, Mr. Clinch.
Our day is
Facilities
complete.
a magic thing.
I was impressed by that story about measuring the toilet paper. You know, something that I think might be beneficial for the community. You know, they might get a chuckle out of it. Plus, it actually shows a positive or gives a positive story. So maybe do a video showing how, you know, staff actually measured this and showed that we weren't getting what we paid for, and your accountability statement, because that's something that people want from government is accountability, and that directly shows that you're holding folks accountable. So kudos for whoever decided to roll out the toilet paper.
I appreciate that, and not to miss an opportunity, I have, it won't be about toilet paper. But so I've been at the town nearly 10 years, and it is remarkable as someone who has come from outside the organization to inside the organization to really be able to see how deep that kind of thinking cuts across frontline supervisors, frontline staff. It's just embedded. Like, it's so difficult to find an avenue to talk about saving 250 feet on a roll of toilet paper. Now, times every supervisor that we have in the organization, and there is so much intangible savings that you could never really harvest happening here. And it's a remarkable thing to be part of. I'm proud to be part of it. And we just have so many things going for us in that way. To speak again to another department, communications, without those folks, and talking about these things and transparency and all that, we have things like that. It's what we do every single day with every decision. If we replace a motor, we're going to replace it with a more efficient motor if we can. If we can't, we'll have a reason why we can't. Well, how do you tell that story? So that's why I say my budget includes the value of everybody else, because we're all in it together. And it's a remarkable place to work, and I'm very thankful for it, and I'm glad to be able to present a budget to you as the Director of Facilities.
There's a mic drop. Ms. Smith?
I just wanted to know if any cats were involved in the unrolling of the toilet paper, and if so, that really would make the video go viral. But seriously, do you contract with Mark First for any of the personnel that they have in training programs to use in your department?
Yes, we do. We have a contract for Mark First for Uptown custodial service. And additionally, we partner with the VOTEC program, so that we're trying to, we have volunteers, and we try through our operations to find ways to train people to make living wages in our industry, because most similar to everyone else, we're fighting for people. When you look at the average age of facilities managers, we need people coming in. And so, yeah, we do every avenue we can to help promote our industry selfishly, but then also to help people learn a trade that you can make a living wage with. We're doing that.
And that line item is under contractual services then?
Correct.
And about how many people are you giving jobs to
We
from
don't-
Mark First?
Yeah, so we don't have direct control over the staffing, but there's one person for certain that is a fixture in Uptown. I'm sure most people are familiar with who that is with Mark First. But we do manage the contract, and it's been, it's a terrific asset.
And I thank you for giving that opportunity to people who otherwise would not have employment opportunities. Thank you.
Well, and to that, I would say that it's equally beneficial to us because they are helping us, and which helps us present a budget like this, because it's a piece of it just as much as anything else.
Thank you, Mr. Clinch.
Thank you.
Ms. Keeger, up next.
Hello, everyone. Good afternoon. Yeah, I had to double check. You will find the Human Resources budget on page 154. I'll just share with you a couple of highlights before we get started. You guys are all aware that the HR department's key goals are basically to serve as advocates to employees, to provide a positive, healthy work environment through pretty targeted wellness and safety initiatives, to maintain a robust benefit program, and to assist all departments in recruiting and retaining successful employees. Some of the things that we've done in the previous year include continuing a strategic organizational response to COVID-19. We're all sick of hearing about COVID-19, but it's still very much a thing, unfortunately. We've drafted policies and communicated key information to town employees on these pandemic issues and performed contact tracing for all departments. It's been incredibly time-consuming, again, as you might imagine. The team has coordinated workers' compensation and unemployment fraud responses on behalf of the town. I mention that only because that has been another significant uptick in some of our time. The fraud response to COVID has been astounding, frankly. HR staff have also managed recruitment processes yielding high-quality candidates, including several large-scale processes for public safety and classified staff positions. Some of the things that you will see highlighted in our budget and that were highlighted in the budget memo, in the HR personnel services line, the vacant part-time office associate position has been filled. Hours have also been increased to full-time for the current year. In the contractual services line, I'll kind of remind you of some of the activity in that line because it does go up and down from year to year. The reason it fluctuates to that extent is that that is the line that funds several of our recruitment processes related to public safety positions, police sergeant, battalion chief, positions like that come up on a cycle. So some of them are once every 2 years, some are once every 3. So you'll see a little bit of noise in that line just to account for that. And then in our operating supplies line, that is where we pay for things like CPR and AED trainings for employees. So you'll see those funds there as well. I'm happy to answer any questions that you've got regarding our budget or staffing in general, anything like that.
Questions?
Mayor, I was just going to jump in, if okay, just to further explain the staffing. The Human Resources Department has traditionally been incredibly lean for this organization. I think we continue to be lean compared to many other municipalities, frankly. With 400 to 500 full-time equivalent positions, we have a HR department of 4 people. And we have had for a year a vacant office associate position. So because of our current situation of near constant recruitment, we decided to move that position, which had been 30 hours a week, to full-time. So we increased the hours a little bit, and that position has just recently been filled this calendar year, just starting this month. The person just started. So we're thrilled now to be back at full staff, and like any other organization these days, recruitment is almost constant.
Thank you. Ms. Smith?
Have you already have in place some digitized record and processes so that employees can maintain some of their own records and negate the need for staffing in HR?
Yeah, so I'm glad you asked that question. And actually, I don't want to steal too much of Ms. Gattaraju's steam. She may be planning on mentioning this during her discussion too. But we are actually right now having discussions with electronic content managers And that is a very, very large scope of work there that touches many more departments than just human resources. So I won't veer too far into that space. That's not really my bailiwick. But I will say in the places that we do have direct control, things that you might think of like benefits or, direct deposit, things like that, changes that happen on a daily basis that don't necessarily require a touch point that takes additional time, that we can kind of tighten that up efficiency-wise. We have absolutely done that. That is, I believe it was 2017 when we brought in the B-Swift program. So we're utilizing that for sure in the sphere of benefits specifically. But the more opportunities we can move to that employee self-service model, the better, we think. There's certainly value in maintaining staff for other things that do very much require that personal touch. But we found that filling paperwork is not the greatest value add for most of our employees in terms of the HR staff time.
I think we can move on to Health and Dental Fund.
Okay. This one, thank you for the setup, Mr. Hune. This is absolutely the bad child. So that's one way to characterize it. Thank you. So the Health and Dental Fund, it's no secret that this is a really, really challenging fund. It is on page 329 in your budget handbooks. Some of the shining lights of the Health and Dental Fund, few though they may be, I do want to remind council, town employees are very, very highly engaged in the wellness program. Wellness program benefits sometimes are hard to show in years of really, really horrible claim activity because it's difficult to show the ROI of something that didn't occur. So that is something that wellness programs nationwide struggle with. But I do want to share that employees do remain very highly engaged in that program. In October of 2021, during our health risk appraisal process, we did have 99% participation once again. That is all active town employees and spouses who are covered on that health plan. So people are very, very actively engaged in that program. So I do want to mention, in terms of our major claims activity that we experienced during the previous fiscal year, that was something that a lot of organizations experienced, again, coming out of COVID. Mr. Hune did a good job of kind of summarizing that. But in response to what we saw during that painful year, we did transition to a new insurance carrier. We left Blue Cross Blue Shield, transitioned to a TPA UMR with the United Healthcare Network. Part of the reason for us doing that was that gave us much more control over our pharmacy benefit manager. So not to get too into the weeds, but the PBM for a group like ours, again, Mr. Hune noted that specialty pharmacy is a major liability for our group. Doing that PBM shift does give us more control over that area. We just made that shift in September. We are still experiencing run-out claims from our previous Blue Cross Blue Shield plan. So it's early days for us to feel the fruits or to experience the fruits of that change. But based on our claims activity for the first few months under that new program, things do appear to be finally leveling out. Which is certainly welcome news. But we are certainly not going to rely on that. We are actively investigating other opportunities to, potentially change the program if and when it needs it. We like to recognize sort of the low-hanging fruit options and pluck those when we can. I would say, based on our conversations with our broker, a lot of the low-hanging fruit has been plucked. We try to be very reactive and make moves where we can, where they will not be overly impactful to the benefit program. The sorts of programs that we're looking at right now with our broker are, the word that has been used is more extreme, certainly more extreme. We are absolutely going through the process of looking at all of those options because we want to do our homework and present you with all of the options that we've got in front of us. But they will be extreme. They will potentially be more painful. But those are all things that we want to come and be very transparent about. So that's what the health and dental looks like. It's the fund is certainly a problem child, but we are trying to rein it in as we can.
Questions on that? Mr. Nord?
What's the threshold before it makes more sense to go to a purchased insurance model versus self-insured?
That's a really good question. So as part of our renewal process every year, at least for the past several years, we have asked the Horton Group to also price out a fully insured plan. We are a self-insured fund, meaning that when we have a horrible claims year, those are our dollars that we're literally paying, versus having a fully insured fund where, if we've got a horrible claim year, that's fine. We're just paying in our premiums to an insurance carrier who is bearing the brunt of that risk. In each of the past several years where Horton has priced that out for us, it would actually equate to a huge increase in cost, both for the town and for the employee, at a slightly reduced benefit. So in reviewing that has not made sense so far. And in fact, I would suggest, based on what we're seeing right now from the other options, and again, this is still early days, we're gathering a lot of information live time from our brokerage service. There are some other things that we can do. There are other options on the table that we could take prior to going to a fully insured plan that I think would maintain more of our benefit level for reduced cost than that's sort of going full throttle. That would be a very extreme, I would say.
Would there be a staffing reduction if we were a full insurance model?
I honestly would say no, because I think that a lot of the responses that staff are dealing with, particularly on the benefits front, are things that are not easily managed by an external insurance company. We're doing a lot of hand-holding regarding, claims adjustment, filing for, if a claim isn't paid appropriately, we're doing a lot of intervention there helping employees. So the short answer is no.
I don't see any further questions. Thank you,
Thank you.
Ms. Keeger. And Ms. Gadaraju.
Good afternoon, Mayor and Council. Thank you for the opportunity to be presenting our budget today. INT budget starts on page 156. And a couple of things that I want to note is you will see, slight increase in salaries as well as professional services line items here. Part of that is we were not able to fill, we operated this year with some vacancies in our full-time positions, but definitely couldn't hire our part-time staff, which is part of our model. And unfortunately, it's getting tighter and tighter going forward. But that's something that you see reflected in the proposed budget, is continuing with the same staffing model, but hoping to really have full-time staff and increase because of COLA. The second thing I'll note is professional services increase. Across the board, it is very typical for us to budget anywhere between 3 to 5% increase year to year, depending on the product. This year, the increases in technology products and services have really gone up quite a bit. So this increase is reflective of what we expect to see in a lot of these areas. With that, I will switch back to some of the projects that we have been working on, and we were able to present quite a bit of what we did not too long ago, so I will not rehash some of the projects that we presented as part of Smart Cities presentation. But I definitely would like to highlight a couple that we think are essential for our operations, but we did not get a chance to talk about at length, or at least to the extent we can, is our cybersecurity and resilience efforts. So while we address that at a very broad level, we've really bumped up our security efforts. So from, you'll hear us say SSO and MFA, that refers to single sign-on capabilities with our existing applications, in addition to multi-factor authentication, making sure security is also easy for our people to use. We don't want security to be a burden, but at the same time, we have nearly 200 applications, so really making sure that we can onboard each of those applications onto this model is going to take time, and we are in that process. We are working towards migrating Town of Normal's website to a .gov site. That really, so just you'll hear me talk about these partnerships with CIS Center for Internet Security, as well as CISA. It is, today I did write my acronyms down, Cybersecurity Infrastructure Security Agency, which is a branch of Department of Homeland Security. So we are partnering with them, particularly the .gov domain is sponsored by CISA now. That's who administers that. So we definitely want to move on to that. There is a lot more security features available moving forward for .gov. We definitely have adopted directives requiring all staff to participate in regular cybersecurity training. I think this is by far, when we talk about low-hanging fruit, this definitely is one that we want to train our staff to be our frontline defense for all phishing and cyber security threats. We are implementing a new privileged access management system. What is this? This is essentially a password management system for important accounts. This does two things. It definitely helps with our security, but more importantly for business continuity, this is an important step in the right direction for us. We are working on refreshing our disaster recovery planning process and backup planning process, backup procedures. We definitely are taking a very active role in Bloomington Normal Innovation Alliance, a group working on a lot of technology projects and smart city projects, but more importantly focused on efforts that cut across multiple agencies like Town of Normal, City of Bloomington, County, Illinois State University, and one of those efforts is cybersecurity, and we are very actively involved in that. So as you can see, that's a long list of cybersecurity stuff that I talked about. While that is a huge improvement in our security posture, I will be the first one to admit we are just scratching the surface. We just began the process. These are all things that are minimum for us to get cyber insurance or get a good price on cyber insurance. From this point forward, we definitely see a huge increase in our cybersecurity investments. Part of it is reflected in this budget and also the ARPA funds, but we are also going to go after any grants that are available. Federal government is starting to release some grants for cybersecurity, so you will see us going after those as well. So another thing that I want to mention is when we presented during our Smart City presentation, we talked about the cross-departmental collaboration. I was glad to hear a lot of my colleagues talk about their effort on what it takes to get technology projects up and running. So when we talk about open data or electronic content management, which I'll get into a little bit, there is a lot of cross-departmental collaboration going on. There is a lot of effort from various departments, so that kind of dictates the pace at which we can implement technology projects. The one that I want to highlight for our future projects that are coming up is the new electronic content management that Ms. Kier mentioned here. From a documents perspective, I think we've had a document management system. We continue to have a document management system, but electronic content is going beyond Word documents and PDFs now. We need to have a much more robust system that not only just catalogs Word and PDF documents, but can accept architectural drawings, that can accept video, audio files, all related to a particular case file. And more importantly, with our increasing GIS presence, we need to make sure that our content management system and our GIS system are working in correlation with each other. We also want to make sure that our enterprise financial system is in conjunction with our content management system. So while we work on these integrations, another thing that we also look for is the ease of making sure that our departments are enabled to do their jobs efficiently. The project I'll use here as an example is the small business administration loan that administration department rolled out last year. We were able to quickly put an application together, but in this day and age, I think it's important for content management systems and departments to be able to quickly do that themselves. The reason we had to create an application is because we want a lot of that information coming in to be secure. So when we bring systems like this, that's something that we are looking at to make sure that departments can create their own workflows, and it's easy to create their own workflows, whether it's onboarding, whether it's employee self-service. We want to make sure each and every department is capable of doing that on their own with our support. So with this particular project, a couple things I want to note is, we've issued an RFP. We are doing the demonstrations right now. Multiple departments from throughout the town are involved in this process. But at the same time, while we're working on bringing a product on board, we're also working on putting the governance pieces in place. How do we manage records in various departments? How can we make sure that it's all tied with our content management system so the life cycle of that content is managed effectively? The next project that I want to highlight here is our network refresh project. When we talked about our smart cities, I talked about the importance of our core infrastructure to be strong. So when we have these refresh projects, which is a huge undertaking, is the opportunity for us to make sure that our network is not just serving us today, but is also scalable. So we foresee quite a bit of time and effort going into that project. Another one that I want to highlight here is hardware asset management plan. We have a ticketing system that we monitor closely. As I've mentioned, we have a goal of wanting to address 90% of tickets within 24 hours. So instead of just thinking about it as, increasing number of technicians constantly reacting to tickets, we look at the origin of the tickets and the type of tickets that are coming in. A big bunch of those typically are associated with aging hardware. And when we are looking to replace those, we do a couple of things. We want to see if we need to do that as a capital investment, or do we look at current trends to see if it needs to be a managed service. The example that I will point out is printers. Right now we have a large fleet of printers, so we are going through the process of evaluating, should we do this as a capital investment, or should we actually bring a managed service professional in to do that for us. In doing so, it is, while it may seem like we can kind of go through a simple RFP process and get whoever is the lowest bidder, there is also an element of serviceability. We want to make sure that whoever we are bringing in is somebody that we can work with. So we are doing some demonstration projects with some vendors. So the process of making sure that we are getting to our service levels is multiple fold. Evaluation between whether hardware cost makes sense or should it be a managed service, as well as if we are bringing in managed service, what is the level of service level agreement with them. In addition, we are going through this process with execute time upgrade. It's a very simple project, but I want to highlight a couple of things we're doing with that. So execute time is our time management system. We've had that for multiple years, so there is quite a bit of information in there. In moving forward, we are taking a critical look to see. So execute time uses something called time clocks. It's pieces of hardware that we have at various facilities where people can use their thumbprints to go in and out of facilities to clock in and out. Moving forward with the new execute time, most of that hardware need to be replaced, and this is not cheap pieces of hardware. It's upwards of $3,000 per piece, and it is proprietary with Tyler Technologies that provides this. So we are conducting pilots to see if we can take an alternative approach to see if we really need to replace that hardware, or can we use mobile check-in and check-out, and if yes, how can we geofence those into various facilities. We also have another situation in our system right now where we have people taking multiple positions, being in that system multiple times, which kind of causes issues for human resources to keep track of overtime and things like that. So we build additional systems on top. So we are investigating if we can work with both Central Square, which is our financial system, and Tyler Technologies to streamline that process. Can we do that or not? It's still we are still looking into that. But I wanted to highlight these to say when we are going through these upgrade processes, we are investigating a lot of things that need to be streamlined. And hopefully I can come back and say we were able to do those things, but at least I wanted to share with you the process that we go through. With that, I will pause.
Thank you, Ms. Scottaraju. I did want to mention just clarification on that last executive time comment, that the biggest issue primarily that she gave as an example is focused significantly on Parks and Rec and Cultural Arts, the departments that have the most part-time staff, because on occasion you have a part-time employee who holds a position perhaps in the before and after school program and maybe a sport, maybe serves as an umpire and also maybe works part-time here. So they hold different part-time positions. And so the purpose of one of the benefits of the executive upgrade in terms of our timekeeping system, kind of in the weeds, but it does help track when an employee is working in one position under a certain pay grade and another position, and it references specifically those challenges when you have lots of part-time staff and some of them serve in different departments and divisions.
Thank you so much.
Questions? Mr. Nord?
Executive time, is that just like a time card system just for hourly employees, or do salaried employees use it too?
Yep, it's everybody.
Everybody uses
Yes.
it?
Mm-hmm.
So for salaried employees specifically, is this to track time when they start, time when they leave, or is it projects during the day?
No, so it's to track their time off, holidays, vacations, time. For salaried employees, their time is based on how they are salaried. If it's 7.5 hours salaried, then the system automatically takes it as such. But what it tracks is, when they're applying for time off and their benefits.
Correct. It's our timekeeping system for payroll purposes.
Okay, and that's that expensive, huh? Or that's an expensive thing for something that routine?
We also do all our part-time timekeeping in this as well, where
Okay.
people clock in and out. Yes.
All right, thank you.
Ms. Smith?
How much have you seen the cybersecurity threats impacting the pace of having to update hardware and software to keep ahead of threats?
A lot, to say the least. I think we are moving as fast as we possibly can. We are trying to be up with our software patch management, making sure that our systems are all up to date. We are making sure that our hardware is as up to date as possible. But really, it's making sure that we're training our staff on phishing attacks, because that is one of the biggest form of attacks that we are seeing. So to simply answer, I think it's a lot. Definitely, if we had an entire division of cybersecurity professionals, they can all be busy.
Well, I guess my point is that in the past, while it might have been adequate to have hardware in place for 5 years and just keep updates in place, are you seeing that time frame is shortening simply because the threats are more sophisticated and they can detect weaknesses in older systems?
So with hardware, as long as they're on warranty and under support from the vendor, we do patch them. They provide patches to make sure that the hardware is not. And we have a pretty good lifecycle management program for our hardware systems, and we keep up with that for most of our systems.
Thank you.
Further questions? Thank you, Ms. Scottaraju. Not so fast, Greg. We're going to take a break for lunch here. We'll take about a 20-minute break. So I'm giving you, Kathleen, I'm giving you 15 minutes to run and 5 minutes.
Thank you.
Yeah, kidding.
Test.
Test.
Chelsea, I didn't catch you earlier, but, not a bit, but I'll take others. Yeah, right.
Well, if somebody needs my iPad would.
Where is it? Oh, thank you.
Yeah, no, I forgot to see your one. You know what?
In Texas. She says she's bird watching or buying a giant 2,500 dual-wheeled truck of some sort. Not sure which.
What else are you gonna do?
Right.
Is that either or thing?
I was being sarcastic. She's down there buying a giant four-wheel drive GMC dually truck. That's her thing.
I was excited for her.
It's 5 miles. We learn so much in these meetings.
Whatever. Okay. Well, good afternoon, and thanks for giving us this opportunity. Super big picture, you know, we are all things development, construction, and property maintenance. So a very busy year. Obviously, Rivian continues to generate a lot of activity, you know, certainly at the plant and then, you know, with peripheral housing demands and that kind of thing. So they did another $100 million. And since we started writing permits in 2019, they've done just over $400 million with us just in permitting. That doesn't include what they're investing in the plant, obviously. So again, a busy year. We didn't, I anticipated getting to 100 homes. We didn't. And I think that's in part due to labor availability. And talking to the developers and builders, they'd be like, I pulled 25 more permits, but I'm waiting on crews. So that's kind of part of the deal. So hopefully that frees up a little bit as the spring sets in. Two other things I'll make mention of, and it's relatively fresh with you, is that we spent a fair amount of time updating the transition plan this past year, the ADA transition plan, and that's continues to be a priority. It always has been, but it was great to get that project underway. And Mark Clinch failed to mention, but facilities has started down the road with our contractor on our first project to do some abatement. So we're excited about that. The code adoption process, it's time consuming, and I know it's a lot of paper, but it's good to have that behind us. And then as I look to the spring, we are up for our ISO renewal. And so we do that every 5 years. And, you know, I'll be tying into that here before too long. The other thing I'll make mention of is that we are back to a staff of 13. You know, back in the day, historically, we peaked at 16. I'm very happy to be where we're at. Part of that is certainly with, and I'm sorry, I should have introduced Jennifer Toney, our CDBG specialist, and then Caitlin Kelly, these are Mercy's two associates. And so one of the reasons we, you know, to add back some extra staff was certainly in response to all the development demand. You know, as we heard through conversations with Rivian and other entities who are interested in coming to the community, is that they always ask, like, what does it look like to get plans approved and things turned around? And we're always very happy to be able to say we can review a set of plans and get you comments back in a week or 10 days. And they're shocked by that, you know. So that's great. That really helps us. And then the other thing is with adding Jennifer to our staff, who comes to us from Bloomington with a great deal of experience, we are definitely going to be ramping up our community development block grant housing rehab program, which has been absent. When I started quite a long time ago, we had a CDBG program and we did some work, and then it got a little cumbersome and cost ineffective almost. Then we went to our emergency repair program, which council authorized, and we, for budget constraints, we went away from that a couple years ago. So now we're in a better position to go back to that. And so yes, yeah. So we're excited about doing that. And again, these position add backs help us be able to deploy a program. So, and Jennifer's going to be a great asset to that. The last thing I guess I'll mention is, our budget for the most part is basically status quo. Yes, the numbers are bigger. We've got, with the staff add backs. We did bring back the bone grant program. That's been absent, was absent last year. Mercy and Caitlin, basically that's an inventory of about 275 properties in the community. It's $40,000. Basically, it's $5,000 maximum grant, and it's a 50-50 grant. And it's for historically appropriate improvements to a house on the outside. So those are really kind of the big ticket items, and we're happy to answer any more detailed questions. And if there's questions, I know, Mayor, historically we talk about, no pun intended there, we talk about the bone grant at the same time, even though it's in a separate part, and then also community development.
Go right ahead.
So if there's questions of whether it's inspections and planning or CDBG or historic preservation, we're happy to answer.
What did you call that? Bone grant?
The Bone Grant is our historic preservation.
Yeah, it's named after Robert Bone, so it's the Bone Historic Preservation Grant, and it shows up as a special program expense or is that contractual or special? Yeah, special program in Greg's department budget. And I did want to point out that historically, the grant was at the $20,000 level. We proposed bumping it up to $40,000, and that's what's reflected in the proposed budget for all years.
Go ahead, Mr.
Just a quick comment. I'm glad to see that get back. I know there's been some chat on the Historic Preservation Commission about the bone grants and will they, won't they, and the availability. And just going through a campaign cycle less than a year ago, knocking on doors in those neighborhoods. That was certainly on their mind, is what's going to happen with the bone grant. And traveling around the community a lot, it's amazing how well informed the historic districts are about that when they go to do it, because for the general public who isn't informed on that, a historic preservation district requires that upgrades to homes or replacements be historically accurate, which generally translates to costs a lot more. That's generally the bottom line. And so the town's ability to help out in some way, shape, or form, however small, is pretty important to those community or those neighborhoods and those residents. Thanks.
I got something, please. Thank you. So, Mr. Trammell, you're feeling good about where your staff is.
Very good.
Okay,
Yeah.
so that's good to know, and you are definitely seeing an uptick in activity.
There's definitely a permit activity.
Yeah.
And then again, with the, not that it'll be burdensome, but definitely going to be another layer of involvement from our staff's perspective as far as scoping eligible projects and, certainly field work. Again, the Rivian activity, but also, and I hope I didn't come across as whining, a couple years ago when we gave up the second code enforcement officer, when Charlie Lydon retired, we didn't replace him. We can make that work. It's been, Justin O'Neill has carried a lot of weight the last year or two, but having that second position back will certainly help us be more responsive to exterior property maintenance concerns. And also Justin is going to help support on the residential side as well, because there's just demand there right now. So
yeah.
It's a nice, I'm very comfortable and very happy with where we're at.
So that second position too, does that help? You said like exterior issues. Is that, are they, and this is probably a never ending job, but is that able to at least keep up somewhat with apartment, our student apartment inventory when there's complaints
yes,
like that?
That was a struggle, and I guess I hate to say it this way, that was the one benefit of COVID, because we did suspend actually going into units. We went to the buildings and did the common areas, but because of, out of respect for the tenants and everything else, we didn't go into units. And so we were able to limp along for a year, not getting into dwelling units. But this will put us back in a spot where we can actually get into units, whether it's annually or every other year at least. So helps us to stay on top of things.
Okay. And Ms. Lorenz, the other thing I did want to mention is one of the positions, while very valuable now in terms of the development that we're seeing, but is also that building inspector position
yeah, the
is
commercial,
also
yeah.
tied in with some succession planning and getting ready to move forward should people choose to retire down the road.
Or fall, we're done.
Thank you.
Thank you.
Thank you.
Andrew? Andrew, I'm going to ask you to just go straight through general expenses, down through general vehicle and equipment reserve, and then we'll take questions after that.
Okay.
Okay?
So first, general expenses on page 124 of the budget. This is really kind of a catch-all for a lot of activity in the town. That's not necessarily, it's non-specific to a department. So I'll go through a few of the higher level items. And actually, there's a really nice narrative on page 124 that talks through a lot of that information. First, the significant activity in this fund or this account is the transfer out. This is where we account for all the money leaving general fund to other funds. You can see in that bottom of the page of 125, $9.4 million of transfers are planned for next fiscal year. $4 million to roadway fund, $1 million to vehicle replacement fund, $3.3 million to debt service project fund. All those funds are set aside for different purposes. You can see that $3.3 million. That was our regular transfer to keep our debt service program at certain coverage ratios and annual payments, and also that was kind of the final piece. That's an annual amount. I'm sorry, the $4.5 million next to it, the previous fiscal year, 21-22, that was actually a final funding piece for our early payoff of the debt next year. Other pieces of this budget, $2.8 million in contractual payments. That is where we have quite a few things on the opposing page. If you look at that section 4030, you can see the lion's share of the money for contract payments is our payments in McLean County for mental health program, $1.8 million, Uptown Circle rent and adult rebates and so forth. Probably the next most significant area is our liability insurance, $1.7 million. That we are seeing some upward pressure on in the current years and the out years. A lot of this is related to cyber insurance. Coverage is getting very expensive. Other lines of coverage are staying relatively stable, but the market is definitely reacting to a lot of the cyber coverage issues. And probably the last most significant item in this budget would probably be the Connect Transit. Almost $1 million we transfer per year to Connect Transit for the remaining years. We also have some funding, $1 million in over 5 years for Connect Transit from ARPA money, which we'll get through later on. That's kind of that account. So moving on to finance, page 144 and 145.
Excuse me, Mayor. Do you want us to handle questions at the end? Okay.
Finance budget, relatively stable year to year. We do have an increase in personnel. We have 2 positions scheduled for in this fiscal year coming up. One's an account associate. This is a position that we've had for many years. We left vacant. I requested we reinstitute that position with the city manager for a variety of needs in terms of my department. So that is in this budget this year. We also have a procurement specialist plan for next fiscal year to deal with a lot of the contract and procurement working areas that we're pursuing. In terms of the overall budget, contractual services is kind of a big line, $43,145. That's our audit costs, our Loomis pickup for cash, other minor expenses. Also, the remaining budget, we do a lot of the postage and printing for all of City Hall, as well as operating supplies, which is mostly paper for the copiers and so forth. Parking, 146, 147. These, of course, are our 3 parking decks. This is kind of a status quo budget for this particular operation. We've looked at this for many years. The parking decks have a growing subsidy to them in terms of expenses. We've kept the rates the same as when we opened their first parking. They have not changed. Still $1 an hour, first hour free, $40 a month. We are in the process of working with a parking consultant to give us a great deal of feedback regarding moving forward with certain parking arrangements, philosophies, policies, rates, equipment, and so forth, and that'll be forthcoming in the near future. So for now, we've kept this budget relatively stable and are awaiting some final recommendations from that parking study to give us some more guidance on going forward. Underpass Fund, that's going to be found on page 243. This, of course, the council should be very well aware of. This is the Uptown Connector Underpass Fund between the north and south ends of the track. This has been fully budgeted for in this proposed budget. Total budget's around $23.8 million or so. The majority of that's all being funded by federal and state grants that the council is well aware of. The last piece of the funding puzzle, if you can find on page 242, that $1,692,120, that's the contribution, the local, essentially local match from the town to transfer to that fund from general fund to fully fund this project as estimated now for expenses. Moving on to the Capital Investment Fund, page 125. I'm sorry, I'm going again.
You skipped the American Rescue Plan.
240, American Rescue Plan. Yeah, there we go. Again, this is also an area that the council is very familiar with based on previous conversations, but it's a good to recap. That's my phone. Sorry, I can turn up with my handy dandy watch. As the council is aware, there's some federal relief program from the feds, $10.8 million in total revenue will be coming to the town from the grant. We've programmed about $9.3 million of that to date. A lot of this, again, not to rehash, but we've got a lot of road work in this budget, and I'll save any kind of comments or just details on that from Ryan Otto and his group. A lot of special programs in terms of funding behavioral health, small business, utility bill relief. We have cybersecurity, some broadband stuff. And this has been kind of an evolving program. In fact, we just finally got the final, we've actually been reporting on this with the federal government and developing these areas based on what they refer to as an interim rule of eligibility. They finalized that recently, and now we know that those rules are final. There are some mild changes that might impact some of our thoughts going forward, but for the most part, what we're proposing now we feel very good about, and that, of course, will change over time. But a lot of dollars going to transportation, mass transit, and some social programs. So,
If I could jump in real quick and add to that, what this budget is reflecting is the discussion we had a couple months ago about our recommended allocation for those American Rescue Plan dollars. There's unallocated amount yet to be determined how to spend those dollars. But again, there's also time to make modifications. We just wanted to put in the budget document and show how, for now, those recommended expenditures are reflecting.
Moving on to capital, that's page 256 and 257. This, of course, we've covered a little bit already, but it's certainly worth a quick comment again. If you look on page 256, you can see $4.3 million of funding available. 3.5 of that is from the general fund, and then you can see as we go down the line, 816, 1.1 million, 1 million, and so forth. So a lot of money is now flowing into that budget resource. And in the second page, 257, you can see a lot of parks and rec facilities being accommodating in terms of projects and also major facility projects for the facility management group. So a lot of good stuff going on there that we have not had in the past, and really a win in terms of getting around to some a little more robust financial or funding for those projects. Next is vehicle and equipment, fire station fund. This fire station fund, this is where we're accounting for the proceeds, the funding sources, and the construction of the second fire station. As I mentioned earlier in the presentation, the funding sources for that are going to be some leftover bond money, about $1.4 million that was issued some time ago for fire station projects. We have a grant of $1 million, and then we're also going to be coming to you next Monday with a financing proposal from a local bank to fill in the rest of that 4.9 budget with a $2.5 million financing. And then final, almost final, vehicle and reserve equipment, that's on page 325. You can see here, there's a nice report on that first page on page 325 that talks about the spending for the next fiscal year, 3.5, almost $3.6 million. And you can see by looking at that, what that's all contributing to, a lot of facility management work on buildings, obviously a lot of information technology needs, and then vehicles, body cameras, in-car video. You can certainly see the list there, knuckle booms, very expensive vehicles, very expensive single-axe dump trucks. So again, this is part of that process we discussed earlier today, where we put aside money annually to fund these things as they come due in terms of useful life. This is what's coming due in this fiscal year coming up, $3.6 million of spending. If you go to page 326 and 327, that just details more of the contributions from the general fund to support this fund's operations. And then you can see the detail there in terms of the spending for the next few fiscal years. On page 327, you can see $3.6 million being spent, 3.7, 3.5, and 5.3 in that final year. I still need to get back to your question, Ms. Smith, on what those are. It looks like a lot of it's equipment over 10,000, but I'll give you more detail on that shortly. And finally, pension funds.
Andrew, I'm going to have you hold, and we're going to take questions on the funds, and then we'll go into police and fire.
Okay, very good.
Ms. Lorenz, you had a question?
Yeah, let's see. That's 124. This is the, oh, I'm not like, there we go. Okay, 1.876 to McLean County for mental health programs.
Correct.
That's up from previous years.
Correct.
Is that as a percentage of our tax?
Exactly. It's a formula-driven percent of what we collect in local sales tax. Mm-hmm. So, and we're experiencing an increase there. And the agreement with them is to fund a certain percentage of the overall amount collected to them for that funding.
Okay. So just kind of for a point of education for when, I think it's a when, that the county will be coming and doing their annual presentation. They have recently moved the adolescent mental health programmatic efforts to the Regional Office of Education's responsibility. And so I think that's a pretty big shift in scope, or at least a shift in scope, that I would like for us to get a better understanding of. Do they still need all this money, or is, how is the money flowing now from us to ROE? Or has ROE got their own funding source? Right. That's a pretty big change. And I don't know if Mr. McCarthy or whoever sits on that Behavioral Health Coordinating Council can speak to it now or at that time. But that's just a concern that I have about shifting things.
Correct. I appreciate that information. I believe it's, if not the second meeting in February, I believe it'll be the first meeting in March. One of those meetings, the county will come and do what we're now referring as our annual update from them on this behavioral and mental health program. We do have our intergovernmental agreement where the city and the town commit to fund based on a percentage of sales tax proceeds. But Ms. Taylor is aware, Cassie Taylor is aware that we would like to know a little bit about how those funds are, how they're allocated, as well as what their current fund balance is. Because we know that these dollars support debt service for the jail project from a few years ago, as well as the behavioral health action plan. So definitely this will be something that I make sure she's prepared to talk about.
Okay.
And part of that, I think, when we passed that 0.25% sales tax increase, sales tax was a different animal. And I would like to investigate whether we should cap that or continue to do the 0.25%.
I'll jump in real quick to shed a little bit of light. Certainly a great question for when they show up. The conversation to this point about the ROE involvement and adolescent is that the Behavioral Health Coordinating Council, who receives the funds essentially, would be supporting ROE in that effort. There's, to my knowledge, not been any final decisions on that, but since our, as Ms. Reese pointed out, our intergovernmental agreement is with the county to fund those services. So, but no, again, as far as I understand, no final decisions have been made yet, but it's a great question and certainly one we want to get answered.
Yeah.
Further on any of those items, or we can move on to police and fire pension.
Oh, golly, he went through so much stuff, but maybe I can meet with him offline, sorry. This is
Mayor-
a big part of the budget.
There's some big dollars here. One thing I did want to point out, just real quickly, on the fire station fund, page 259, which really is a new way this year for us to identify that project. If you look only at page 260 and 261, I think one would say, gosh, there's not enough money to cover that project. Here we go. So just to be clear, I wanted to point out that if you flipped back to the fund summary to find out how much money are we starting with in the fund, you'll see that we in fact have a little bit of revenue already in that fund. That's from prior sources. It's from leftover from a previous debt issue where we built the headquarters fire station and had a little money left over for the station, the future Station 2. That money is still waiting to be spent. And so that's already in the pot. That's why these dollars do all make sense. But you wouldn't know that without looking at fire station on the fire station fund on page 43. So I just wanted to explain how those all tie together.
Okay.
Right.
I have one other question.
I will add just one comment on the general expense. We did restore the Harmon Arts Grant and the Clay Museum cuts from previous year. That's put back into the budget this year. Right. And out years.
Okay. The American Rescue Plan. Out of curiosity, why do we continue to allocate some money for Connect Transit out of that pot? And this might just be splitting hairs, as opposed to programming it right out of general fund. What's the thought process behind it?
Sure. Very good question. The thought process was it is an eligible expense under the American Rescue Plan. And since we had dollars and they qualified, we thought it might be wise to use some of those federal dollars towards this initiative. And that gives us time to build it into our general fund budget.
Okay.
Because, you know, when you're talking $200,000 a year, that's $1 million in the course of this budget. So we figured if that was a good place to start, and it gives us some time to find ways to reintroduce that into the general fund, that added funding, if council chooses to move forward with that. And you might recall that that was a recommendation. This additional $200,000 per year is a recommendation through the Connect to the Future work group.
All right. Okay, that's all.
Go ahead, Mr. McCarthy.
Thanks, Mayor. A little bit further on Ms. Loren's question there on Connect Transit, I just do want to make the comment here is I don't know if everybody's had a chance to get an update with our new transit director yet, but we're still in the same situation as we were with the previous one, is that we are not getting all of the state funding that we could be getting for our transit system because our local match is not significant enough to bring as much of our state tax dollars back into our community for our transit system. So I know this will help. I don't know that it exhausts that state matching grant to get what the Connect to the Future work group asked of us, but I know it gets us closer to bringing all that we can back into our community because we're leaving some on the table, frankly, at our current community funding level. So I'm supportive of that, and I hope we do move forward so we can bring our tax dollars right back. Thanks.
Thank you. further on those items? Let's jump into pensions.
Excellent. So pensions are going to be on page 337. And this is where we account in a trust capacity, trust agency capacity for the pension funds. The revenue, of course, comes from a couple of different, or three different sources. One, it comes from the employees themselves. Fire and police have to contribute statutorily an amount into their pension funds. The town contributes an amount, and that's part of the property tax levy discussion we have every year. And then we have interest earnings on the account balance itself. Also, the town is involved in managing that money in terms of service payments to the pensioners. You can see on page 339 for police, the largest expense there is of course, paying out the retiree benefits to all the retired service people. Very similar situation for police. Again, statutory percent of the salary of the employees go to fund their pensions, as well as town contribution and investment earnings. You can see that on page 342 and 343. 342 shows it for fire, and you can see in the contributions employer, that's actually the tax levy that is essentially levied, put in general fund, and then transferred over to the pension funds to support that pension operation. And then the same situation in terms of expenses, we're controlling the service payments and so forth for the pensioners. There are some other minor contractual expense-related costs, travel and training for the board members, investment. We have investment consultants help us invest the funds. There are fees associated with that. And then Councilman Ms. Smith mentioned earlier offline that there's a net change in fair value calculation. You can see on page 342, $10.9 million. That's what we refer to as a market-to-market adjustment in the actual account for the investment portfolio. We don't plan on that per se in the budget process because we're not sure what's going to happen. But when we close the year out, we book that entry in as activity. Obviously, it's been 2021 was a pretty strong year in terms of recovery. And we continue to see pretty good investment earnings. But that usually comes in as part of an actual transaction and not planned for in the budget. We do, however, plan for the levy contribution to members and then the interest income that's kind of cash related, like dividend payments, but the actual in value increase, we don't account for until after the books are closed. Pension, we can go on for a long time on that. You know the story there. We're trying to fund it best we can. We're working on assumptions. We're working closely with the state in terms of consolidation. That has occurred for our fire department. We have moved those funds into consolidation, so the town no longer has custody or responsibility per se of the investments. That's now in the hands of this state agency that's controlling that. We're in the process of working with police to move that money over too, and then that's going to change some of the procedural stuff going forward in terms of funding, but it will be relatively the same. We're still responsible for funding the pension plan. We're just going through a different mechanism to make that funding happen.
Ms. Smith and then Ms. Lorenz.
And you made that mark-to-market adjustment when you last reported on our funding level for police and fire pensions?
Correct. Yeah, we close the year out, we make that adjustment, and then we evaluate the funding level.
So the percentage that you'd given to council earlier included those favorable investment returns?
Yes.
Thank you.
Ms. Lorenz?
Yeah, back on the general expense, page 124 and 125. I want to dive a little deeper into line item 3040, special programs. You brought that up kind of conversationally a few moments ago. Are these just estimates? For instance, compact. Do we really know if that's part of their scope anymore? I know they're going through some changes for workforce development.
Right. Great question. We don't know yet if McLean County Chamber of Commerce continues to host the compact program and workforce development. I don't have a new number. So we continued on. We had an agreement. I think it's still an active agreement on how we fund them.
Okay.
But so that's what's reflected. It could be modified. My guess is if it gets modified, it's going to be modified down quite a bit. But of course, we want to be conservative and just go with what we knew in the past. The other thing is, I think well, I think that
Mhm.
I'll have to wait and hear more what Compact's future is.
Okay, and then two other things.
Ms. Lorenz?
Yep.
Could I get you closer on your microphone?
Oh, sure.
I'm having a hard
Sure.
time hearing you.
Okay, so thank you for answering the question about Compact. Two other questions. Small business development, does that include some additional funding that she wanted? Or like, I think, a county person, a rural person?
I will take a look at the numbers. I'm not sure I have that on my screen at the moment. My computer died, so let me get it started again. I can't recall if the additional funding is included in special programs or if it's in the ARPA line.
ARPA, yeah.
But
okay.
but we have it in the budget. I just don't remember which line we put it
Okay.
in.
Lastly, because it's been a while since I think we funded the McLean County History Museum, what is that for? What does that go towards?
The $10,000 that we actually proposed in 22-23, we have 20,000. It's a kind of a catch-up year because
Yeah.
we didn't fund them either last year or this year. And then moving forward, we showed $10,000 a year. We historically have budgeted $10,000 a year to support the McLean County Museum of History, just in terms of their operations. It just goes into their budget in terms of town and normal support.
And is there similar support from Bloomington and the county? Do we know?
I don't believe there is from the county because they're in a county facility. I think they have some different arrangement with the county. I'm not sure what the Bloomington dollar amount is.
Bloomington is contributing, though.
They are what?
They are contributing.
Okay. All right, that's all I had. Thank you.
Thank you.
Thank you.
Ms. Killingsworth, I'm going to ask you to do debt service and project reserve, then we'll go to questions, and then just go through the rest of the tips and bond summary and that.
Okay. On page 229 is the debt service and project reserve fund. That's where the funds are deposited that we use to pay our principal and interest. You will see we have a large balance of $9.6 million. This is where the money is to be able to pay off our 2012 bonds in June of this year.
Okay, questions? Let's go ahead and go through the tips.
Okay, on page 267, we have 5 TIF districts. This page just gives you general information as you're out and about if you want to remember the dates of when they're established, when they expire. I was going to say no new major development in the TIFs this year, I would say. We had, for the CBS building, we paid our final payment. We had a 10-year agreement that we made our payment in 21-22. So it's always fun to see agreements that you've established, you've reached the time, and then from now on, we get the full amount of the funds. If you go on and flip the debt service tab, that's where we have our debt summary. Once again, this chart, as you will see in 22-23, reflects the payment of the 2012 bonds. So it's a large amount, but we have it already set aside to fund. On page 274, 275, just as a snapshot that all of our debt for the general fund, for the water and sewer fund, and at the bottom, as we add in the fire truck and the fire station. So you can see the total town debt in one place. And then on pages like 278 and 279 show the revenue coming in and then our actual principal and interest payments for all the bonds. And the last one is for the SSA, the College Hills bonds. We have moved that to all other funds. That's on page 333. That more closely aligns to how we show it in our audit because the town is not responsible for that. We're just the conduit of we pay it. So we have separated it from the debt service and put it in all other funds, and it should be paid off in fiscal year 24-25.
Great. Questions? Great, thank you.
I've got one real
Oh, I'm sorry, go ahead.
Oh, that's okay. Thank you. The outstanding principal is for 1/2022. Obviously, still has the Series 2012 in it, correct? The 8 point whatever. It looks like it does. I'm just
Yes, on 4/1.
So by June, we'll be $8.6 million less in that total.
Yes.
I'm very excited, so I had to mention it. Thanks.
Thank you.
While we're waiting for, who's coming up next? Oh, Chief Humer. All right. Well, we're waiting for Chief to come up. I did want to point out, Ms. Lorenz, back to your question about SBDC funding, that additional position we currently are reflecting in special programs under the American Rescue Plan Act fund.
Well, it's good to see everybody in person this year. Last time, that was quite the deal.
That was brutal.
It was. I'm glad we're not having to do that today. So anyway, so we're going to start out on page 150, which is the fire department budget, fire administration budget. Just to talk a little bit about 2021, which was quite a year because of COVID, ongoing issues with COVID. Really appreciate the support we've got from the council with the purchase of the ladder truck and the ambulance and those kind of things. So we really appreciate that. Not a whole lot of changes in the actual fire department budget itself. As you remember, frame rails on fire engines and ladder trucks for the last several years have been a huge topic for us. We're going through that process right now. We've got 2 of the engines that have been completed, which, you know, we came to council for the funds for those. We have another one that will be leaving shortly to go up there. It's been taking about 4 or 5 months to go ahead and do that. And so then we should wind up in not this fiscal year, the new coming fiscal year, but the following fiscal year with the ladder truck. So we'll be glad to get that all completed and done. The workmanship has looked really good. So we're happy with that. We have no really large projects going on other than with capital. I think we have an ambulance in the capital budget for next year. And if you remember, when we came to the council to talk about the ambulance the last time, it used to take about 3 or 4 months to build an ambulance, and now it's a year or maybe even a little longer. So the downtime, you know, and it's just like everything else with the chips and things like that the manufacturers are unable to get, because we still do use Ford chassis for the ambulances and things like that. So that makes it very difficult. You know, ongoing training. We trained the best that we could during COVID and everything. We were very lucky. We were still able to send people to the Fire Service Institute, even though they had a lot of COVID protocols in place, you know, masking, testing, all those kind of things. We did have a couple of hiccups where people had to come home a little early because they, you know, caught COVID. And I think, as you remember, at one point we had 15 firefighters that were out with COVID. So that was a huge demand on us. And if you remember back then, that was kind of in the early days when we were still kind of learning how to protect everybody, that the isolation time was 14 days, not 10, not 5 like it is now. So when you had 15 people out for 14 days, that was a huge deal. And our staff really stepped up, you know, worked overtime, did all the kind of things that we would expect them to do. But, you know, they did yeoman's work to make that happen. So, you know, like I said, the big thing on the budget is the ongoing frame rail issues. Moving forward with that, that's going to be a couple more year project. Really, there's no other large changes in the fire administration budget. We're still going to do the same things that we do every year. We buy hose, we buy nozzles, we buy bunker gear, you know, all those types of things.
Questions? Go ahead, Mr. McCarthy.
I can figure out how to operate the mic. Not directly related to the budget, just curiosity.
Sure.
How's the Hudson service agreement going?
You know, it's going well. We're not really having any trouble. On our end, we're not seeing a huge impact, you know, that 150 calls a year makes or anything like that. Tawanda very similar. I think they were 102 calls this year. So that's all going very well. Towanda, they have really come a long way as far as their first response. So they have firefighters that are responding, at the same time as the ambulances, and we get there pretty much simultaneously and everything like that. And so that's really working out really well. Hudson has been struggling. They've tried to hire some people during the daytime because that's when they're really, really short. And it just all gets back to the economy and the work shortage and what they can pay. And so they've had some struggles with that, but we've worked around those. And I mean, I wouldn't say it's been to any detriment or anything like that. It's just been a little more challenging is all.
Thank you.
Yeah, absolutely.
Probably the one thing I'll jump in and supplement in terms of Chief's comments about the number of firefighters out at one time for COVID. That was early on in the pandemic process. That's history, and things have gotten better. But also, this is the one department where we have to comply with the testing or proof of vaccination based on the state's requirements. So.
Yep, absolutely.
Thank you. Let's go ahead.
So we'll go ahead and move on to fire prevention. Really not a lot of changes there, except for you will see that we are going to add one full-time fire inspector. If you remember, several years ago, we had 3 fire inspectors, and then when the economy kind of took a downturn or whatever, and then Al Brown retired. Al worked here forever, so took advantage of the slowdown in some things and didn't replace that position. Where now we're in a little bit different situation with all the time. We spend a lot of time at Rivian, but we spend a lot of time at a lot of other places because thankfully there's a lot of other projects that are going on within the community that maybe aren't as high profile, but we're still involved with those. And the plan reviews and all that, as Greg Tremmel said, take a considerable amount of time. And we have a workforce in that department that in the next few years or so is probably we're gonna be looking at some retirements and things like that. And in this type of position, a lot of it is you learn as you go. And so it takes a little time to get somebody up to speed to be able to do these inspections and to assist with the bigger inspections and that type of thing. And we would like to have more time for Glenn to train Matt Sweeney on all the pre-plans and all that kind of different stuff like that. So that's why the extra position. And as well as that, as Greg also stated, that there was a period of time because of COVID that we just didn't go into businesses and do inspections and stuff like that. And now, enough time has gone by that we really need to get into those and make sure that, we're keeping up to speed. We were doing all what I would say the critical ones, obviously the schools, the churches, the hospital, the university, those kind of places, but some of the other buildings had gotten behind. So really, like I say, other than that, no real changes in that department at all.
Go ahead. Oh, I'm sorry. Mr. Preston.
Thanks, Mayor. Chief, you mentioned Rivian. It may not be directly tied to budget, though it is. Are you guys seeing any real tangible effects that are changing how you're operating or where you're keeping apparatus with Rivian's growth the last couple of years?
Sure. Not where we're keeping apparatus. There's been no change in that. But we have seen, just because it's grown so much and obviously just with their own staff, they've got numerous people obviously working out there, but it's the construction staff as well. So it's kind of like a city all of its own. And so we respond out there on average about once a day, which is considerably different from the 2013 plan that we shared with the council, because if you remember, we kind of looked at the far west as that was closed. I mean, it was set to be torn down and that kind of thing. So it has changed considerably. We haven't seen any adverse effects or anything like that to that. Obviously, the response times are longer out there just because of distance, and you have to go through the gate and security and, you know, those types of things. But, you know, we're working through all those issues. We've had a few meetings with Rivian to discuss those, and, you know, we've had a couple of issues where that we needed to address, you know, just because lessons learned and that kind of thing. But right now it's running pretty smoothly.
Thanks.
Okay. Let's move on to foreign fire tax, one of my favorite topics.
Yeah, foreign fire tax. You know, the good thing is that it's not good for State Farm, but it's good for the town and the fire department that the number keeps going up. You know, when I first came here, it was like 31,000. Now it hovers between 41 and 52,000. So that allows us to do a lot of things with foreign fire tax. They purchased 3 ambulance cots, the power cots that lift up and down remotely. They purchased those. You know, they purchased lawnmowers and snow blowers and furniture and TVs and you know, and then there's some uniform items, you know, T-shirts, workout shorts, things like that. But you know, the board has really worked with administration to come up with some really worthwhile projects with that money and ongoing training and things like that. So the money, like I say, keeps increasing a little bit every year, and I think we're spending it on worthwhile projects.
Great. Ms. Lorenz?
Not on the foreign fire tax, although I do like to always see what they buy. That's what I look for in the bills. On this thing of the number of calls out to Rivian and your positioning of our stations, are we going to have to rethink that? As I recall, kind of the final domino of, you know, reallocating our facilities was going to be moving the RAB road further west.
Mm-hmm.
I don't know if you'd had picked out land or kind of a general space for it. Do you think you're going to be modifying that plan a little bit now in light of Rivian and kind of the focus there?
Yeah, I think that obviously we're going to take a look at that. We're gonna run times. We're going to use GIS, you know, to figure all that out. Right now, with the way that we're located with the headquarters station, you know, that's like I've always said, that's ground zero with the university and just everything like that.
Shootout college.
That's the best response for us is from headquarters. With you know, the purchase of the land and the progress to build a new Station 2 east of town, whatever happens west is not going to have anything to do with what happens east, because we need a fire station out there badly.
Yeah.
Where we picked, you know, because we're still 9.5 minutes, you know, to the high school, to villages at Mercy Creek, and there's expansion in the subdivisions out there as well. So that station is needed. So no adjustment in, you know, what we've got going on right now is needed. But I do think that as we move forward and you know, we start look at things, we're going to have to look at that Station 3 and where it belongs and that type of thing.
Okay,
for sure.
Good to file away. Thanks.
Yep.
Okay, thanks, Mick. Okay.
All righty. Thank you very much. Appreciate it.
Chief Fleischner is up next.
Good afternoon. What we'll do, we'll just kind of, like everybody else, go through a high-level summary of the budget line items here for you, some of the high points. Myself, I also have Assistant Chief Steve Petrilli and Assistant Chief Shane Hackman with me, so we'll go through that and then answer any questions you all may have for us. We're beginning on, I think, page 190 for under police administration. And really the current year and the 5 years coming up really just kind of solidify our commitment to staff safety, wellness, and then restructuring those positions where we think there can be some efficiencies that are gained. Also, memorializes our continuing commitment to professional accreditation. Last year in July, we were successful in receiving our 9th reaccreditation through the Commission on Accreditation for Law Enforcement Agencies. So it's something we're very proud of. Professional accreditation helps keep us up to date on our policies, procedures, and practices. For the current year, we spent a lot of time, obviously, on recruitment and retention. We have 4 retirements over the course of the year. We had several other vacancies that were created by individuals who left the department. And just counting up from January of 2021 until now, we've hired 13 new positions. In the last 12 months, 10 in this current fiscal year. So that's, about 15 to 16% of our sworn staff was replaced in that period. Also, we've been able to look at adding back some positions as well as maybe restructuring some. We had the hiring of a civilian property manager for us. We had that at one time. We lost that back in 2008 through budgeting. That duty was taken on by sworn staff. And then we had an opportunity in looking at it again to see, did that position really need to be a sworn staff member? There's some benefits to it, but there's also some drawbacks. So at that point, we made a decision that it would be helpful to civilianize that position. We've hired that person. That individual is working out very well. We also hired a part-time individual to help and assist with background investigations. Obviously, we had, like I said, 13 new positions. We anticipate having some additional ones, and that was going to help alleviate some of the additional work that our investigators and staff needed to do to properly vet people to bring them onto the police department. And, in average, it takes about 40 hours to do a background, properly. So that helps our staff be able to free up some time that our investigators could do on other things. And it made more sense to do that we hired back a retired police officer who had all the training and all the skills and didn't really miss a beat, kind of slid right into that. And it's been a big benefit to us so far. So, and then we're also looking at re-implementing a version of our former youth intervention program. That was something that we got through State Farm back in 2008. I'm sure many of you are familiar with. We were really, we were ahead of the curve, if you will, at that time, to have somebody on board who could focus on the, matters around juveniles who maybe were having, interactions with law enforcement at a very low level. Maybe we're acting out at home, at school, and things like that. And our line staff did not necessarily have the time or the commitment to be able to follow up with that individual. It was helpful to hire somebody and have them on board. Unfortunately, we lost that position in 2018 and put us back behind the curve because in that time frame, we really found there were a lot of agencies that had kind of taken that and had that model or someone who was working with youth or others in the community. So our hope is in reinstituting that, and it will primarily be public facing. It won't all be juvenile related because what we found is there's certainly a lot of individuals in the community who could benefit from this type of service. And for us, it'll be more reactionary, I guess, and trying to be proactive if we've got staff who are responding multiple times to situations where individuals may be deemed to need some help, need assistance. This person can act better as a conduit to a lot of the resources that are already out here. The county's mental health action plan that's in place. I sit on the mental health advisory board for the county. And I know that there's certainly a lot of needs out there, but there's also things that are in place, programs like the FUSE programs, the Mental Health Triage Center through McLean County that we can utilize, but this individual will certainly help us make better use out of that. And hopefully it's all about minimizing those calls for service, providing those individuals with a better path to help, assistance and services. And so it's better for them, better for us. And then the other part of that is our hope is that we can have some internal facing component of that where that individual can help us focus a little more on officer wellness and resiliency, because as part of the Safety Act, there is a thing that goes, or a mandate that goes into place this year in July requiring mental health evaluations for law enforcement. And so our hope is that this individual can help us kind of direct us and guide us in doing that, whether that's in-house or whether we go outside to have that done. It'll kind of give us a better understanding of those services. And then there's also some things we want to put in place with programs for our staff, whether it be mentor programs or peer support and things like that. And we think somebody who's got a mental health background or a behavioral health background, licensed clinical social worker, with those types of criteria or credentials can help us, do that and kind of make sure that we move that forward in a meaningful way. Still looking at those addition of those positions, we're still below where we were in 2017. That's the addition of those positions. We've got 84 sworn officers, we've got 9 full-time staff, but that still puts us below where we were in 2017. A few noteworthy items just to walk through. The regular salaries, obviously, we had vacancies as high as 13. I mean, we have 3 positions that we've continued to keep vacant just for some budget flexibility. But we had as high as 13 that we could fill. We're now down to 4. So there's some budget estimates that are in there, but it varies. Current year will be reduced a little because we've had those vacancies on and off throughout the course of the year. So there's some cost savings there. Our clothing line fluctuates primarily due to the schedule for body armor replacements. It's based on the individual's date of hire. You'll see year 3 is a little bit higher, primarily because of replacement of our emergency response units, their tactical vests. And then also we have an additional expense this year is where we included replacement of 10 officers who had left for equipment. And so that was why when we hire new people, we've got to, we can't always utilize or recycled equipment. We have to purchase new. So that's why also that line was higher for this year. Contractual services, I mentioned that just because that's aside from salary and benefits, that's our largest line item that we have. And a good story there because in mid-year we gave back about $30,000 off the estimate for Metcom. And then at the end of the year, we found that there was no increase. Actually, Metcom went down a slight amount, and I say that because that's the largest particular one in that line is for our dispatch center. So that's a good story there. There was really no increase. Actually, we've had a reduction from last year to this year. And also in that line, I mean, we had jail bookings and our range agreements too with the county and city of Bloomington, which there were no increases for the upcoming year, which helped keep that line flat. Travel and training, there's an increase in the current year of the tune of about $73,000 because those 10 officers that we hire have to go to the basic academy. And so about $7,300 on average for them to go each. And so that's why you'll see that line is increased considerably. When we get to like equipment replacement, there are a couple things, and they really kind of go with projects. But equipment replacement next year, you'll see there was a larger increase because our body cameras and our in-car cameras are due to be replaced next year. That's not an automatic, although the funds are there. We'll certainly look at our system that we've got. We'll see what other systems are out there. We're happy with the vendor that we have, and we know there may be some upgrades that they've got that they can offer to us. And so we'll look at that, and if it's something that makes sense for us, we'll move to make that purchase next year. And if not, we may put it off to the following year, but it all kind of depends on when we analyze that. And then in year 5, there's a pretty significant cost increase because the body cameras again come due in that year 5. But also in addition to that, on a 10-year cycle, we have certain things like our radio replacements for our squad cars and our portables for our officers. And then we also have a portion in there to fund replacement of the consoles out at the dispatch center. So that's where you'll see that I think it's around the $2 million range in equipment expenses in that year 5 to accommodate those projects. I think that's all the highlights that I had for the police operations. Are there any questions?
Questions? Mr. Preston?
Thanks, Mayor. Not a question, just would like to acknowledge that it, I'm sure, has not been an easy year or two for the department, especially being down the number of sworn officers that you guys were. So thanks, congratulations on the, it sounds like great recruitment efforts, and thanks for what the department's doing.
Thank you. Ms. Smith?
The discussion you had about someone to address mental health issues that had formerly been focused on juveniles, but the role would be expanded. Have you found someone for that position, or you're seeking someone?
No, we're in the process of crafting the job description on that. Again, we had the one from when it was a youth intervention specialist, and like I said, back in 2008, what was ahead of the curve now is pretty common. There's a lot of agencies out there that have some type of a social worker component to them. So we're kind of looking at that and looking for what that right fit is. Once we get that put together, then we'll certainly look to solicit. Our hope is probably in February timeframe to start, soliciting and have somebody on board maybe around, the end of this fiscal year, beginning of next.
Thank you.
Ms. Lorenz?
I've seen on social media where you've been advertising for recruiting officers, and you have opened up to recruit from other agencies or something like that, as opposed?
We're getting ready to, yeah. We are
so you haven't begun that yet?
No, we worked with our the police union in working through some language that would allow us to offer a lateral hiring program.
Yeah.
We have got that done. We're right now in the process. Assistant Chief Petrilli is working on kind of the nuts and bolts of how that's going to go from our marketing end of it, and then the advertisement and everything. So we're hopeful that there may be individuals out there that have got that prior experience who may want to come to work for our agency. We have a lot to offer, and that's what we'll do is we'll do our best to market it. It's a little unique though, because when you're recruiting at colleges and universities and things like that, it's tough to go want to put your shingle up at other police departments. They don't like that. I wouldn't like that. So it's just how we're gonna advertise that. But we're hopeful we'll get good candidates.
Okay, so you said you've got 4 vacancies now?
Yes.
Okay, and you said you're still below your level from 2017. How large was the force then?
Sworn staffing has not changed, but our civilian staff has. We would be 2 down from where we were in 2017, even with these additions. We lost 4 positions back in 2017 due to budgeting and other modifications to our process back then.
Okay, all right. You feel pretty good about where you're at now, though?
Yeah, I think so. I mean, there's certainly always areas. We're always looking at it, but this gives us, it's a responsible staffing model to move forward, and I think it allows us to address everything we need to.
Okay.
Further? Let's move on.
All right, thanks. Moving on to page 192, the Vice operational budget. This is really, it's pretty straightforward. There's nothing that's really of note there. One thing, we will have some budget savings in this because through, diversity comes opportunity, and when we had some of our positions that we lost, our vice unit was hit pretty hard. We had 4 officers and a supervisor that staffed that, and we lost 3 of our detectives in that through leaving and leaving either the profession or going to another agency. So we were not able to backfill those. So we had to then look at what's the best way to continue to make a difference, be impactful in narcotics investigations, which go hand in hand with gun violence and things like that. We looked and reached out to the state police, Task Force 6, which is a local task force, and we rejoined that. We had not been a part of that since 2004. And so that's been a good relationship for us. Our staff has worked well with their staff. It's kind of a force multiplier, if you will, for us. It allows, they have individuals from not just state police, but other agencies around who put officers into that task force. And then we work joint cases together. And so that's been beneficial. So, and our hope is that as we add back our staffing to that, we will still have some kind of a presence or involvement there. But our goal is to return our staffing at our vice unit back to the level it was last year.
Questions on that?
Okay. Page 225 then, equitable sharing. This is really more of a placeholder. It's a fiduciary requirement for us to have an account in place when we have federal seizures that would apply under the federal guidelines. We have to have an account that's interest bearing. We have to track the monies in and go out. So that's really just in anticipation of any federal cases we may have. If we were to have a large seizure of some sort, the monies would then go into that account. It would then reflect on the balance sheet. So that's just kind of just, like I said, a placeholder for that.
Back in the early development days, we were hoping you'd seize a private airplane for all the time we were flying around trying to negotiate deals.
Yeah. We'll keep looking, Mayor. Next, if there's no other questions, the cannabis excise tax, page 245. That's a new line, obviously. It's one for utilization for crime prevention, education, and then narcotics enforcement or interdiction. We don't have any set plans or anything that's defined. We've got a lot of ideas. I think our goal there is to really look at how we can balance the expenses on those. It's not intended to supplant something that's already included in the budget or another program. It's an addition to, and so our hope is, balance it between crime prevention, between education, and between enforcement there and how we may spend those dollars.
Questions on that item? Ms. Smith?
Are we required, under the provisions of the state law that legalized marijuana, to provide a specific level of education with the resources we get because it's now legal and being taxed?
I don't think there's a specific requirement on a level of that. I think it's those three pots, if you will, from crime prevention, education, or interdiction or enforcement. I think they allow it to be spent in all of those or any of those areas. So, again, for us, it's kind of just looking at how we think those dollars could best be utilized and how we could, make the most use of them in the community.
Mr. Preston?
Thanks, and this may be a question for Ms. Reese, but just for clarity's sake, this cannabis excise tax from the state is separate from our local sales tax we imposed at the time of the vote for recreational cannabis in normal, correct? They're two
That
separate
is
things we're
correct.
talking
The
about.
sales tax component of the cannabis sales reflect in our sales tax line, and this is just the amount we get from the state on the cannabis.
Further? All right. Thanks, Rick.
Yep, thank you. Thanks, guys.
Mr. Burkhart, you're up.
We will start with the admin budget of water on page 285. Really kind of a status quo in our administrative funds. Nothing really changes a whole lot. We are purchasing a new folder inserter for the stuffing of bills in the out years. That was an additional $14,000 expense compared to some of the others, but nothing really changes in the admin fund. If there's any questions. On the treatment side, again, pretty status quo. That's on page 286. We are asking to, I guess, reclassify an employee from distribution to our treatment plant. So we'll still have the same total number of employees in the water department. It's a vacancy that's been open, I believe, since it was pre-COVID. We weren't in a real rush to fill that position as we got through COVID, and we've realized that really will benefit the water department in wholly if we could transfer that person from distribution to the treatment plant to help with maintenance. So that's the biggest change there on the treatment plant side of things.
Question?
Distribution, again, still pretty status quo on that one.
You're kind of boring today, Mr.
In
a good way.
Get into our EPA loans. That's on 289. Again, those are loans that are taken out through the EPA for work done at the treatment plant. There was some debt forgiveness. It is 0%. Those are just the payments. They're pretty self-explanatory. Capital investments, or wait a minute, debt services. I think that's pretty self-explanatory unless there's questions. Get into our capital, kind of starts on 291 and 293. Replacing water main, we do have a new well that we will drill next year. Replacing a well that was drilled in the 50s and it's just reached the end of its useful life. Have 4 different water main projects scheduled for replacement.
If I could just jump in,
Yeah.
John. Andrew mentioned this in his introduction when he was showing his slides in terms of the water fund and the capital investment in the next 5 years. We're looking at over 20 million. Was it 26? About 26 million. And when we talk with, as Andrew indicated, we'll have to look at our rate structure, and we're looking at how best to reinvest those revenues into the system. But I wanted to remind council that the past rate increases are always reinvested into the system, and we have a very good history of capital investment. And I think if we looked back 5 or 6 years, we'd see that we put in over 20 million. I think over 21 million has been invested in constant capital improvements in the water system. So that trend continues. We anticipate that. We're proud of that, but we also want to make sure that we're best positioning the fund for long term.
Yeah, and kind of reiterating there what Ms. Reese said, some of our biggest concerns that we're seeing right now, our lime sludge removal contract almost doubled in price this year. We brought that contract to council summer, so that's an additional almost $220,000 that we've got to come up with out of our budget. Chemical pricing, I believe that was approved in October. That was up 17.5%. So again, just based off of if consumption's the same, that's an additional $124,000. And right now we have our water main materials and service line materials out for bid right now. Hopefully bring that to council next meeting or two. We're anticipating anywhere between a 7 to 12% increase on that, which luckily that one's smaller. That'll be in the $30,000 to $40,000 range. So split that difference, say $35,000. That's an additional $375,000 that we have in expenses, and we're doing nothing different than what we've done in past years. So a 2% rate increase. Roughly, again, depending on consumption, if you stay where we've been the last year, that's about $185,000 increase. So one would argue we're not even really treading water. That's less than we're recouping less than 50% of those costs just on those 3 items. That's so we've got to make up some of that. Potentially cut some capital maybe somewhere down the road.
What's driving the lime sludge increase?
Just their availability, one, to get down here in a timely fashion in the fall to get it hauled out. We pump it out to the sludge pit with water, with a lot of water. The way they haul it and remove it, they have to dewater it. So they essentially send an employee here in May, and is here 5 to 6 days a week just pumping water out. So their costs are up because of that. So, and I failed to mention, one of the items that we've got in the budget this year is to look for alternatives for our lime storage and removal processes. It's a 5-year contract we're in right now, so we've got a few years to get something figured out to help alleviate some of those increases. Plus there's any other...
I appreciate the treading water.
Yeah.
Our water replacement, we've got some network infrastructure replacement for next year and also a pavement breaker to replace. That's on page 295 and 297. And then the debt services.
Question on those items? Thanks, Mr. Burkhart.
I think that's it. Thank you.
Covers it.
Thank you.
Mr. Kotlinski's up next.
Yes, thank you, Mayor. I did want to point out that we have a couple of characters missing today. Obviously, Councilmember Cummings couldn't be here. Mercy Davison, Town Planner, and Doug Damery all had conflicts with a rescheduled date. So Assistant Director of Parks and Recreation, Mr. Kotlinski, has joined us, and we figured between him and the Budget Committee, hopefully we can respond to council's questions, and if not, we will certainly get back to you with appropriate responses, and make
Sure.
sure you have all the information you need.
Good afternoon. Budget pages, Parks and Recreation will start on page 160. First, kind of talk about a little bit of the highlights. We're happy that through health and safety protocols, we're able to open up the aquatic centers. So we're happy we were able to do that in 2021, along with Honda Trail, both things that we did not do in 2020. So we're happy that we're able to open those up again. So budget highlights in administration. Salaries will reflect the recreation supervisor. Colette Farner retired in December, so we're in the process of happy to get that position filled again. And also our contribution to SOAR and our contribution to the 4th of July fireworks. Again, another event that we did not do in 2020, that we did in 2021, and we'll do again. So those two items. In aquatics, the replacement of the variable frequency drive systems in Fairview, at the Fairview Aquatic Center, kind of a proactive project to replace those mechanisms that help the pumps run. And annually, we do a rebuild of a pump. We just have a program that every year a pump gets rebuilt, kind of another proactive response to our aquatics maintenance. Excuse me. No other items to really kind of address. In the other accounts, we get into golf maintenance, in golf operations, a new range ball dispenser. That unit has useful life. We jump over into park maintenance. Salaries in the way of part-time salaries will reflect the addition of a couple of part-time positions, a purchase of a walk-behind seeder. We have a big tractor seeder. This walk-behind seeder helps us get into the smaller areas. Also, we in the way of lost my track. In the way of miscellaneous park improvements. We have $20,000 for Carden Park playground installation, and also $20,000 for the shelter, purchase of shelter, installation of the shelter, and then various ADA improvements throughout our system. In year 4, we will have the County Link roof replacement. We've had some patchwork done, we had some leaks issues, so in year 4 we will get the total replacement of that roof. And then in recreation and adult sports, I'm sorry?
Before you move on, I did want to point out specifically in park maintenance, on the narrative, what you'll see is some of the challenge this year in recruiting part-time staff this past summer. You'll see 2 years ago, we had a full-time equivalent of 34 and a half for that division of Parks and Rec. They're a very busy group. They take care of a lot of parks and a lot of public spaces. In 21, 22, our current fiscal year, we had challenges recruiting part-time and seasonal staff. And so next year we show trying to get back on track with some of those seasonal positions.
Yes. Thank you, Ms. Reese. Yes, we did struggle, and you can probably, understand that was a struggle across the country, and very private and public. But we were able to really have a good recruitment of full-time, of seasonal positions in high school and college, but once they went back to school, we struggled the rest of the fall. So these 2 part-time positions will help, but we hopefully that we'll be able to recruit for this upcoming season. We still have our doubts, but we're hopefully that will improve. But the part-time position is something that is able us to, again, we're mowing grass, all kinds of activities are going throughout the entire season. So when we lose seasonals and they're just here for 3 months, it's tough for us to kind of take up that slack once we lose those folks. So.
Did you have to do any mowing yourself?
No, but a lot of our park supervisors jumped in there. Yeah, so close. But the thing about it, we were able to kind of keep up with most things just through planning and understanding what we have to do. Some of the things fell down that we needed to do in the way of some fine tuning in our mowing and some fine tuning in our park cleaning and things like that. So we're a little disappointed that some of those things we couldn't get to, and then of course our projects, our SLID projects that we were doing in house, we were struggling to get those completed, and we still have a couple items still to do at Maxwell to do this spring because we didn't quite finish. But anyway, so jumping over to adult sports and fitness, we again through COVID we haven't done the sports trips to St. Louis and Chicago. We will not do them again this year, but there is money in the budget for purchasing tickets for the 2023 season. Usually we'll do that in December to get tickets, and so we'll hopefully be able to get back to that in 2023. And then finally, in performing arts, I think this was mentioned in Beth's presentation, that we are moving some funds from Parks and Recreation over to Cultural Arts for the Connie Link operations that we won't be doing in parks anymore. So.
Reflected, and Andrew can maybe jump in, but I believe that's reflected in the contractual services and the rental line of
Correct. It's in
of the
contractual
performing
services.
arts.
Correct. That's where that's it. So, any questions?
Do we have a softball tournament this summer?
No.
Not the way we had hoped, because I believe USA softball or ASA or whoever the softball organization is, teams didn't sign up. So I think there was a very small, maybe a regional tournament instead, but it's all dependent on teams that sign up. And so you'll see in the tournament line, we're going to be taking a new approach, and Mr. Kotlinski probably has more information to share, but we're gonna see if we can start targeting more regional tournaments instead of national, because you're not getting the teams sign up for national tournaments.
Yes, that's correct. I mean, our national tournament actually last year turned into a regional tournament. That's how small the groups were bringing in. So again, I think as Ms. Reed said, I think we're better off with some of the local and regional tournaments instead of a national tournament.
So is that a function of COVID, or is it just a change in the sport?
Yeah, I think it's kind of probably a factor of both. I think it's a kind of a factor of both. So
I think it's also maybe a factor of some competition. There are other organizations than just USA Softball and ASA, and so I think teams are dispersed more into the associations they tend to affiliate with.
Okay. Yeah. Go ahead, Mr. Preston. Did you have a question, Kevin?
Thanks, Mayor. First, is NFC reflected in the budget in any of these subcategories under Parks and Rec?
No, I don't think so.
No, it's not. It's not in Parks and Rec, but it is something that we had planned in a capital line in terms of the investment in the equipment. But I think the question came up, if I recall correctly, from Ms. Lorenz when we talked about it a couple council meetings ago. We did not reflect revenue because we haven't done any sponsorship yet. So if we move forward, that's yet to be determined.
Yeah, I'm going to ask council to get close on the microphones because a couple of us are having a hard time hearing. Okay,
No problem. One more
a
question.
little closer.
Another, now I'm self-conscious. Another question, when I was speaking with communications this morning, they had talked about some savings with their graphic design position. They're wanting to add some of the savings could be reflected from responsibilities pulled out of Parks and Rec.
Yes.
Where would I find that reflected?
You know, I was here listening to that conversation this morning, and I did not find that. I know Doug Kathy had some conversation.
Yeah, it's, I've had an opportunity to take a look, and it would be reflected on page 161. I believe it's either I think it's in the contractual services line, although you wouldn't see where it's a reduction from current year. But that's the line where we show the graphic design services. So there's a $10,000 savings, but there's additional items in that line. So if I'm looking at the right thing, park administration. I gotta pull it up. 185. And I'll keep pulling up the notes from that screen. I saw them earlier, but I didn't write down the line. Okay, graphic design services, we budget, historically have budgeted $10,000 per year in Parks and Rec administration contractual. Those expenses are included in year one because of some outstanding contracts, I believe. Year two and beyond, $10,000 is cut per year.
Thanks.
And without Mr. Damery, I'm not exactly sure what the 10 grand is for year one. I don't know, but we'll find out.
Ms. Lorenz?
There we go. Okay, so I think this is in park administration. You've had a retirement, I think, of a supervisor.
Mm-hmm.
And part of her role, was it not to be responsible for Connie Link?
Mm-hmm. Yes.
Correct.
Okay, so that's moved over to another department. What's the model that you're looking to achieve by rehiring this person back?
Yes. Well, yes, Colette, that was part of her responsibility, but the other part of her responsibility was summer day camps, was summer theater, and I've not been into all the conversation that Doug has had with his recreation supervisors, but I know he was going to restructure some of their responsibilities to kind of match up to what this position will do when we refill it. So, again, it wasn't her full responsibilities. And I think more summer camp and her other programming that she did at CAC and some of the other programs that she did, I think it was a little bit much more than just the Connie Link.
Okay.
That is true. In the course of my conversation a few months back, the thought process with this particular position was the theater and the Connie Link program moving over to cultural arts because of that experience with performing arts, obviously through the cultural arts department. And then our original plan in the adopted budget, the original plan was that position is going to stay vacant. And it shows that way through all 5 years. Now that we've had an opportunity to look not only at the finances overall in terms of the organization, but also the Parks and Rec department is really working toward improving their cost recovery. And Mr. Damery can certainly talk about that in more detail in the future. And on top of the fact that we are growing and we see this as an opportunity to not only continue the programs that work like the summer day camp, which is incredibly popular, but also an opportunity to maybe start some new kind of programming to target our new residents. So that's what we're trying to do, keeping cost recovery in mind as we plan. So that's why that new position that's why the position has been reintroduced into the budget for next fiscal year.
Okay. The other question I have is in regards to the trend you're seeing in the softball tournaments, what support do we get from our Convention Visitor Bureau Sports Commission to help attract and coordinate those events?
That one, I'm going to defer to somebody else because I don't really know. I can't answer that
Okay.
question. So I'm going to hope maybe Mr. Kotlinski can.
Yeah, I mean, I don't know the answer to that one either, but I know that Champion stays fairly busy every weekend. I mean, even though we do not have plans for a national tournament, we do keep that facility fairly busy.
Yeah, it's a big softball town, that's
Yeah,
for sure.
so-
I just wonder if we could maybe tease that out a little bit, find out what, maybe I can help do that since I'm on their board. How about that? I'll note to self.
I was going to say, we got 2 board members.
There we
sitting
go.
right here, and they don't know either.
Great idea.
Ms. Wisman is not here either, but she might have more information as well. She's also on the board.
She's also on the
with-
board,
So between you 3 board members, we're going to find out. So thanks.
I can offer general comments on that. So I know that the Sports Commission and the CBB in general is focused on attracting those. I know they're on a 2-year cycle, those larger tournaments, particularly the age group ones, and the younger ones are ones that they particularly focus on because they tend to bring more people, parents, and it's a direct relationship to the economic spend and the economic impact here. Not that they don't go after the older tournaments, they do certainly, but again, they're on 2-year cycles, so if you don't get a tournament, you're not likely going to see that tournament for 3 to 4 years because of the 2-year lag, plus the bid process to get the next one. So when we miss one, we miss it for a few years, but they're very, very focused on those. But the details of how and how often and all that, we can certainly get the CBB to fill us in on.
Further questions? Thank you, Mr. Kotlinski. For the update. We're going to take a 10-minute break. Thank you.
I'm charged up. If anybody needs a charger.
I thought I was going to, but I'm good.
Oh.
Because they share.
Oops.
No, that's fine. I said, you can come here with me. Okay. Okay. I appreciate it.
So are we on schedule again?
We're ahead of schedule. It's gonna be like
I'm shocked. I have a suspicion. Based on something you said.
Full speed ahead.
I agree.
Sorry, I'm revising my over under from 10 feet on.
Yeah, you gotta have some special messages. Go through what it is. I respect his conservative position.
You got an access made sit there. You gotta get it over there.
Hard to say. I sent that to me, I would have said, you're right.
I was so tempted.
That's enough.
I'm worried about it. People with dementia go through. My brother went over to help him, and he was getting, went over to help him with something.
Who? Oh, yeah. Of course not. I just responded, fuck you. Did you really? No. No, I'm waiting for the next time he shows up here.
Well, again,
Then I'll have a couple of choice words for him.
Yeah.
Yeah.
You saw the response I had.
Yeah, got the email.
Can we kick it off the board?
You'd love that.
You guys ready?
So I just want to know, why am I so tightly bound here?
Because you need to be paid.
I'm just like, I have to go like this against the barrier to get in front of the microphone.
You're being punished.
Apparently.
You know, I moved mine over and Stan didn't even notice because I didn't
I was
put
gonna
it
say,
in here,
don't
so I
touch
kept
that.
it 2 days. I needed to get to the cord.
Right?
There we go. Don't touch that. There. Now I can actually sit in front of the microphone. We'll see if he notices. I mean, he's got a 2-monitor expansive. I feel like a hamster over here.
We can make it smaller. Mr. Otto, go right ahead.
Thank you, Mayor Coos. It's my privilege to be here today. I want to take the opportunity to thank City Manager Reese, Mr. Hanson, Mr. Hune, and the whole finance team for their work on this budget. It's definitely a collaborative effort, and I appreciate their leadership throughout it. We'll start on the Public Work Administration budget. This budget includes myself as the director. We have a new position this year. Jason Comfort was promoted to the operations manager to reflect the reorganization of the department to combine both the public works and engineering departments. Some of the budget highlights out of this are building maintenance, property maintenance, postage, equipment come out of this line item, as well as our contract with Cardinal Infrastructure to reflect our efforts in Washington, D.C. That's also out of this line item. Are there any questions on
this
administration?
If I could just jump in real quickly, it's a little bit peculiar when you look at the narrative and you look at the staffing, it shows 4.75. And that's simply because Public Works includes one of our enterprise funds. So for positions like assistant supervisor, a portion of that is paid for by the sewer fund. Because the assistant supervisor positions kind of rove and cover all divisions, so.
Okay. So go right ahead.
Okay, the next on the agenda is the engineering. Engineering staff delivers many of the capital projects that we looked at back in December for the town. This budget reflects pretty much a status quo budget for full-time staff. Some of the part-time salaries that are reflected in there include intern work. Our interns work on various projects throughout the year. They get experience observing and inspecting subdivisions throughout the town. And one of the main projects last couple of years has been our sidewalk rating and evaluation project. That work is, the load has been carried by our excellent interns to do our GIS rating, and that helps us project our costs as well as meeting our goals through the ADA transition plan.
Questions?
The only thing I'll note on this one, again, to jump in the budget is a conservative budget. It assumes we're fully staffed the whole 12 months of the year, and we're not. So just wanted to point that out. We anticipate having a town engineer. The position is vacant. Would nice to be having that filled, but it's not. But we budget it as if it is.
Thank you for pointing that out, Ms. Reese.
Go right ahead.
Okay, page 196 is the Public Works Fleet Maintenance budget. The town maintains approximately 310 pieces of equipment with our fleet maintenance staff. They manage the fuel, the equipment that distributes the fuel down on Warner Street. Our fuel usage, interesting, last year was up about 3% from 2020, which to be expected after 2020. Little things weren't happening as fast because of the pandemic. Our fuel cost is up, as you can see every time you fill up your car at the pump, around 32% in 2020 for the town. So we're seeing those costs. That's not reflected in this line item. The fuel cost for each department and fund come from that particular department. So the fuel cost you see in this line item is literally the fuel used by the fleet maintenance staff vehicles. No major changes in terms of what we pay for out of this fund. It does reflect a new air conditioning service machine that we use to service and charge our air conditioning systems for vehicles townwide. So that was one of the highlights of that budget.
Is there a reason we dropped one mechanic?
I believe that was back in.
Yeah.
Sorry.
Oh, that was
right. A couple
yeah.
years ago, we eliminated that when we were looking at some budget tightening, and but we wanted to be very cautious because we knew that there was going to be retirements and succession planning. So when a position became vacant, we left it vacant for a little while, and then we filled it recently. But one position we cut back when we were doing our, I believe our budget cuts in 2020, early 2020, 21 fiscal year.
Go ahead.
Okay. Next is the streets budget for Public Works on page 198. Some of the major changes you'll see is the addition of employees in the streets department. These employees will be used to provide increased pavement maintenance, increased bridge preservation, increased pothole patching. We're planning to purchase a crack filler to help maintain our streets, so they'll utilize that. And so we hope to see an increase in service level with those employees in the streets department. Some of the budget highlights, snow removal supplies. Last year, you'll recall, we did not purchase salt because we found ourselves with a surplus at the end of the fiscal year, and so that was a nice savings, but we will need to purchase salt this year. So that is reflected in the snow removal supplies line item. Other supplies show an increase in material cost for things like concrete. If we're able to do more with more staffing, we'll be able to increase our use of, obviously we'll need more asphalt, we'll need more concrete, we'll need more crack filler to do things and help maintain our pavements. Some of the other things we're hoping to purchase, I mentioned the crack filler, but also what we call a hot box for pothole patching that allows staff and our streets crews to keep our cold patch or hot patch hot as they go around and fill potholes. Makes it more efficient, makes it work into the street better. It just makes for a better product when they're done all together. So that's kind of an industry standard piece of equipment that we're going to acquire this fiscal year. Any questions on streets?
No, go ahead.
Thank you. Next line item is on page 200. It's our Public Works waste removal line item. I'll take the opportunity to kind of give some statistics for the year, just because it's interesting to see where we're at in terms of our community-wide recycling program. Recycling was up 1.2% in 2020, and solid waste, the amount of waste we take to the landfill, was down 2.6%. So overall, that is a good trend. We like that trend for both our budget as well as environmental impacts.
Some people's basements are filling up, huh?
That could be. I'd like to think that they're just recycling more, but I'm not sure. So we like the trend. The cost of recycling is actually favorable to the budget as well. Right now, we're budgeted for $65 per ton. The December 2021 cost is $16.32 a ton.
Wow.
And so we're actually seeing some money back from our recycling program. So that's another positive trend right now. The market is good for recycled materials right now, but that does not always reflect. We always try to budget for the worst case scenario to be proactive in that. But so we'll always keep an eye on that and make sure to keep you guys updated. Electronics recycling, 334 tons of electronics recycling happened in 2021. So that was up 3.3%. Bulk waste was also up. That's furniture, chairs, mattresses, things that people throw out or crews gather from throughout the town. That was up 5.4%. Brush pickup was up the most. That was up 54% in 2020, mainly due to the January 1st ice storm. Mm-hmm. If you remember back a year ago, that was a really a devastating ice storm and took crews a long time, even up into the summer, to catch up with that. And we're still really kind of playing catch up with our yard, chipping brush and cleaning up. So that's why we see such a large increase in brush. We'll go into the line items. Contractual services, this is where we pay for the bulk of our costs: landfill, bulk recycling, Midwest Fiber, electronics, and drop box. So that's the big item. Special waste disposal, the hazardous waste. The Ecology Action Center was able to get a grant for this amount for $25,000. So last year we did not actually spend that. So they'll be returning that to us at some point soon. This is also where we pay for ISU landscape waste, and that's where we take all of our herbaceous gatherings from our landscape waste program. As far as equipment, the major purchase out of that, over 10,000, is additional garbage carts. A lot of that money is returned to us through when folks purchase their new lids, or we're able to repair with parts, or they just order through our website and just get a new card or an additional card. So that's where we purchase those from. Are there any questions on the waste fund?
Ms. Smith?
Not necessarily a budget item, but on the waste removal, where is the best source of information for consumers that are wanting to find out about the leaf timetable, the brush pickup, and the solid waste pickup? Where's the best source of those schedules?
I believe the best schedule is on the town website. Everything from what's considered landscape waste to bulk waste to the schedule. Also, schedules on leaf collection and what the status of leaf collection is.
Mr. Preston?
Thanks, Mayor. You had mentioned the price for taking our recycling compared to trash to the landfill. And if I'm not mistaken, it wasn't all that long ago that it actually, for a period, cost us more for recycling than it did to take the trash to landfill. How dynamic is that, the pricing in that market, I guess, with recyclables, that how much of variation are we seeing, and how much does it impact since it's lumped in with the other for our contractual service?
I would say it's fairly dynamic. What you mentioned is true. That was probably maybe a year and a half ago that we saw that. And so just in the 18 months, would you say that's correct, Jason? Yep. Last 18 months, we've seen that reversal, essentially, where we're now there's now a market for those recyclables that allow those costs to come down a significant amount. But within the budget horizon, it's conceivable that those costs would go back up. We just don't know. So that's why we're budgeting for the additional, and if we recoup those savings, we'll see those in the next budget cycle.
I just know from the years of doing this that those numbers just go up and down. It's like commodity pricing. It just depends on the demand in the market and that, and it fluctuates quite a lot. Further? Motor fuel.
Okay, thank you, Mayor. The next two line items I'd like to just briefly mention together: the motor fuel tax fund on page 205, as well as the roadway fund that's on page 263. These funds are funded, the roadway is funded with local funds. The motor fuel tax fund is funded through the money received from the state. A lot of these projects we touched in detail back in December, so I won't spend a lot of time, but I did want to take the opportunity to highlight a couple different things in this budget. Street resurfacing and patching budget for the FY19 is approximately, FY 22-23 is approximately $2 million. Also included in the roadway fund is our annual sidewalk and ADA replacement program, where we repair and replace existing sidewalks and non-compliant ramps all over town. We also plan to implement a bridge preservation program this year. That would be everything from bridge deck washing to remove salt material, dirt, things that would corrode our bridges and our fences and railings on either side, as well as deck sealing, fencing repairs, just various line items that need to be addressed throughout our bridge system. Another thing included in the roadway fund would be the Camelback Bridge repair. The Camelback Bridge is in need of painting. A lot of the structural components that are steel are seeing some significant deterioration from just age and rust, so we plan to repair those and paint those to preserve that, as well as replank the deck. We'll be replanking that. It does not include, we're still working on the restoration of the historic trusses, so this project doesn't include that, but that will be upcoming. We're still looking at options for how to get those back up and refabricate those. So we still have them in the yard. They're still there. We'll be able to map them out and recreate those, we hope, in the future. Preliminary engineering is included in the motor fuel tax fund, as well as construction for West College Avenue. That's our big project that we'll have, hoping to bid that in January or February of 2023 for 2023 construction season. That's from White Oak Road all the way out to Rivian. That's our complete reconstruction, and with the addition of a bike trail and multi-modal improvements to that road, which is much needed. The other project I would highlight is the Franklin Avenue Bridge. This project, we were awarded a grant from IDOT in the amount of about $1.6 million. That covers about 80%, we hope, of the cost. So we'll begin design of that this year. There's some significant regulatory hurdles we have to jump through with that bridge in terms of getting sign-offs from the Illinois Historic Preservation Administration, IDNR, things like that. So we're anticipating that regulatory approval process to be about 2 years with potential for a 2024 or 2025 construction. So that's why we want to get going on that, to make sure we stay on schedule with that. Any questions?
Questions? Ms. Smith?
On page 207, you've got the Towanda Avenue at Sugar Creek as an estimate of 1.1 million for 21-22, but you're only showing actual of 83,000 and none for the later years. I think that work is all done. So will that actual number increase?
I don't believe so. I think that is the amount we're projecting right now. The work is substantially complete. We're still working on some of the punch list items on that, trying to finalize it out with the contractor as well as IDOT. Because it's an IDOT motor fuel tax project, there is a substantial amount of paperwork in terms of material, everything from steel nuts and bolts to concrete reports that have to be finalized and approved by IDOT. And that process from completion to construction typically takes 12 to 18 months.
Okay.
So we'll be watching that, but we think we have a good handle on exactly where we're going to be with that. We've pretty much expended all of the money in terms of building and quantifying the cost. So we believe that's about where we'll be.
Okay.
Mr. Preston?
Really, just to follow up on that, just for clarification. So then, why was it estimated? Actually, nope. Never mind. I think I answered my own question.
Let's get down in the sewer.
Okay. I'll invite Mr. Comfort to lead us through that discussion.
Let's dive right in here. Page 303.
Wait a minute. I thought we decided earlier that engineers don't have senses of humor. So.
Yeah.
Sorry, Ms. Lorenz, I didn't mean
My son would say I'm an imaginary engineer, so I get it all the time.
All right, so this starts on page 303 for the sewer admin account. Really, overall, very status quo this year. Contractual services, this is where we kind of handle our lift station monitoring, pump maintenance contracts, and bioxide, which is our odor control. This is just the contract portion of that. Account 2610, which is equipment maintenance, that's where we pay for the actual material, the liquid itself. So we budget that this year at $122,000. It increases 3% every year from there. Otherwise, like I said, in terms of admin, it's very status quo. So if you have any questions before I move into capital.
Question? Next item.
All right. Capital, sewer capital on page 307. Overall, quite a bit going on this year. Starting with the 6635, the I&I account. We did install, we put some money in to install flow monitoring and rain gauges in the Maplewood and Hovey Avenue areas. Began starting to gather data there. In year two, this is the Ironwood I&I study that we've been kind of keeping track of here over the last few years. That's coming up in year two. This year, though, we did install flow monitors and rain gauge up there as well. And it's been quite a wealth of information we've gathered just over the course of the past year. So that's paying off. Moving on to probably one of my favorite accounts, 6645, sewer linings. This year, once again, we're maxing out as much as we can with about 15,000 feet of sewer lining. That's 27% more than we did last year. I think looking at the budget in the future years, we'll be comfortable about 15 to 17,000 feet every year, which is awesome.
Wow, that's pretty amazing.
Yeah, so, another project we haven't seen for the past couple of years, but we're getting back into design this year is manhole rehab. We'll be doing the design this fiscal year, starting construction on that in year 2, and then this will become an annual project from here on out. We're identifying these manholes based on the assessments projects that we've been doing over the past couple of years, so that's where we gather this data from. And then another big capital item is pump station repairs. This year we have, we're going to rehab the Ironwood lift station completely. So design for that is at $100,000 with $500,000 construction cost for that. After Ironwood, we will move to Airport Road, do the same process there. They're all nearing the same age, so it's time. That's what I have for sewer capital. Any questions?
Okay. Replacement fund?
I've got a question on that.
Oh, I'm sorry.
Yep. For the sewer linings, explain to me why we were actually negative almost 120,000 in our actual 2021. We got a rebate of almost 120,000 in the budget for the sewer linings.
I'd have to check. I know we were, that bid came in over budget what we had last year.
I'm getting some, I'm hearing it in my ear in terms of the end of year accounting entries. So do you want to come forward so they can hear in the microphone? Finance is going to jump in and explain that.
I'm excited about it.
How do you turn it on?
Go ahead.
For enterprise funds, at the end of the year, what we can count as expense, we do an entry where we change it from expense to move it to a capital item, and then we also have to do retainage. So for a retainage is where we say, well, the contract was this far, we haven't paid him yet, but we're going to owe it. So we have to do it. So it's accounting entries at the end of the year. So for enterprise funds, for some of the, like for this particular item, it's a negative. It's just because of end of year for how then it will show up on our balance sheet in our audited financial statements. Did I confuse you all?
Aren't you glad you asked that question?
I don't have any follow-ups.
Thank you.
Thanks.
Further, let's move on to sewer replacement fund.
All right. Sewer replacement, this is on page 311. This year, to coincide with the Ironwood lift station full rehab, we are also proposing to replace all 4 pumps. They're just as old as the station is and needing constant repair. So good opportunity to replace them while we have everything open. We budget that at about $290,000 for all 4. Another thing we're looking to get this year for our sewer Vector trucks is a pathogen defense system, budgeting $30,000 for that. That will essentially clean the hose as it's coming out of the sewer, better protects our guys that are handling it. Generator replacements, we're looking to replace an assortment of our generators every year, starting with Ironwood. Those will get put on a 20-year replacement cycle then, starting now, once we replace them. 7020, the trucks, big item here is we moved the new sewer televising truck up a year to this upcoming fiscal year. Our current one needs routine repair pretty regularly. It was actually down for the first couple of months this season. So definitely a good opportunity to get that replaced. That's budgeted at $245,000. That's it for sewer replacements. Any questions?
No, let's move on.
Okay. I think next is the debt, the sewer debt. Not a whole lot to report on that from my end. But then we'll move into stormwater management. This is on page 319. Not a whole lot to report out of the admin side of it. Very status quo. We have some money in there for operation parts, castings, concrete, things like that. That's really all we spend out of it from the admin side. Going into capital, Public Works salt storage shed, we did complete the new fabric structure this year. So we have some money in there for the demo of the old existing dome. It's in pretty poor condition. We'll be looking to do that within the next couple of weeks. We are currently budgeting $175,000 in year 2. We are planning to keep the existing concrete walls of the existing dome in place. This is to try to look for some sort of solution to still be able to utilize that. Maybe another fabric structure that can get retrofitted to the walls or over top. If we can't find something that works, the funding will be reallocated to another stormwater project or additional salt equipment or facilities. Drainage improvements, we've added a new project in here for a flood study at Martin Luther King Jr. Park and Adam Drive. This is per comments from residents that live over there about flooding during very heavy rain events. So we're going to have a contractor on board to study that and provide some solutions. It's $60,000 for that. Regional detention projects. This upcoming year, we're going to do the reconstruction of the Eagles Landing detention basin. It's a pretty heavily eroded shore bank, banks and everything. So we're going to get that all redone, similar to how we did Park West a few years ago. So that's budgeted design at 40 and construction at 315,000. Drainage ditch improvements. The big project we added here was the Hidden Creek erosion repair at Hidden Creek Nature Sanctuary. Parks Department showed us some pretty significant erosion happening at the north end of the park there. So we're going to get that repaired, either a gabion basket wall like we've done previously or some other treatments. But that's budgeted at $350,000 for that.
Mr. Preston?
Thanks. It appears in most years, but certainly in the proposed 22-23, our expenditures far exceed the revenues for the Stormwater Management Fund. Where does the additional revenue come from, and is there a thought process with? Is that of concern? Is that pattern of concern?
I'll jump in and start, and then Mr. Otto and Mr. Comfort and even Mr. Hune can supplement. I think the fund balance that's identified on page 46 reflects that we're starting with about a 2.6, almost a $2.7 million fund balance. And so, yes, we want to continue to be mindful of how that fund balance can account for and handle our planned investments down the road, and be mindful of that. We don't project any increase in our stormwater fee. It's been consistent since the day council adopted it, but we're starting with a very strong fund balance, so we continue to use a little bit of that fund balance in addition to the revenues that are coming in. Anything else that you guys want?
Mr. McCarthy?
Thanks, Mayor. Thanks for all of this. Overhead sewer program. I know that's been a topic as of late because of some of our stormwater challenges and some new metering to try to understand our flowage a little bit better. Just looking for kind of a general comment about, it's a round number. Are we anticipating high utilization or are we educated guessing, or what do you anticipate for that program to A, help, and B, to get utilized?
We had hoped to see some more activity in that after the June flooding that we've experienced. We haven't had a lot of takers in terms of folks that are wanting to do that. We have had a couple, I believe. I don't want to give an exact number because I don't know it, but there's been some conversations and a couple, I believe, that have pulled the trigger and actually installed the system to protect their home. But going forward, we left the money in there knowing that we're going to be looking at especially the Maplewood area, and that may be a solution out there, and maybe something that we can look at for a lot of the homes, especially in the lower areas that experience the most flooding. So we kept that funding there, just especially in year 1 and 2, to make sure that we had that at least allocated. But even the ARPA funds include monies to do other things, like potentially address any I&I issues, things that may assist with that issue. And also, Mr. Comfort mentioned we've installed a rain gauge and a flow monitor down there to try to get a handle on where the water is coming from, how much water, when, just looking at all the significant things that could impact those areas.
Which leads to my follow-up. I'm assuming when we get more insight on what's going on down there, if there's something to be done from a larger strategic investment in that area, you'll come back to us with that information and let us know if
Yes,
there's
sir.
something beyond this type of a solution.
Yes, yeah, we would hope to come back to you with recommendations from the data we collect as well as the study, looking at that area holistically and trying to solve some of the problems. But most of those would involve a larger contract that would definitely come back to you.
I was assuming that, but you guys will inform us. You're the professionals. You'll let us know what that looks like and what that potentially means in terms of large capital investments, I'm assuming.
Yes, yes.
Awesome. Thank you.
Ms. Smith?
In follow-up with his discussion of the Maplewood area, are some of those issues that neighborhood experiences occurring because they are at the juncture of Bloomington and Normal lines of service?
That's certainly a concern in terms of stormwater getting into the sanitary sewer system. The Bloomington Normal Water Reclamation District line that flows close by that neighborhood on the south side of Sugar Creek in that area is a combined sewer. In other words, it accepts water from storm sewers as well as combined sewers in Bloomington. So that's a concern and definitely one of the things that we'll be investigating as part of the project.
So it'd probably take a collaborative effort to come up with a solution that might be long-term and not require revisiting it.
It may or may not. We just don't know at this point. We need to study it and look at where the water is coming from. Is it our system? Is it elsewhere, coming from Bloomington or other sources within the sanitary district's sewer system as well?
And do you have a sense of what is driving the need for increased attention to the stormwater issues? Are there more surfaces that are pushing water into the stormwater system instead of absorbing it into the soil? What might be behind that? And can we expect it to continue in that trajectory?
I think that there's probably a lot of different things you could address with that question. I guess I would start, there's been a lot of significant rainfall events that we've not seen typically. Some extreme weather events are driving it. The age of various components of the community sewer system. We talk about I&I, inflow and infiltration. Age of the sewer is directly attributable to the amount of I&I that comes into a system, the amount of leakage, whether that's groundwater or there are a lot of neighborhoods with older homes that have sump pumps that connect to the sanitary sewer. That causes issues as well. So I think there's a lot of factors you could point to. I don't know that any one thing is, there's no magic bullet and say, oh, if we just fix this one thing, we'll solve our sanitary sewer problem as well as our problem along Sugar Creek in terms of erosion and things that we're seeing. But there's just a lot of need out there. We see that in our sump pump drainage discharge line installation program. We always have a list of projects to do with that, whether we're addressing icing on the sidewalk or algae growth on a sidewalk that people slip on in the summer, or icing in the road that's damaging our pavements. If the pavement always sits wet, the sub base always sits wet, and that when a truck drives along, it damages the, especially asphalt is susceptible to permanent water damage and moisture. So there's a lot of things going on.
Could you just explain a little bit more about the sump pump program? Because in my neighborhood, sump pumps were the latest craze after one of the recent 21 storm events. And so I have seen hoses going across the pavement that are, as you say, either creating algae situations in the summer or ice situations in the winter. And what is the homeowner's responsibilities and what is the town doing?
So the homeowner can discharge a sump pump system with 15 feet from the right-of-way. So as long as they discharge 15 feet or more from the right-of-way, they're technically in compliance with town code. The issue with that is, even if you're 15 feet back, if depending on the grade, it's going to run down the hill and run on the sidewalk, which runs to the street. And in the wintertime, it freezes. So what we do is we go in, try to pick off areas that have the most concern first in terms of damage to city infrastructure or safety hazards. We pick those areas off. We keep a list. People call in. Sometimes town staff observes, whether as part of a design project as we're developing our resurfacing program, or just out and about driving around looking at sewer issues, for instance. We got one recently from our sewer superintendent, so we put it on the list, and we'll do a design, and we install either usually a 6 to 8 inch line where folks in the neighborhood can all hook their sump pumps to that, and then that hooks directly to the storm sewer. So instead of discharging on the surface, causing icing concerns or algae or road damage, it goes into the storm sewer and solves that problem. Welcome.
Further questions? Thank you, gentlemen.
Welcome. Thank you.
That concludes our overview. Time for general council discussions. Ms. Reese?
Yeah, I would just like to kind of summarize just a few things before council shares their thoughts just in general discussion. We've spent a lot of time going over a 300-plus page document, and obviously haven't hit every single page. But we started out with Mr. Hune's very detailed review of fund balance, our projections, kind of our assumptions and our thought process, where we started coming out of COVID and the COVID uncertainty, I should say, and where we're at today. And then moved into focusing on expenses, what each department and division is looking at and projecting for the next 5 years in terms of expenses. What we haven't done on some of these funds, and Mr. Preston, you just asked the perfect segue question about the Stormwater Fund as a perfect example. If you look at some of these expense pages alone, it's not clear where we're starting from, where our starting point is. So I appreciated your question. Gets us an opportunity to point out that general fund, stormwater fund, motor fuel tax fund, all the various funds that we have, sort of like all the various checking accounts we have, to see the whole picture, you want to look at the fund balance. And that starts on page 42 of the budget. And from there, you can see really how we're looking and projecting to be in the next 5 years. A couple of things I just wanted to point out. We didn't spend any time to go over some of the supplemental pages, but on page 359 of the budget, we have the section called Goals and Measures. I think it's a kind of an interesting section where departments are able to put in some key performance factors that link directly to the comprehensive plan. So I think that's kind of a neat feature. And then I think just in summary, just a couple of comments. I've said it earlier in the day, and I just, in council, I know you're aware of this because you've sat through a number of budget work sessions with staff. Every member of the leadership team here, every department representative takes their job very, very seriously. And we want to present to you a reasonable budget that's very thoughtful, and we take a lot of pride in this document that we're presenting to you today. A lot of time and effort has gone into it, which is great, but our underlying assumptions and the things that drive us in coming up with this document really don't change from year to year to year. So the financial strategies are very important. Keeping our fund balance and hitting our targets are very, very important. And like I said earlier, if we see that there's a year on the horizon, given our current trends, where maybe we're not going to meet those fund balance targets, then we take action. We don't wait. If we see something of concern in year 3 or 4, as we're doing our projections, we're not going to wait until year 3 or 4 and just keep our fingers crossed that they solve themselves. We're going to take action in the proposed budget today to make sure that years 3, 4, and 5 are showing the picture that we think is appropriate for the organization to move forward comfortably and strategically. So that said, I think it's important again to note before heading into your just overall discussions, and I'll take notes as we go so that we can make sure we get back to you with any information you still seek. But this budget, proposed budget, is again the same thing that you've heard us say many, many times before. This, we want to be conservative with our revenue projections. We want to underestimate revenue, and we want to be conservative with our expenditures so that we're not surprised. So when we are talking about our fund balance projections and our plan moving forward, we're going to assume that our positions are filled. We're going to assume we're fully staffed all the time. That's not realistic. And as I indicated, today's a perfect example where our adopted budget to our actual budget right now, we're $3.3 million different in our salaries and benefits line because we have some vacancies. But we don't reflect that in budget. We want to plan because we don't want to surprise you, and we don't want to be surprised. So the worst thing that could happen is we come to you and say, gosh, oops, we missed it. So we want to be very thoughtful in that regard. So I do want to take just a moment to especially thank Mr. Hune and his team, Karen, Deanna. We'll give a little thanks to Eric Hansen, just a little bit, for his role in the budget committee. But the whole finance team works so closely with every department, and so this document I think is kind of neat in terms of the visual appearance this year. We're trying to make it, as I mentioned earlier in the day, more user friendly, make improvements, and that's what we try to do year after year, is make it a usable document. So with that being said, thanks to the group and thanks to you all for your time today, and then we'll be happy to just take notes and respond to your questions.
Council comments or concerns? Sure, jump right in. I guess you want to go first.
We're all looking at you.
Yep.
Overall, I think the presentations were great. I do like the format of the budget is very similar in many ways. There's been some new additions I saw on some other tabs, infographics and whatnot, that I thought were a nice addition. So thank you for that. I do have some concerns with some elements of the budget. And so I'm always conflicted as to, how to manage through that, because if I don't agree with one element of this 300-page document, how do you work through that? And so I just have some kind of line item concerns. I think what I see as overall problems, kind of pulling back the lens, not on a line item basis, but I see some problems too, really. Health and dental has got to get fixed. And there is a water department issue in the sense of, I jotted down if there's $375,000 worth of increased expenses, but yet even a 2% increase only brings us $185,000, that's not structurally sound. So again, I go to, there's always the rate study to do, but then I go to, okay, how can we build, can we improve on this mousetrap? How can you build a better mousetrap? What efficiencies can we gain somewhere? And so that would be my thoughts on that, because I've never been keen on the rate increases. And yet the reality is $375,000 is more than even a rate increase, So that's going to have to get tackled somehow. So those are my two kind of takeaways, besides some line item issues that I'll have to figure out how to work through.
Ms. Smith?
Just to drive home some of the points Ms. Reese was making in terms of being conservative, when I was asking Mr. Yoon about whether he factored in some of the anticipated growth in our community, because the building permit numbers are there. I mean, it was substantial, and it wasn't all just Rivian. It's been some new housing developments. And if I'm correct, in your future forecast, you haven't factored in the implication of new residents that are paying additional fees for the services that those housing units would require, and you minimize the impact on property taxes because that's not a substantial part of our revenue. Is that accurate?
You want to come up to the counter, to the microphone? We do in our revenue streams for water, sewer, things like that, we do build in every year a little bit of a growth factor, assuming some additional users, a slight number.
That's correct. We try to look at usage and predict that on basis and number of people coming here and so forth. So we've often been up and down about that, but we do put in a rate increase that either formally or when we have placeholder, and we have some element in the revenue projections for general growth.
Is that forecast number consistent with the level of new housing units that we've got on, or were you basing that on historical trends?
Historical, I kind of want to see how that falls out going forward. I don't want to get too aggressive with the number of folks moving here, although we will start seeing that, obviously. But we tend to be more conservative on that growth.
And in response to the concerns about healthcare costs, I'm assuming that most of the people who are retiring are older individuals, and are there replacements coming from a younger demographic that are less likely to have the health issues that someone with gray hair may have?
That probably is true. We want to be a little cautious in that regard. We do have, of course, retirees that continue on in our health fund. And I can tell you that that is part of the issue that we're trying to address in terms of the claims associated with a certain demographic.
But if I read the packet, you have discontinued providing retiree benefits from a date going forward. So this is, we have a specific cost, but that demographic is not increasing.
That's true. The pool of people in that group is not increasing. You are accurate. We did eliminate retiree health insurance benefit, where the town would contribute towards a retiree health insurance premium. We eliminated that, I believe, way back in 2007. So it's just a while before we can count on every employee in the plan becoming Medicare eligible, kind of a thing. So, and the people hired after 2007 don't have access to that benefit.
Okay, thank you.
We do actually do quite a significant analysis on that side of the liability of that as part of our review of the balance sheet, is to see an estimate of demographic coming in, demographic falling off, but them going to Medicare and so forth. So we're trying to gauge what that liability is going to be and what the cost will be. So that's an area we do spend a lot of time looking at.
And the HR person who came forward to discuss the benefit costs was indicating that some changes have been made and we've not yet had enough time to see the fruits of those changes to understand whether or not it will have a positive impact on our costs going forward, correct?
That's correct. Those are all made as of September 1st of this year, so we only have a few months of that activity to see compared to the previous year.
And looking at it now, it still seems that the self-insurance is a more cost-effective way, and that is a decision that is under ongoing review and evaluation.
Correct.
Thank you.
Further discussion here? I will just, no, go ahead, Mr. McCarthy.
Thanks, Mayor. Just a few general comments. One is a thank you again to Mr. Yoon and his team and all of our department folks who've spent considerable amount of time on this budget. I know this year looks dramatically different, and again, I want to acknowledge everybody's work on putting us in position to be those two words, loosening and flexible. To reiterate that, I don't think I've ever heard that in our budgeting process in recent times, so I appreciate that. I think as we all have time to look through this in greater detail, I know we'll be chatting hopefully with each other and with the mayor and Ms. Reese on concerns we have on light items or specific things. I do hope as we continue to grow that we continue to focus on strategic investments. I'm happy that this budget focuses on that in terms of staffing growth and planning for that. I was guardedly optimistic when I got the book to see what that looked like. But I do want to acknowledge that we're still not at previous levels, although our service demand is much higher than it used to be, and we're still not at previous staffing levels. That isn't lost on us, I think, up here as well. And I want to make sure that that gets acknowledged as a harsh reality, and that we continue to ask you guys to do more with limited resources, and just know that we're mindful of that up here as well. Thanks, Mayor.
Thank you. I would just finish up with saying, this has been such a dynamic process this year, and it tends to be every year. I'm so impressed with staff's ability to be nimble and to be aware and at the same time very cautious and thoughtful of going forward with this budgeting process. We're seeing some increased revenues coming to the town, and we're taking that opportunity to reinvest those in the community when we can, because we've gone through a lot of previous years where we didn't have that opportunity and we were struggling. So now we have an opportunity to really do something for the citizens of our community going forward in the next couple of years. And it probably always won't be like this. There may be another crisis down the road that sets us back. So the time for me to act is now. Let's get this done. And again, thank you to staff for all the hard work, your experience, your dedication, your thoughtfulness. It really shows that you care about this community and the people that live in it. And so thank you for that. And we are adjourned.